Good morning, March 22nd. We had GME earnings yesterday. We're going to be streaming stocks, options, futures, technical analysis, watching the charts today. Sub up, like up, comment down. Happy money sticks around. Get set up here a bit. Good morning, Chad. Good morning, John. Get a Discord link in here real quick. I just shared the stream on Twitter. Thank you guys that help support in doing the same. Good morning, Daisy. Good morning, Mr. Radio. Yeah, I'll show BBBY. Indeed. GME holding out at the highs, 51%. Same with BBBY. Yep, 8.5%. AMC hold on to its gains. Yep, sure enough. I'm interesting. Be driving it open. Isn't that the same as every morning? Good morning, Ace. Morning, Jason. Morning, Shelly. Rumors Radio, yeah, we'll be cycling back through lots of different tickers, but there's enough people here keeping an eye on GME and BBY that anything crazy happens if we're not watching it. We be sure and flip to it quickly. I think GME's probably, yeah, GME's number 2 on the pre-market movers, up 52%. Virgin Orbit is number 1. Is that that Branson? Huh. Powell will be at, or the decision will be at 2. We'll be talking at 2:30. So should be some volatility today. Carvana ripping. Morning, Kuro. Hey, Holding, where do you hear for exiting early? Yeah, there you go, Carvana. Holy smokes, 25%. Well, what's going on with that? We got about 6 minutes to open. They had earnings also, huh? Very interesting. This is one of the ones I had cash group puts on, I think, on the paper trade account. See how that thing goes. Birds is up 5% pre-market. Rubo 3. Home pool collected. Hey David, morning. Morning on. Morning Burn Stormer. Swipe from yesterday. How high can GME go? Well, that's the thing with the upside, it's unlimited. I'm going to close GME positions. No idea, maybe he's already closed them. Maybe that's what that meeting with him and Cohen was about. Cohen convinced him or showed him, I don't know. He probably couldn't have showed him their numbers, but yeah. A lot of people have things trying to turn. Yeah, yep. And we're opening basically at the resistance. So, yeah, this is kind of the top of this range, just 27, 28 range. This was kind of my next point of resistance. First was at 1940, and then I was saying that 24, and then that kind of 27 top of the range. So, breaking through here, I think 30 is definitely on the table, and 35 even. And we'll see if GME gets squeezy. And 15 million it's saying for yesterday now. Oh my goodness. That was 8.9 yesterday. World. How is that possible? What is it? 2.9. Yeah, what is this? Why does the daily show 15 million? It's not even. It's not including extended hours. Even if it was, it wouldn't be 15 million. It'd be like another 3 million. Volume's still broken. It went up. Went up double from what it was yesterday. Great. Waiting for pullback to roll covered calls just open. Probably wait a little bit. Yeah. The thing is, with my calls that I have there long, I've got 3 of them left. Even if I sell them, I'm not gonna be able to buy back in, I don't think. Well, I guess I have some cash buying power. That's weird. I had none yesterday. But yeah, even if I sell them, I don't think I'll be able to buy back in, especially not today with that same account. Because this account's under 25k now. And so I'm not sure if I'll even actually sell these calls. They're for April 6th. So I think I might just be holding them. And then if I can add more. I'm kind of stuck with that position because of buying power and because I might want to get back into calls today. Well, I guess I could get back into calls today. I don't know. We'll see. Next stop 34. Yeah, I think it'll probably chill out for a little bit before then, though. BBBY has popped significantly with the GME move. What is kind of interesting, though, is it actually started to rally before close. But I guess not much. That's just kind of a normal rally. So BBBY was looking good coming to close without GME. And I don't think this was a pull from GME because GME didn't go up. But definitely this after hours move, I would say, is a GME pull. So can BBBY confirm it and continue and at least hold the level? We'll see. We're still waiting on GME's 10k. Oh, I don't know what's going to be on it, but a very common reason to delay a 10Q or 10K is because of a merger acquisition. Unless if potentially a company's in financial trouble and they don't want to release it then, you know, that happens too, but I don't think that's the case for GME. So yeah, very interesting. Hey, Jason, you have follow. Morning, Ben. How high can it go today? I mean, this maybe is the high right here for today. I don't know. Wait and see. A lot of volume pre-market. Got about 1 minute to open. I'm very curious how much I'm down on these cover calls. Probably, my guess would be they're 18 strike. Probably like a $6,000 mistake I made yesterday at close, not closing those. Getting distracted with stream. It's your guys' fault. I'm just kidding. I wasn't like thinking necessarily a huge gap up anyways, so yeah, here we go. Open is coming soon. Hey, Furs. Morning, Christopher. Weekly data farm. Only GME was 70k. We'll see what the IV is at. Holy open bell. Sorry, guys. Usually we just get that at close. Thanks, Jason. Appreciate you, donut, buddy. Yes, it's all worth it. It's all worth it for you guys. Okay. Quick to pop. Yeah, I mean, it could have also even dropped, no matter what the earnings was. So big pop of volume, 4.4 million right at open there. Orders getting settled. Let's see. Yeah, 8 grand. So 8,400 on those covered calls, unfortunately. These are up. I don't like how it separates all of them, but they're up probably a similar amount. Wah, wah. 17 calls are up. Let's get nuts. 17 calls are up 370%. So I've got time on those. Thinking the rally will keep going. So probably hold those since my buying power isn't great. Getting a little bit of a pullback here. And let's see. Maybe even. I'm curious how the other ones hold up. If they hold up with it. SPY's kind of flushing down here. Let me get rid of these levels here on SPY. SPY's opening up. It's down 0.10%. Not a huge decline at all. Did kind of double top here in the pre-market. Danced around a lot. FRC dumping. There's the volatility chilling out on that. Okay. Phase is up 6%. AMC is up 6. Bago's up. Birds is up. That's good nuts. Thank you guys for your likes. Well done. 23 in the morning. That's not bad at all. We'll take it. Oh yeah, 690% on those 18 calls. Those calls are, my short calls are up more than my long, or down more than my long calls are up. How do you do it? 8 million volume already. Yes, sir. So this is volume I'm believing. I'm seeing 6.9. Seeing 8. They're putting yesterday's volume on Webull now at 15.8 million. Which is crazy. Get that gap. That's, I mean, when's the last time Jimmy's had a gap like that? Never. I mean, it has. It was probably January. Probably back here. Webull likes to sometimes put wicks where they don't go. Given these gaps back here are probably filled, so they're gone now, but we haven't seen a 50% gap in maybe years. Okay, SPY's coming down here. BBBY also, it's only up 5% now. Pretty big flush there on SPY. Down 0.2% now. Wow. Pulling this price at that volume. BBBY flushing a bit. GME is holding the price with that volume. That is true. I don't know what to do here. Yeah. Alright, I'm gonna sell one of these calls that weren't covered, weren't hedged. And these cover calls, yeah, I'm not taking a loss on them all. Start looking at rolling them, see what I can get. See if there's any options. I'd like to roll it. Jeez, this is gonna be crazy roll. Oh yeah, that's a problem. So what are they for? They're for January. Yeah, so I can't roll them to at the money. So I can't roll them to 25 before my leap expires. If that makes sense. So my long call basically, wow, okay. So I have to roll it lower than at the money. I can roll it to 20. Wait, what? It's actually 20. I'd have to roll it higher. Jeez, what a mess. What a freaking mess. That's crazy. Yeah. This play just became a deep hedge. Jimmy's coming down a bit here.
Oh yes.
Down 25%. Nice, yeah. You can probably reposition. I mean, unless you can't. Unless you have no buying power when you close, which I might have that problem. So I'm a little bit stuck. Right against resistance. The resistance up here is kind of a range. But yeah, I mean, pre-market, like 27, 28, which is kind of the top of this range we traded in for 3 months. So could go a little higher, maybe 28. Call it real resistance. But yeah, I see it as resistance. And then after that, I mean, if it does break that, yeah, probably just more even numbers of 30 and then 35 where this got halted. And over 30, you know, GME goes parabolic. So not there yet. Helios is back to 10. Dang it, man. You fake out? I don't know. Depends on how you define a fake out. It doesn't have to fill a gap to downside. It doesn't have to. It even gap back here. Was that? Yeah, that was. So 2 gaps there. So there's going to be profit taking. We're going to see volatility. I mean, the thing opens up 50%. So now it's up 36. So pretty big sell off into open. Bed Bath still up 3.6. Bed Bath Beyond almost hit $1 in extended hours. Nirvana 23. Some of this pullback was maybe with the SPY, but now the SPY is rallying. So we'll see. GME might be moving on its own a bit, just since it has so much volume, which seems like it is. GME puts in and out. What's the IV like? $250% on the weeklies. Holy smokes! Well, IV's pumped now. That is outrageous. Wow. I haven't sold any of the calls. It's come down like 100%, but I'm cool with it. They're not weeklies or anything. I've got 15 days on it. You guys are crazy. So GME's coming down still, 23.5. Now this would be a rug pull. You guys yesterday were talking about a rug pull in GME from earnings. I don't know, someone mentioned it. I'm like, how would you get a rug pull? We're only up just a couple dollars from the low. But with a gap up 50%, and then if we do fill that gap, I don't know, rug pull, but definitely some serious profit taking. So it might find support here, the kind of the bull flag from extended hours. See if some of these extended hours levels hold up. What do I have all these? Oh, that's the fib. That's my price target. Carvana had earnings as well, and I don't know, people are happy. Yep, BBY is also following a bit for sure. Still up 3.5 though. I mean, flat on BBY is a win at this point. So count your blessings on it. What's this level? Why do I have that drawn? That 1940. Oh, that's that. Okay. Someone wanted a wedge. Forget your wedges. Yep. Might be support there. SP sell off for sure. Clippers aren't real. For other investors. I'll tell you, GME looks like it's still fixed. So maybe that's a good thing. It'll probably attract more institutional investors if it is fixed in the long term. For us traders and tracking cycles, very bad. 50 basis points? I don't think so. I don't think so. Thanks guys for your likes. 25, well done. Bright and bushy tailed this morning. Box D's up 30%. This thing's moving. Had big ups and big downs lately. Looks like just big downs. Where was this? This thing was up? Huh. GNS is down 5%. XII is down 1%. HPCO is up. This one went crazy. It's IPO that one day. I don't even remember what that was from. Getty's up 4%. Oh yeah, we have costs. We've got the other basket stocks. COS is holding up better than GME. Express isn't. Yeah, they all got to move from that GME earnings. BBY is still up 3.3%. Impressed with that. See if GME can hold this pre-market support. 23. Borrow fee dropped? What the heck? So we were at 30% yesterday, 400,000 to 25%. Sure enough, it did drop a little bit. That's interesting. Sitting right at the falling wedge on the daily. Or the failing wedge. Oh. I like yesterday's daily candle on BBBY. It did give us a divergence again, but we've already failed one on BBY right here. This one is just about as weak, so doesn't have to be a strong one, but yeah, I'm not trading softly on BBY and calling it a bottom because this has failed different levels and different technicals. Auction was 320. Why didn't it look like it on the chart? Did it just come back down? Hardly a run. This is there's still no explanation for the volume here on. They said yesterday's volume was 15.8 million now. End of day they said 8.9. In reality, what we saw was like 5.5. So all the internalized volume has just been externalized on the chart. Yeah, I don't know about that. So I might, to hedge my short calls, I'll probably start adding some leaps. Adding some more leaps. Might even do it this morning sometime. Just real slow, like one at a time. My leaps are only up, wow, they're up 71%. That's actually crazy. That's actually crazy. And figuring out when to roll this is going to be tricky. Most likely, I would assume when it's at the lowest price, it'd be the best time to roll. The problem is my short leg is a lower strike than my long leg. I want to roll past my short leg. So it's at least a profitable play. To do that, I have to roll out. May, June, July, August, September, October. I could maybe do October. No, November, December. Oh, that's for 25. So if I rolled up to 25 strike. I mean, this is the theta account, so I guess we just sit on it. Any good squeeze plays? No, I can't think of any, Jason. Let's see, buys 1 minute candles are not normal trading. See the algos moving volume up each candle until it drops. Let's go. Is it again? Oh, yeah, these volume candles. Is this what we're talking about? Since August. BY and Turco following? Morning, Justin. Is Turco rallying? No. Turco's down 8. BBY is still up 2. GME's getting a green candle here, so might be finding support from back here. And looking like it's fixed. We see, we've seen profit taking, we see consolidation, and then continuation potentially, looking very, very natural. But again, this could be because it's trading at a lower price now. It might not be a broken stock until it gets over, 30 really. Thanks for your likes, guys. Got 28 of them. Well done. Buy, inverse squeeze investors. HST. Foxy is up 46%. FRC. I wanted to get puts on it. Yeah, still have a chance. It's only down 3%. I think this thing will keep going down. I didn't have buying power yesterday, or would have gotten some put debit spreads. You don't know any day that it could just drop another 50%. So volatility wise, it seems like it wants to settle down, but yeah, basically with options, I'll just give myself some time in case it consolidates and even bounces for, who knows, a week or two. Yeah, GME's finding support there. Yep. Tons of volume this morning. This is actual volume that we're seeing. Maybe it's fake algo volume, but at least it's showing up on here. I can roll to December. I wanted to just 4-man's cover call this all the time. I'll keep waiting. It's still pretty weak. I mean, that would realize a gain on the play of the difference between $18 and 22.5. Who's to say it's just gonna hold up here? Maybe it'll come down even. It's too bad I can't sell any of these leaps though. That gas took a flush there. Buy holding this level basically. Down 0.15. Blackberry didn't get a move from it. BBBY still up. Very interesting. Yeah, box D is volatile. Survive, GME, survive. HST, join you? I don't plan on joining you in HST at this point. Could be a good range bound play though. Usually after dividends, you're gonna see the stock drop, but Looks like this one kind of does the opposite, which is kind of strange. That make it a good dividend arbitrage play? Did I put that line in there? I don't know where that line came from. General Motors. Well, if you did want to go long, this might be a good time on GME. It could keep rallying today. I might try and roll this, and then I can always roll it to a shorter date if necessary. Yes, right now I have December 22.5. I could do a lower strike. I could do 21.25. Do October, September, August. September. See if that'll fill. I could do October 23 strike. Seems like a good time to roll it is now. What do you guys think? From what I've seen on rolling these, you want to roll it as basically as soon as you can if it's gone against you. And yeah, when the price is basically as close as you think it'll be to your long or your short, I suppose. That makes sense. BBBY is 331. Morning, big hugs. Roll it. GME getting a little bounce here. BBBY not bouncing, still up 2% though. Seems like it's going to come down more. AMC is up 3.5. Some consolidation up here on GME would probably be a good thing. Confirm some fixed stock thesis, but at the same time, if it's repeating the cycles, it's like it's not necessarily fixed. The volume yesterday. Today's volume is 21 million already. Oh my. Roll the dice. It's not like rolling the dice, but yeah. Roll the dice. I do have an order to roll it. I mean, it's a generous order, so I don't know if it'll get filled. Technically, I do have enough cash to close most of them, but that's a dangerous game to play. No sell, no sell. Gotta fill that gap. I mean, not necessarily. How does the stock usually react after ours pump? GME or just in general? I mean, this is good. So on a positive earnings like that with a big rally, big reaction, oftentimes you'll have a continuation, so it'll keep going. But you're staring at a chart on 5-minute candles, so it takes time. It's not like it just goes right away. You're gonna have profit taking, you're gonna have swings up and down, but yeah, I mean GME could just still keep rallying, making new highs today. If not today, later this week, next week. If we're talking, it's behaving like a more normal stock, and it's not just whatever rolling over swaps we're doing. It's whatever it's doing, which doesn't seem like any of that's happening right now. This seems all just very normal. Positive earnings beat by whatever 30%. So if it does continue up, maybe get just a little bit higher. We still have a little bit more to go to really hit the resistance up here in a 28 range. Breaks through that though, yeah, I think 30 and then really 35. Just the next $5 increments on both. Be big levels. And I'm curious what happens above 30. Like, is it going to get super squeezy like it did back here last time? And if it hits certain thresholds like 30 or 35, it's going to get halted, and or are we going to see a more fixed, mature GME stock, a prior meme stock, as the media has been calling it in the last 12 hours? You did reverse split. I go for via this one, via renewables. So they had a little rally into the reverse split. Could have been coincidence because it was kind of at a support though. The split, they dropped on it. I don't know if this one's heavily shorted. It doesn't look like it really is actually. So not a good use case for me to look at to compare it to BBY. So 5-minute chart, this looks like a bear flag. Just a heads up. So I'm gonna cancel this order for now. I think I'm getting more favorable terms on these contracts as the price comes down. Still not more shorting. I think this is probably a lot of profit taking. I don't think this is shorts closing yet. Maybe had some yesterday and after hours, but yeah, this is a lot of profit taking, I'd say. Gotta let it get shaken out, see where it balances out, see if we can get midday, end of day rally to show strength. Good thing, TreeTube. Thanks for your support, man. Thanks for your likes, guys. 37, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I did it. I think that's 37. Ravana 14%. SPY just chopping around. It's really probably waiting on Powell. We've got we have till 2 o'clock, but I don't think there's much more data today. I shall check though. So let's see. Mortgage rate came out at 7. Mortgage market index, mortgage refinance index, that all came out at 7. I don't know if we saw a reaction from that. No, not really. Oh, right here maybe. Yeah, did get a little reaction from that actually. 1030 crude oil inventories, crude oil imports, crushing crude oil inventories, fuel production, weekly.
Let's get nuts!
Let's get nuts! Thanks, Tree to Leaf. Appreciate it, man. Thanks for dono. Here's the 1 cent stock to the moon happy. Here's 1 cent stock to the moon. That was 500 cents. Appreciate it, man. All the penny stocks to the moon. Maybe that's what you're saying. Yeah. Thanks, Tree. That's awesome, man. I appreciate it. Very generous. Gasoline production, heating oil, stockpiles, and gasoline. A lot of just commodities at 10:30. So not a whole lot of data until Powell. BBBY bouncing there, 2.3. Not bad. Oh, even extended hours, it didn't break that yesterday's high on BBY. That's what I want to see. You gotta start taking out those prior resistances. GME kind of consolidating here. Still kind of bear flagging. Seems like we might get a little bit more of a gap fill. If it breaks down here, there's not many support levels from extended hours till kind of yesterday's high, but that'd be a pretty big sell-off. I don't feel like it's going to come down that low. 1940, it could even use that as a support, or the 20 level. for, I think it'll probably have a continuation though. Even without any news of a merger acquisition or swap rollover or whatever, just straight from earnings, which we haven't really seen. I don't think we've seen that on GME hardly at all. Sold a bit of it. Well done. Well done, Ace. It'll, good job taking profits, man. A nice weight lifted. That to hold on my GME is the best chance for money in 2 years of building. There you go, Daisy. Make a decision, stick to it. That's good. That's good. But all the apps are not working? Is it slow? No, I appreciate it, Tree. It's much appreciated, very generous. That gas coming down. Don't you do that. I think it still looks good though. It's still a nice uptrend from that bottom bounce. Yeah. Buy edging its way up. Leave extended hours on for now. The 10K, since it is yearly, the 10K, not a 10Q. I don't know when we get it. I think they have a deadline of April. I think they have a couple weeks till they have to submit it. But maybe someone else knows for sure the date. I saw some write-up saying they have until the date was in April, and that's when BBBY's earnings was on the same day. I don't know if that's true because I don't even think BBBY's announced when they're going to have earnings, but maybe when earnings were last year for BBBY. So maybe that would give us a clue. BBBY is up 2.7. 13th potentially. 13th of April. Might have until then. Flagged your card for too much use? What does that even mean? Yeah, it feels good. It's a weight lifted. Good to just have cash. You get done wrong. 30 days they have? Is it actually 30 days though? I think it was like so many days from when their quarter ended, not necessarily when they released the rest of their earnings. Oh, credit card. YouTube flagged your card. Oh, I see, I get it. Trying to get the 10K same day, is it? I know, it definitely makes me excited that they haven't released the 10K yet. 12 or 13 of April on BBY. We'll see. I mean, they haven't announced it yet. GME is showing some support here. Bear flags can always just end up being consolidation to reversals. VWAP is pretty low there though. Holding tight with how much volume we're getting. You got flagged also, Don? Jeez. He's got tight leashes on your credit cards. Haas is holding up better than all of them. Look at that, still up 7%. This has got to be from GME, right? That's actually nice, nice little chart there. Wait a minute. Yeah. That's kind of a divergence, I think, even 2211. Yeah, that's a nice little chart. Little RSI divergence on costs. Have a double bottom potentially. Very interesting. BY ammo. Thanks, TJ. Appreciate it, man. BBBY, thanks you.
Let's get nuts!
Does celebrate the first super chat? I'm trying. How do I celebrate? Let's get nuts! That's how I celebrate. Let's just celebrate. YouTube's giving me tips on how not to be a chump. Celebrate. Here's a celebration. Cheers, TJ. Alright, SPY's moving up here. I guess, yeah, it's above VWAP. I've got so many lines on here now. Oh, so I have the 200 also. I'll leave the 200 on there all the time. The 50 I've been liking, but 200 is one too much. Maybe still consolidating down here. See what these rolls can do. If I roll to a, I have to roll higher than a 20 though. That's where my cost basis is. Roll to a 21 for July potentially. Not too bad. Still in the money. OXD up 50%. Things rallying. The other day, it thought it made a bigger move. What's Carvana doing? Carvana's up 15, almost 14 and a half. Big run up in the pre-market. Yeah, they had earnings. Carvana plans 1 billion debt swap to restructure balance sheet. There you go. So kind of doing something like BBY in a sense. A debt swap, structure balance sheet. Actually, that once. Let me look at the paper account here. So I was following bar chart on cash secured puts screener, and I just picked a couple that I liked. One was Carvana, one was BBBY. See how they're doing now. How'd BBY still be down? Oh, I guess BY hasn't made enough of a move up yet. So the Carvana one, that's up 24%, so that's nice. Jason, thanks, my man. Appreciate it, buddy. Look at that lady. Purple lady with heart glasses. Thanks, dude. Time to get deep. What's your biggest life lesson so far? Wow, it's pretty early in the morning for that, Tommy. That is definitely afternoon question. Yeah, the volume on GME is wild. She's pretty. 25 million. And now my Weeble's saying 15.8 million. Did you guys' change for yesterday's volume? Yesterday Weeble's showing me 8.9 million. Now it's showing 15.8. What it's doing now, huge volume popping. Can it go over 30? Sure, yeah, I could. It is big volume, big profit taking at this point. Holding up pretty well though. I mean, we're holding level from pre-market, but just intraday here, it has built a little bear flag, if that means anything to you. So maybe a little bit more of a gap fill before support and a bounce. I think we could see a continuation though. I actually haven't sold any calls, which maybe is stupid, but I've got until April 6th on them, so, and they're in the money pretty far. There's 17 calls, so They're down. They're down what 150% since this morning, but yeah. See, now I don't have buying power, so that's the thing. If I sold them, I don't know if I can get back into them. So I'm kind of just happy to ride them for now. I think we could see over 30 on this run though. Yeah, this month, into next month. It's 2 p.m. your time. Where are you at? You're in Europe. FRC rallying a little bit, 1.5%. E-Trade shows 15.17 million. Weird that they're not even consistent either with each other. ETIX. Another penny stock? Yeah, penny stocks to the moon, huh? I don't know, man. Let's see, you have a bit of a divergence there, but that chart is, yeah. Maybe. J. Powell speaks at 2:30. Statement comes out at 2. So market might just be kind of chill until then, really. Would you look at ARO? Yes. I have looked at ARO. I think I've traded it before. Yeah, I've looked at this one before. I don't remember where I traded it. This one had some volatility for sure. It's looking, yeah, it looks pretty good. I mean, let's see. Kind of showed support back here. Respected that. I like that MACD is bullish today. That stays bullish. That's nice. We got that green over the 9 moving average. Pretty smooth price action on this thing, which is nice. You have kind of some resistance back here. A little more upside. If it breaks that, then yeah, maybe it'll repeat and move its way back up to 78 cents. Not any divergences or anything on the RSI. Could be kind of making a little inverted head and shoulders here too on the daily. With the head and the shoulder and the shoulder. So yeah, that one could be nice. I think Weeble doesn't include after hours volume. No, I mean it's not supposed to. So GME moving up a little bit there. See what it does at VWAP. That's what I'm curious about. If it breaks this resistance on the top of this candle on VWAP, then yeah, bear flag is off and we just start rallying from here. There's VWAP. Kind of wicking a little bit. I'm gonna look at rolling these if it does start to break here. Let's see, what am I? 18. Look to where it's zoomed out, yeah. 2 p.m. Eastern is when the statement comes out. I don't think he talks till 2:30. I think it shorts full blast. Yeah, volume's crazy on GME. Should be on SSR. What are you talking about? What are you talking about, Ben? I don't know if it's better to roll it out further in time and do it higher or just do shorter stuff. Probably monthlies would be smart. We'll just roll it to April. 18.5, move it up a little bit. I'm torn. Okay, kind of rejecting VWAP there a little bit, GME. So still kind of in that bear flag. Broke that wedge. Oh, that's true, that line. Let me look at the lines there. Short sale rule. Never helped before. I don't know why you're saying that there wouldn't be on short sale restriction. It wasn't down 10% yesterday. So that wouldn't even apply. No, it has to be negative. It's not, it has to be down 10%. Not from open. It's from close of yesterday. So instead of green 35%, it had to be red 10%. Back over the high of 25, 26. Yeah, it could go to 30 today. Yeah, I mean the volatility coming with Powell too, it definitely could add some fire. What's up? Oguz. Oguz. Hey man. Ojuice. Look at that wedge. This thing's gotten long now. Maybe a little bit, but they're holding up well, and this just looks like profit taking from that massive gap up. So I think it'll probably continue. I don't think the highs are in yet for this rally. Maybe do it something like that. Could do it a little lower, I guess, on this body. I just do the body on that weekly candle and then this one. So yeah, that puts us at a gap above it right now. But I mean, it's just all kind of in that range, depending on where you draw it. For it to be like a legitimate one, you'd want it to be probably back up here to like 35 or so, or even retesting these 50 levels. Yeah, they can still short. That's true. I didn't miss anything. GME's come down a little bit from the high, looking very natural, very normal. Looks like it's a fixed stock so far, but just looks like profit taking out. It's holding a pretty nice level, that pre-market or post-market level from earnings yesterday. 23 a quarter basically after that massive first red candle. That was crazy actually. We were watching it. I don't know if probably most of you guys were here. That was wild. It's just most massive green candle, and pretty soon after close, like we didn't see any financials yet. I'm like, something must be good, because that's a huge green candle, and it didn't stop. Yeah, it didn't stop. Went all the way from 17.5 to 23 till it consolidated. So it's holding that level from yesterday, which is good. It could come down more still, but it probably will see earnings continuation with how strong that earnings report was. There's another move back to VWAP. Another problem with these cover calls I had was the IV was still too low. Looks like this thing wants to break VWAP. GME might be about to rip again. Let's see. Yep, there's a break on VWAP. Oh. Dude, the spreads are insane. It's also getting a move up, push up at the SPY. SPY's ripping right there. I'm gonna be patient on getting more leaps, but let's see. Yeah, these leaps are up 88%. That's crazy from just that after hours move. think it just kind of shows how cheap they'd gotten to. Yeah, GME's moving up here. That might have been all the profit taking necessary, honestly, guys. Like, it can happen quick. See where it finds a range. See if it makes it back up to the pre-market high and if it breaks that or not. But it's looking strong. That bear flag definitely broke down with the break of VWAP. Yeah, I'm paying basically double what I was paying yesterday for these leaps. I haven't ordered a roll. Spy's moving up there. BBBY is not getting a push with this. It's almost back to break even. Wow, look at that pop on Spy. Something come out in 21. Now I'm curious how correlated GME is with SPY today. Inflation is the worst thing an economy can have, says billionaire Carl. And billionaire investor Carl Icahn. Carl Icahn speaking up. Hollow. Since the Fed began to raise interest rates a year ago, the amount of money in the money market funds has increased by roughly 400 billion. Kathy Wood has over 2 billion in losses from selling stock during 2022 until now. House Speaker Kevin McCarthy received 13,000 from Silicon Bank, 2011 to 2018. That's hardly anything. But yeah. The daily volume of zero-date contracts on the SPX increased from around 400,000 in January to approximately 1.2 million in March. January 2022. So, wait, we didn't have daily. Oh yeah, SPX has had daily contracts for a while, huh? It was just SPY that recently got them. So it was 400,000 in January 2022, and now it's 1.2 million in March 2023. GME's moving up here. Median price of a U.S. home was lower this February than it was in February 2022, ending more than a decade of year-over-year increases, the longest on record. Yeah, I actually saw that stat yesterday. So houses lost value, basically. First time since 2008. Sold one call for 200%. Well done. So I'm gonna look at the option chain a little bit more, see if I can find IIV month. Really not time. Not time. So right now I have an order to roll it to November 22 strike. That put me $2 over my long calls, which is good. It just put it in basically into a long dated call debit spread. But it'd give me what, 3 extra months on the short leg where I could do it again. Yeah, GME's holding up well. SPY's moving. Box D is up 54% and holding. Jan 1 up 27%. Nirvana up 15, holding well. Cost 6.5. Easy Go 13. SoFi's even up. BY still green? No, BY went red. So that's not held up as good as the AMC's getting a little pop there with GME. BBBY got untethered. Now red. So I want to see a hold of yesterday's support to confirm some kind of flattening out. Yeah, GME just edged over VWAP there. You have a green candle on the 5-minute over VWAP. Definitely getting some support from SPY, it looks like. I'm adjusting these orders I have. See if they can get filled. There's a fill. Yeah, that's so. Let's see. That's for another leap. So I just picked up another, not a leap, but a January 20 call. I guess I could get them at the money. Yeah, I'm not gonna get any more in the money. I don't know why I did that. Just already have the 20s, so I'm like, oh, I'll get more. But yeah, it makes sense to get them at the money. Moving up here. Curious what happens when it gets up here. If it just rejects or if we break that resistance. Chaos is my secret sauce. Could be, yeah. Yeah, volatility and stuff. BBBY with little green candle here. AMC with little red candle. Still up 5% on AMC. GME's still edging up. Looks like this thing. Well, SPY is kind of going crazy too, though. I don't know what's going on with SPY. Yeah, it looks like we're repeating March again. I think Jay Powell might just add some upside on SPY. Let's see. January 25 calls. The problem is that the poor man's cover call strategy, they actually, most that do the strategy, they say get a call deep in the money. Not deep, but pretty close to, or in the money at least. I think you want like a positive 80 delta maybe. You can do it however you want, but that's, oh, there you go. SPY, new high on the day. Or broke basically, yeah, broke yesterday's high, broke the pre-market high. So much for trading in a range before Powell. That range is straight up. Holy smokes. Whoa, dude. What the heck is going on here? SPY just squeezed. Yeah, we're repeating March. SPY and GME. It's definitely still looks like it. That was a crazy break. See just the volatility just plow through that resistance. I mean, there's not a whole lot of other levels up here. At that level. And then really, I mean, just this kind of head and shoulders. Yeah, that kind of coincides with these two, even a little bit higher. Do it up there. Yeah, it makes more sense. So there's the high from before, 399. Yeah, I mean that 400 level is going to be definitely a point of resistance, I would imagine. GME is just edging up. We'll see when SPY kind of chills out if GME continues or not. Take all the narcos right to the J-Pal office. Don't mess this up. Giddy up. Volume. Shorts are closing. Longs are opening. Shorts maybe going long. Longs maybe adding. I mean, you have to think, this is the first positive EPS Jimmy's had in years. Positive EPS quarter. So their free cash flow increased. And I think I interpreted it wrong yesterday. The cash and cash equivalents, that's what we were always judging. I was thinking that was including more than just cash, but the billion cash on hand they had before that then turned into like 800 million. I think that was always cash and cash equivalents. So yeah, that has increased to 1.4 billion. So I did watch that Meet Kevin video on the statements though, and he brought up some good points about it. They do have, let's see, he said they have over $1 billion basically in bills right now. He called them bills. I don't know what it is on the filing. So it was more like 400 million in cash after you paid off your bills, not debt but bills. So still no debt other than that small French loan. Oui. Very strong morning so far on GME though. Some profit taking, but not a huge sell-off and showing strength. Looking very fixed. Normal. Was it Microsoft? That gas moving up here. Yeah, Microsoft had a rip. Apple moved up there. Now the real word, yeah. Yeah, I mean, depends on where they open their short, but yeah. Ace sell. I think he sold a little bit. Scaled out some. Head and shoulders. Head and shoulders is a bearish pattern. You know what I was showing on the SPY? Back there. That was just me looking for support and resistance. This head and shoulders. So SPY did reject the 400 break. GME not seeing a big red candle yet with it, so showing good relative strength. BBY is red. At 81 cents. Like to see it hold this level. %. There you go. That's the way, Ace. Got to scale in, scale out. PayPal head and shoulders. I like longer time frames, of course, to see technical analysis. Like a head, shoulder. Maybe. It's not. Yeah. It looks more bullish to me. Got a bullish MACD, got this green over the 9. Kind of held this, bounced off this support back here. But it is under the, the 50 moving average there. It's a pretty solid support though, it was bouncing at. GME still up 43%. Doing very well. Okay, I need to look at maybe my positions. This isn't gonna roll anymore. Fine, close those. November, December. Oh, how I wonder. Hold up to 22.5. Can't believe I didn't close these. What a stupid mistake. If I didn't close them, I could be opening covered calls right now at 30 bucks and really theta farming this thing. Instead, I'm having to potentially roll it, and I won't even be theta farming till December. Potentially, like that's if GameStop stays up. If it comes down, I'll be able to roll it back and down, but it just holds up, which it might not. Sell 40%, keep 60. Yeah, scaling out, scaling in is always a good idea. $40 million, yeah, the volume is crazy. Yeah, 33 million volume. Been almost a year since we've seen that much volume in a day. 57 million was what's that, May of 2022, and it's only 10:30, so we'll probably be eclipsing that volume. Who wrote the book of love? That's right, I totally forgot the chorus. That's great. 4:11 a.m. will be over. Highs of the day. We'll see. Have a student shadow me. You're a bad teacher. Something good brewing with the GME. Why rejecting that high of the 400 break? Bed Bath 80, 98. The low on the day there. Bed Bath & Beyond's volume is elevated today also. From yesterday at least. Not as much as the day before. AMC is holding up better. It's up 5% still. GME still edging up. Wow. Yeah, this roll is getting less and less favorable. It must do it quicker. Wow, look at that thing go, man. Crazy. So it's up 45%. Has almost made up all of the profit taking from this morning. From the first, like, what, 15 minutes? I haven't seen a 10K yet. I'm sure you guys will throw it in chat if you see it. I think they're waiting. I think it's a a calculated time that they're gonna release it. I don't think they're just like lazy or forgot to or didn't have it finished. I think there's a strategy with them releasing it late. That's what I'm hoping for, at least. SoFi can't fly. SoFi's up 5%. Mara, that's right. Yeah, I think crypto could keep going crazy with the banks failing. So good stock exposure to that would be Mara or Riot. So yeah, maybe getting some exposure on this would be smart. It's kind of at a resistance right now though. Not a great time to go long. Fox D is up 52%. SPY is actually consolidating up here. Maybe setting up a bit of a bull flag. Look at GME's candle now. Look how long that wick is down there. You zoom out, it's crazy to see it on the daily. Like, wow, we actually came way down here. We're up, what, $2 from the low. Over $2 from the low, which is crazy. Yeah, that leap I got is already up 10%. Wow. Just from this move this morning. 10% on a contract for January is crazy. SoFi's up its insurance. 2 million for members, huh? Google shows you 35 million on the daily on GME. Yeah, that's what I'm getting too. I'm getting 15.8 million for yesterday now. A move up from the 8.9 it was showing me. And that was a move up from the 5.5 or whatever it showed during the day. Some stores start to close. Yeah, it hasn't gotten crazy yet. It hasn't looked broken, still looks fixed. But we might see that old GME behavior after we break 30. That's where the S3 partner says it goes parabolic, and he was right. I mean, it did. It over 30, and that's when this thing really woke up this day. Wow, look at GME go, man. It's slow, but that's a big move already. There's a big bounce off of that bottom. 11% we've seen from the bottom just last 45 minutes. SPY is holding up too. Yeah, looks like SPY is gonna just building up some momentum to break that 400. Fox D is up now. It's breaking out a bit. Without the volatility, the swaps don't really correlate. They don't stay tethered. 80.57. It's a low there on Bed Bath. Down 1%. Yeah, parabolic over 30. Could be, could be. Oh, I forgot I still have an order to close this. Wow. To show theta decay or IV crush. Yeah, I guess it'd be IV crush. From open, even from like right here. The stock was here. My 17 calls for April 6th were still up. Wait, what? Yeah, I think they were higher than they are now. Even though we're on a red candle and coming down. Order to sell 2 of those? I might even just leg into these. I don't have to sell them. That's probably the way. So GME kind of getting our first red candle on the 5-minute since 10 after 10, 35 minutes or so. Hit right on that 50 moving average. I'm rejecting it. Should be pump and dump. Not at all. This is the opposite. This is very, very natural fixed price action. Yeah, I might short some. Let's see. Okay, GME getting a little red candle here. Be coming back down to VWAP. Morning tasty. My boy Blue. You selling it open was a bad idea. What do you mean, Ace? You're regretting your sell it open? No, I was just showing you the options had. You actually don't have options, but oh, stick with your decision. Scaling out's good, man. Remember BBY? You wanted to dump another 30K or whatever at BBY when it was at $1. It was up here. It was around $1. It's like just scale. You put some in, I think, and then it dropped a bunch on that reverse split news. And you had a way better entry. Same thing with the exit. Put some on GME now. Maybe that's the highest price you're gonna get. You'll wish you did more, but that you can't change that. But if it goes higher, you'll be happy you only did some. If it goes lower, you have to be happy you only did some because you don't know. Scale works. Takes discipline. It's not as fun, but it works. Making money in the stock market shouldn't necessarily be fun. Like to be successful and consistent, it should be grueling and yeah, not sexy. Netflix at 290 today. Go down. Thomas V. I mean, people would take profits. Right, yeah. So that's a good time. I guess I don't follow. We're supposed to make money? What's going on? Okay, nice. I'll agree, glad you good decisions, absolutely. All this talk makes me want to sell one of these calls or just maybe leg into it. If I legged into it, I could have capital to buy more. I could sell like at the money. Ooh, that's interesting. Should probably do that. If I shorted 3 at the money, receive 400 bucks, and then that would basically just cap my gains. I'll do one at a time. I have three I can do. I'll do one at a time. Do a little poor man's covered call on my 17 calls. Spy's coming down here. It makes sense. I mean, the Ivy's crazy still, right? Still like 250% at the money on the weeklies. 200%. It's come down some. All right. Sorry guys. So one of my calls did fill on my short calls. It's for 25 strike. I guess I actually can't day trade these, so that's fine. I could close it tomorrow potentially. Might do another one. I'll leave it for now. Just one is fine. 10K has not come out. I'm so chill. Profitable company, very important step. Yeah, it is an important step. 10K not coming out to me is maybe a very good sign for other stocks. BBY bounced off the 80.50, which is literally the line we have drawn from yesterday. So very good to see that if it can hold above there. Terrific. Even if it's not BBY, like any other, whatever merger acquisition GME might have up its sleeve. It's exciting. Not ripping my bong. $5 years away to break even. Yeah, so some of the filing, actually, if you guys haven't seen Meet Kevin's video, it's pretty good. He goes into the filing and looks at kind of some of the line items for how they kind of got a positive EPS, and it's kind of some conclusions I was drawing without knowing how to read the statements that well. But basically, I'm like, okay, revenue's down, and yet their EPS is higher. Inventories are down, so okay, they've basically been selling through inventory and not replenishing it because they had a surplus of it basically, and so it's looking good on their books, more or less. So once they start replenishing inventory and they have a negative, I can't remember the name of it, but basically a negative balance on inventory, showing that they're buying inventory and selling it and having a positive EPS with those numbers, that will be another good step. Because at this point, and it almost even seems like Ryan Cohen did it on purpose. Because remember when he like was loading up on inventory, he had over $1 billion inventory. I'm like, okay, it makes sense. A lot of companies were doing that. Supply chain, inflation, there was a lot of reasons at that point. But then the next quarter, it was like most companies had stopped doing that. And then the quarter after, most companies had been slashing prices. There was deals and sales. And it seemed like GME kind of kept pushing hard, buying a ton of inventory. I it almost seems like he was doing that on purpose to inflate the inventory, so then he could just be basically riding the inventory they bought and get a positive EPS. I don't know. I mean, the people that invest in companies, they definitely look at the balance sheet and everything much more in depth, so they would see that and catch it. But it is still kind of interesting because that's why the earnings last year, Q4, were pretty awful. It's just all they were spending on warehouses and inventory. So it's kind of a whipsaw in that sense. So once it kind of stabilizes, that's when you'd like to see the EPS stay positive. But yeah, you guys watch his videos. It was pretty insightful. I kind of edging down still. Well, GME, I came back down below VWAP, which is good for consolidation's sake. I did sell. I'm hesitant to short calls or hedge my upside since I already have all those cover calls I'm stuck in. But I did open up one at 25. Don, I was having a good day, jerk. But I mean, yeah, that said, GME is in a good spot. They've got oh, Kevin also mentioned their cash and cash equivalents. It's 1.4 billion, but he pointed out their bills right now. They have basically like $1 billion in bills, which I have to look at it again to see where he saw that. So if they paid off those bills, it'd basically be 400 million in cash, which is still a very strong position, and still no debt, of course, other than Ziff Wench. Getting a little food in my belly. GNS is down 5%. XXII is down 3%. I'd like to see this thing rally. It's not really repeating back here so far. It's definitely a much slower. Still looks good though. Everything still is pretty good on there. highs coming back down here a bit. There's actually an RSI divergence there on the 5-minute. See that? Around quite a bit in 2 years. I don't know if that's a fast timeline for what they've done or not. If extended hours on that kind of helps.
Price targets of blind. Considering the fact that sentiment has adjusted slightly following some disappointing guidance from this company, Nicole.
All right, thank you for all of that. That's so great. Thank you, Jenny Horn, markets correspondent. Appreciate it. Let's get some insights in the news shaping the markets, and for that we welcome in Amelia Bordeaux, Managing Director of Diamond Standard. Thank you for being with us. It is Fed Day. This is the day, and they've been in this quiet period, and there's so many different scenarios. The debate about what
This is the day.
not happen.
Give me support at 16.
Tell me your thoughts.
Back to 10 fast, right?
Well, it
Right,
has
Don?
been a quiet period. All this banking turmoil happened in the Fed's
Bounce over
communication
VWAP.
blackout period, and
Or
it's a
Black
very
Rock
exciting
employer.
day. So the Fed is really has an unenviable task today. They're really walking a tightrope between their inflation fight and they're continuing to stabilize the banking system. But to answer your question, I believe that the Fed will hike 25 basis points today. I think that's the most prudent course of action given how high inflation continues to be. We're at, January core PCEs at 4.7%, core CPI in February is 5.5%. They just cannot abandon this inflation fight yet.
And in the meantime, there has been talk about whether they should do the 25 basis points at all, while it does seem that about 80% of the folks still think the 25 basis points happen. But now the debate is the language afterwards. Most people were thinking if they do the 25 basis points, we would get a dovish tone. Now there's question marks as to if we get the 25 basis points and no dovish tone.
Yeah, well, that I think would make equities take a hit if we get the 25 and no dovish tone. I do think they are going to have to kind of concede a little bit here and make some compromises, have a little bit of a dovish tone. I think they need to kind of quell the bond market, right? So
My
that
roll
move
happened.
Index has been all over the place, very volatile.
My roll
We're
happened.
off the highs from
So now I'm
Friday. and
guaranteed
that,
profit
but I
on this
think
thing if it
their prudent
stays
course of
up.
action is kind of to hike the 25, be a little bit dovish and careful in the language just to kind of calm
But I have to wait till
the bond
December.
market because it's been a wild ride. I mean, I think the 2-year is up about 40 basis points since Friday. So just really volatile moves that they're dealing with here. But Janet Yellen, the Treasury Secretary, did come out yesterday and she stated, which I think was really important, in addition to the Fed's, new lending facility that they started, she had said that there could be some guarantees for depositors at small banks, similar to the things that were afforded to the depositors at SVB and Signature Bank. And so I do think that that does help stabilize the banking sector turmoil.
Yeah. Who would think that you'd have money in a bank here in the U.S. and it would not be safe? I mean, that's part of the major discussion as well. When you think about the big picture here, if the Fed were to take a break here and say, in light of everything that's gone on and our goal for financial stability, we're going to do nothing today. How do you think that could be interpreted?
I think it'll be interpreted a couple ways. I mean, I think the first way is that market participants are going to worry that the Fed knows something that perhaps perhaps we don't.
Buy it back down to VWAP
not
here.
in the Fed. So it could
GME
be
is
quite
not phased.
worrisome. The other thing is that I think the
Hold on,
market,
guys.
in terms of Fed fund futures, was repriced almost immediately to rate cuts even sooner than they're being priced in. So there's about like 50 basis points of rate cuts priced for 2023. And I think that would move forward and it would be a larger number. And I don't think the Fed necessarily wants that, because that in and of itself would most likely rally equities. Maybe not the knee-jerk reaction today, but over the next couple of days as the market digests that information, equities and those rate cuts get priced further in. And if equities have a large rally, that would loosen financial conditions. So you're right in the sense that the Fed has to be very careful what they communicate to the market today. They're walking a tightrope.
What do you tell investors at this point?
Right now, I mean, we're telling investors that with all of this, the VIX is elevated, the MOVE index is elevated, all of this volatility in the market and all of this uncertainty in the economic outlook in terms of, the yield curve was inverted, now it's steepening a bit. We like precious metals. Obviously, we like our diamond commodity. We want to hold something that fights inflation and also is a bit uncorrelated to the rest of markets, because the outlook is so uncertain. Even the Fed in their outlook is very uncertain. So precious metals is what we're recommending.
Yeah, understood. Thank you so much, Amelia Bordeaux of Diamond Standard. Really appreciate it. Good to see you. We have a big day today. We'll be following it all day. Thank you, Amelia. Plenty more to come right here on Trading 360. Our 360 Spotlight looks at fixed income investing and opportunities in the bond market. Our disruptor today, Arista Networks, ANET. We'll look at that. Trading just shy of recent highs. Our 360 round looking at the auto sector, Tesla, Ford. We'll drive right into it with our experts. And up next, it's the big three. 3 stocks, 3 charts, 3 trades.
Buy bouncing off of VWAP. GME still holding up. Still holding those levels. Support from this morning. Or yesterday afternoon, rather. After hours. Fox D holding up 45%. Carvana 19% still. Buy wicking down now below VWAP. See if it falls. Kramer said I can go higher. Good for Kramer. Morning, Candyman. Need a BBBY run badly. Got a stock market junkie. Whoa, big flush on SPY there. Yeah, SPY's coming down. Let's see, 11:15. EU close in 15 minutes. Not sure if there's any news. Nice while it lasted. Talk about the GME run. This is what a fixed stock looks like. A normal stock. Post meme stock. Bought it for tomorrow's rip. You only seen rip today with J Powell? Oh, the Kramer inverse. Oh, here's our shark.
Of course, I know Ben's going to look at the chart in a moment and say bullish, bullish, bullish. We'll get past that for a second. Look, you have a handful right now of tech stocks that are holding up the entire S&P 500. I mean, look at the financials,
Yeah,
chart,
this is
which
crazy.
we're going to in just a moment. Take a look. Everything right now from financials to energy is just take risk off. Markets are getting hammered. Nevertheless, you got
The
Nvidia,
shark.
you got Microsoft, Apple, okay, Google on a year-to-date basis that are doing phenomenal. Throw Tesla in there.
He's right.
Nvidia is actually one of the leaders of the pack here, and I think it's a great time to actually, you know, step ahead and look for the rotation, if you will, out of some of the big tech stocks. Nevertheless, I'm going to go into the June 16th expiration in Nvidia. I'm going to be buying the
What is that
240
a
puts,
is that a
selling
computer?
the 230 puts. So
Or is
it's
that just like a
$10
display
wide
for
spread.
their
And this one, plenty of
graphics
time.
card?
It's an out of the money spread. It's done
Thank
for
you, Ace. Appreciate the membership you've gifted.
Once again, it's one of these.
If
like,
you guys aren't a member yet,
outside
Ace has
shots that
gifted
I'm taking,
membership.
and I'm trying to step ahead,
Keep stocks
looking
me
for
bank.
the
Thank you,
rotation,
sir.
if you will, out of the big
Jack
tech.
Wolf, you're not a member.
And,
You can click on that
ultimately, that is what is
green
supporting
box
right now
and
the
accept
S&P
the
500.
gift.
Understood. Okay,
Or
Ben, your
Ben,
thoughts here
you're not
on
a member
NVIDIA.
either.
This has got this bearish
Or
trend.
Thomas.
Nicole, good morning. Don was
You
exactly
guys are gonna
right
get in trouble
in
with
terms
Ace
of the
if you
bullish
don't click
sentiment
it.
here, and that's driven by the price activity.
Wizard,
so
yeah,
again,
click
I
it.
like to
It's
look
free
for
gift.
trend. I
Do it,
expect
do it.
continuation more likely than change, and until it starts to break down, which Nvidia is yet to, that continues
I
to be
think
the
your
case. So
your
let's
YouTube
just
account
begin with
has
the
to be
high
linked with
conviction
a
trade
Google
we've
account.
seen,
The
and we're
ego
going back
on
to
you.
middle of beginning or
There
middle
you
to
go.
end of
Well
February
done.
when shares bottomed out around 204, and in reaction to earnings, we saw that just spike to the upside here,
Well
and then
done.
kind of went sideways around
You'd think Papa
230,
Ace.
235, but I went ahead and just identified
Charles
a few
Schwab
areas of
puts.
consolidation for us. Now, if you remember, guys, last time we talked about Nvidia, I
Five.
pointed out these
Thank you,
two
Ace.
areas,
Jeez, man.
220. I said 230, and then I said
Atomic
hey, we
Rob.
just spiked up. We've got
Thank Papa
a
Ace
bit
as
of
well.
potentially a new area balance formed here, so I left it with a question mark.
We're still
kind of a
getting some
hypothetical. I think
some
in this instance, we
residual
go ahead
viewers
and
from the
kinda
earnings
straighten
yesterday,
out some of
Ace, so you
those,
gotta be careful.
question marks, right? And ultimately,
You
we
are a
got
member,
our
yeah.
answers.
DM
There
me
was
on
a
Discord and
well-defined
I'll
area
give you the role.
consolidation that formed around
Discord as
260.
well.
Now we're kind of in that same environment where we just went vertical out of
Yeah,
bounds here.
Schwab looks
Do we
like
get
it's
a new area
set up a bear flag.
consolidation? That's what the bulls are looking
think,
for. Again,
downside on that
continuation
is
more likely than change is just
good
the
idea.
mindset here. Could be wrong, but if we are, we have the areas, the footprint that the market's left us in its path up to direct us when we are. Now, along those lines, we were in a very well-defined trend environment to the downside before the run-up
you,
that
Ace.
we've
Appreciate
seen.
it, man.
Here's a look at the daily time frame.
Crazy,
and
dude.
as mentioned, that trend to the
Crazy.
downside, 309, 240, and then we kind of balanced around this 155 level. But right here, when we broke out above 200, that was that first flag flying and the first indication that the bears, the working assumption that we were going to form a new area of balance at a lower level, was potentially coming into question. And then we saw
still coming
actually an
down
area
there, so I'm holding below
consolidation
VWAP.
too in some ways.
GME
But
unfazed
look what's
by that
happened most
move.
recently. We took out 240.
That
was a key
just
area
a
in
classic
terms of the
OG.
footprint. Again, the path
This
that
is
the market's
Ace.
left us on the way down. So
Once everyone
there's
shows up
definitely
for his
some
pool
conviction
party.
with this
ego
move
on
here, to say
you.
the least. Let's step back and just quickly show you where things stand. Don mentioned the conviction or the high intensity run up that we've seen here. Look at this stock up 84% year to date. I mean, if anything, I like the sell side of that just to take the other side of that. I mean, it's tough to sustain a big move like what we've seen here. But again, at this point, I'm still looking at this move 108 to the upside here.
Thank
No
you guys
rejection of
also
upper levels
supporting
yet.
for
I think,
subscribing and
Don's
hitting the
getting a little
bell
bit
and
ahead of
hitting
himself
the
on
thumbs
this
up.
one, but
It's all
again, it
very
could go either
appreciated,
way,
so thank
obviously,
you. We
at
got
any
51
given
likes this
point, but
morning.
well-defined trend here.
Doing
off the
well.
lows, to say
GME's
the
holding
least,
up well,
invalidating
consolidating
longer-term
above
trend that was intact to the
yesterday's
downside.
move.
Yeah,
Really,
understood.
so
I mean, as
very
Ben
solid.
notes, it's going from
Could see
108
continuation as
up to
early
the
as
current
today.
levels of almost 270 right now. Don, are you too early on this?
We'll
move?
see.
Absolutely, but you know what? You got to be early to ultimately be in.
Don the Shark.
25 years in doing this.
You don't have to
I've
be
seen
early.
some wild things in my trading career, but you got to realize, 10 days ago, 10 trading days ago,
mean bank
there was no
stocks.
banking crisis. Nobody even heard of a banking crisis. Moreover,
Don't do
nobody
that.
ever
It's
heard
me.
of a cyclical
Don't you do that.
rotation into growth stocks. I mean, we're out there, we're buying Nvidia last week, we're buying Microsoft, and those are supposed to be the protection type stocks, it
Those are
does
blood
not
cells.
sit well with me. I mean, forget the fact that Nvidia is actually up 80% plus
Those are
on a
blood
year-to-date
cells.
basis. Okay. Again, it was being used as a cyclical rotation where, again, trade was actually moving in to these wild growth.
Case, if you need me to ban him, just let me know,
out
because
of the financials,
clear disrespect
that's
and
just
violation
not
of our
warm
rules.
and comforting moving forward. I don't think you can make a fundamental case.
GME just
So
swinging
right
up
now,
above
what you
VWAP,
have,
below
you
VWAP,
have a stock that's up
but
84% a year-to-date basis.
looking solid. Including extended
Ben and
hours,
I
it's
have
a nice
been
bull
around
flag.
for probably around
Rally,
the same amount of
consolidation.
time, and I don't disagree. I get what you're saying. It
Yeah,
does
that's
seem
true.
like
You're the
insanity, right?
little
This
lure
is
to keep
a
them
flip-flop
going.
event that is happening, and one we didn't expect. That being said, as you're
boy.
watching on the Fed today,
I mean,
when
he's
you're
already
watching
got
the
a
TLT
surplus.
ETF, I know you have a
There's
bullish
still
trade.
I think there's still
Tell
at
me
least
about
3
where you
people that
think
can
rates
become
are
members.
going, what the Fed does,
Everybody's not a
and then,
member.
bring us in on your look here at TLT.
SPY is now down below
so it's
VWAP.
fairly evident the Fed needs to hike by 25 basis points. If they don't, they're going to put some fear into the hearts of the marketplace. And I say that because, look, if the Fed
Nice
comes out
version.
and does absolutely nothing
Indeed.
and say, you know what, we're going to pause. We caused a little bit of stress on the banking industry, which once again wasn't even there 10 trading days ago. It's going to cause fear because ultimately what trade is going to look at if the Fed does not hike, traders are going to say, uh-oh, the Fed knows something. They know something, hold me at this point. And that's exactly way, and it would actually be risk off. The S&Ps would probably fall. So with the Fed actually raising by 25 basis points.
So if you haven't legged in,
it's gonna be the
especially
statement,
those of you that
right?
are
And
under
even more,
25K
in
and
particular,
worried about
the
PDT,
Q&A portion
if
of
you have good
that's
profits
gonna
on
turn
an
into
option,
a wild
whether it's a
ride
call
for
or a
markets.
put that you're
So
long
I am
on,
going to look at ultimately
say like the 17
TLT,
call in GME,
and
at good profits,
possibility
I
of
didn't
a
necessarily want
rally
to sell it.
just this week. All right, I'm doing an
So
extremely short-term
I guess this
trade.
would
It's
apply
the
more
March
if you bought it same
24th
day.
trade. And what I'm
But I
looking
guess today I
for
could sell it because
is what I would
it's the
term
next day.
risk off in the
But
S&Ps
at any rate, if you didn't want to sell it
into the longer end of the curve,
because it's same
specifically
day, or you
buying,
just
if you will, of the TLT,
want
I would
to
be buying the
have more exposure to
104
upside, you
calls,
can
buying
always
the 104 calls, selling
short
the
or
106
sell
calls,
another
$2
call.
widespread for a
Instead of selling the call that
65
you
cent
own,
bid. Just a
short
nice
another
shot
call, sell another
for a
call,
quick move
further
up.
out of the
Again,
money.
just between now and March
And that's a good
24th,
way
which is
to
Friday. Quick shot to the upside.
The
inside of
ego
TLT,
on you.
take some profits.
predicated
There you
on
go,
the
Stephen
idea
Coe. You can
that,
think Papa
we start
Ace.
to get again that fear trade
So
that
this is a big
resurfaces
spread
to the
now.
marketplace.
Yeah.
But basically,
All right,
I
so
was able to
this is a
realize
short-term trade he's going for,
$154
Ben, on the heels of
on
he thinks people will run for some safety,
on this 17 call.
in the near term.
So
And
and now
risk off on the
I've capped my upside gains, but you don't need unlimited
Pushing
upside. Like
103,
that's
guys. I'll
crazy.
show you why in just a second. But first and foremost, I want to just start with the candles. And
But
what
still,
we've
just
seen
on
over
this
the
one
last few
call
weeks.
now it's a call
Very
debit spread.
well-defined trend here. We
My max
spiked
gain's
from
823, and that's
all
if
the
it
way up
closes
to
above that short call of
109.10
25.
in TLT, and then you can see this kind of consolidation where we've been
Kind of a cool
choppy,
trick of
sideways,
legging
overlapping,
into
rotational,
options.
basically holding and waiting for more information. Now we're going to get that more information today from the Fed. So I'd expect to
yeah,
see
I'm
some
telling you,
intraday
GME's fixed.
volatility and reaction to, as Don mentioned, a lot of
5
speculation
weekend
headed
SPY
into
put,
this
let it
one.
roll.
So just let's quickly show some of these areas of consolidation that formed over the last couple weeks and the migration of value 102, 103, 106. You can see it's moving higher at this instance. We're looking for
GME's grinding up. It's a little bit above VWAP now.
Breakout up and through 109, and then a new area value forming at a higher level. But
BBBY maybe double bottoming here.
What's going on as we move away from the hourly candles,
Got
looking
a
at the
MACD
bigger
crossover.
picture. Here's the daily. The move we just looked at, a small blip on the radar, right? When you're talking about the bigger picture, and it's somewhat counter trend. So 103 key in terms of significant
like
area
those
to
gains?
look at on the hourly,
How about
but also
these
here on the daily time frame
losses?
as well. Let me show you what I'm talking about here. And in this
Oh,
instance,
it's rolled now.
see,
You can't see it.
This is where we
Yeah, my short, or yeah, actually you can see right here.
Down, August.
Because I didn't close those cover calls yesterday and realized like $100 loss.
Sideways
They are
here
now
for the
down
most
7
part
grand.
after bottoming out in
So,
October, November. Now, do notice here a bit of a double top. Let's just real quickly
All right,
identify
GME's
this.
moving up
We've
here a
got
bit.
pretty well-defined double top that formed, which started and kind of established a bit of resistance up around 120 prior to the breakdown. And then in this instance, you can see these areas that I like to look for. 115, as I mentioned, significance around 103. So I think as we hold,
If you had
above
weeklies and they were out of the
somewhat
money,
bullish, right? If we break
I don't know
down
if you guys
below, it
did, but
opens
you
up a door
probably
for retest those
saw
October,
what,
November
3,000-4,000%
lows. Just
gain
wanted to point
on
out
that
here
move.
in terms of TLT as far as where things stand. Here you can
I was
see
thinking more,
that
but
double top that I just mentioned. Well,
I wasn't
came into
considering
play
that mine
right
would be
here. We're
deep in the
talking
money at
April,
that point,
May, spring
and
of last year. But look at this longer-term trend to the downside.
So April, so
again, I think if we hold above 103, that's significant. But just want to show you in terms of the weekly time frame, you can see that we've been in a downtrend.
So not crazy,
if we
actually.
roll over here, it'd be kind of feeding into that
on these,
narrative.
1500%
Failed
on here.
attempts to rally up. Double
Yeah,
tops,
the weekly
triple
23s, you
tops
get
in many instances
1500%.
that have failed. You can see them. This has been a pretty well-defined trend
From
lower
16
here.
cents
Possibly
to
just tested another upper extreme. If we fail,
$2.50.
work our way back down through 103, could open up a door again. Retest potentially 191 eventually.
There's 380.
All right, and last but not least, thank you for all of that, Ben. You know, I don't know if I really
So 16
asked
bucks
you,
into
Ben,
$380.
points, is that what you're
That ain't
thinking
bad.
today?
I think the Fed's going to try and do whatever they can
Spies
not to shock
bouncing
the
here
market.
some.
25
GME
is
consolidating
probably
nicely,
the
though.
safest call there.
Okay, got it. Don, let's get to the
This is
XLF.
unprecedented.
About these financials.
Calmly losing all my money over the
All right,
years.
yeah. So, you know, with the Fed, how do you not shock the marketplace in this particular case? Anything
Buy
they
Tesla?
say, anything
I'm
they
not
do,
buying Tesla
25
prices.
basis point
I have it
hike.
in my long
Look,
term.
They got to keep pressure
But
on
no, I'm not
inflation
buying it
right
here.
now. And I do believe
Unless you're looking,
that
I don't know
still
your plan
strikes
or your
and fear
financial
into the
situation.
heart of the XLF, the
For a little short
financials.
trade, I
That's
don't. Yeah,
exactly
maybe.
why I'm going to take a bit of a bearish
Maybe.
trade in the financials. First of all, you know,
You're kind of
you've
playing
seen
with fire a little
recovery
bit though. With after
in
the rally it's had,
S&P
it's
500. I mean, the S&P 500 ended last week.
you know,
higher.
move up.
This
You
week,
could, but
higher. I mean, the S&Ps are, you know, trading over the
it's not
4,000
looking
mark
good.
right now. Nevertheless, again, take a look at the financials. Take a look at like the
Let me
energy
fixed.
sector. All right, they're knocked out. They're down on the year. The
yeah.
financials have had a big
Cesar,
hit
you
to
can
them.
get a free
However, it
membership. You
looks like
scroll
it's
up,
gonna
click on the
fade,
green
and
box.
that's
Keys
exactly the
Ventura
way I'm going to
gifted
trade
everyone
it. I'm actually going to
memberships.
trade this one with the current trend. I'm going to use the April 21st expiration. I'm going to be buying the
One test,
33
133.
puts, selling the 31
Share.
puts. Just again, it's a $2 wide put spread for an 84-cent debit. Looking ultimately for the XLF to kind of continue this most recent downtrend. Pressure's on right now. The Fed needs to continue the path to fight inflation. What's going to happen in the banks? It's going to happen regardless if the Fed, you know, raises 25 basis points or not. Okay. I mean, that candle is already lit. So at this point, okay, it's about the fight of inflation continues.
Okay, and Ben, your thoughts here on the XLF?
Well, on the XLF, I think the significant level here is 303.
Hey, trader.
A minute ago, we were just talking
fixed
about TLT
as in
and
the stock's been broken for years.
Balance area 130, but let's take a look, and I'll show you exactly why. From 37 all the way down to 30, so you've got a well-defined trend lower. You've got
Potentially has been
migration
broken
of
from
value.
a
And
massive
again,
short
I like
position
to
that
look these
they were stuck in and
areas
had to
to
keep
try
rolling,
and
rolling,
establish
rolling.
which way it's moving. And
Whatever
in
the
this
case,
instance, it's pretty easily identifiable.
These
to
cyclical,
the downside. Again,
crazy,
we can
volatile, high
just kinda
volume,
spell 'em out here.
high
We're
price
talking
action
about,
moves
4 areas,
that happened
5
like
areas
basically
that I'm
clockwork
kind
for
of
2
looking at
years.
as I pull this
It's
chart
broken
up,
to me,
37,
and
36,
it's
every
being
dollar to
fixed,
the
meaning
downside, and then
that
we're
might be
starting
over.
to advance the moves here and some of the energy
So,
lower. Just recently bottomed out around 30, and you can see that there's been no
That's what I mean by
rejection of lower
fixed.
levels. We're
Neutered,
overlapping and
yes.
rotational around the 31 level. So again,
wild dog is
waiting
now
for that
neutered.
next imbalance to occur. Probably we'll see some activity this afternoon, I would assume, in terms of the Fed. I wanted to show you what's going on in terms of the daily, though, because that move we just looked at supportive of that longer-term trend to the downside, right? And going all the way back to
GDM, you already remember.
Last year, 41.70, all the way down to the October lows, but recently around this 30.31 level. And here again, you can see the significance of this 33 level, right? How we've been sort of teetering around it since going sideways, breaking down below 35 back in April, May of last year.
Trader, you're not a member. Cesar, Josh, you
you
became a member. Well done. I think there's still 2 left for you, Cesar, and you, Trader.
200-day moving average. Actually, let's look at the
Surf YouTube like a
time
boomer.
frame now that I think of it, because this is what
Don't
I
we
have
all?
here for you. I mentioned 33, but let's not get too married to any significant or any one price point. 31, 32, 33, I think is a significant area. Why do I say that? Well, you can see how we kind of bottomed out around this 30, 31.50 area. You can see how we also topped out here a couple times. So this has been an area, if you're going all the way back to
that short call is now down
2017,
6%.
2018, you can see the significance
From the
again
one
of
I
this
opened this morning.
31.50 area. And so watch that right now, somewhat a pivotal area on this bigger picture, upper extreme 41. Pandemic lows are talking down around 18, 19. So again, I think 33 is going to be a big area right now over the next couple weeks in terms of which way we go
Bull
over
or
the
bear
next
flag?
4, 5, 6
On
months.
this short time frame.
Look at what
made a bear flag and then just ripped out of it. To me, it's just consolidating. Holding up this level 41%, which is
Thank you
Tremendous.
both, Don Kaufman and Ben Lichtenstein. A great look at the big three today ahead of the
That's
Fed,
super
which, of
bullish
course,
looking
we'll
on
be
a longer
covering
time
very
frame.
closely at 2 p.m. Don Kaufman, co-founder of
Forrest Gump running
Theotrade,
as a
and our own
kid
Ben
and the light
Lichtenstein
braces
on
flying
those
off.
charts. Coming up, we're going to spotlight
More
the
like
fixed income
when you got the
investing
braces
fund to
on.
keep your eye on your radar.
Now I can't run
More trading
Now I can't run
360
anymore. He has
coming
to hobble around like the rest of the stock market. I don't know. That's a tough one to use as an analogy. So this time frame with extended hours, that's a nice bull flag. Jumper in a New York high rise happening now? No way. Well, you should stop him, Jack. Tell him he's loved. Alright, might look to get another. Grab another January call here on GME. Stairway to heaven. Roll up, click the green box, Jack Wolf. There's free memberships for any of you guys that aren't members yet. Don't insult Ace like that. Clicks but nothing. You have to click maybe the three dots at the top of the chat and say accept gift. Or the box. Enable gifting. You might have to be. If that doesn't work, it's possible your YouTube account has to be linked with a Google account. BBBY flattening out at yesterday's lows. Let's see that thing hold. You're holding 25 calls January 2024. Lots of shares. Nice, Tasty. Well done. Yeah, my Januaries are 2024, so. Oh, you said January 2024. And most of mine are 20 calls. And then I just rolled my 18 short calls to December 21 and a quarter. So, cap my gains. Fortunately. Foolish oversight yesterday. Top guy indeed, GDM. Yeah, it must be the YouTube Google link. Must be. Modify.
The growth that it potentially could have, but also the amount of expenses that it takes to onboard new consumers. So there's always been this back and forth, but Guggenheim is confident that this stock could be the beneficiary of this global music industry growing here in the near future.
And so thank you for that. I really appreciate it. As we see that the target is now 155. And it's at 129 right now. Kevin Green, thank you for that. Senior markets correspondent for the TD Ameritrade Network. Thank you, Kevin. All right, it's time to turn our attention to fixed income and fixed income investing. And for that, we welcome in for a discussion Jerry Powell, Senior Vice President, Fixed Income and Portfolio Manager at Icon Advisors. Good to see you, Jerry Powell. Thank you for being here. So we've seen so
You
much
fraud, you didn't fill it.
Your advice.
You just
I mean,
did
we're
that
seeing
video
moves
to
that
show the
we are
water
not
pumping in.
used to. For example, the 2-year sold off over 100 basis
Patch
points.
some spots.
Like something
Yeah, Powell's
reminiscent
massive.
of Black Monday in the 80s.
How many gallons
what
again?
What are you looking at now when you look at what's going on in the bond market and these rates?
Well, thanks for having me, Nicole.
2.5 days to fill.
I've got to admit, I kind of like these situations.
You should pour some transition or a little tranny. It's empty. Skate it.
First time.
Could open up a little skate park there.
My experience is that we always
charge people like a quarter a day to skate it.
Predicting when is difficult.
It's worth half puts whenever I be to hedge against my shares.
I think are some great values
buying puts
in the banking space. Kind of focused on the too large to fail guys.
I really thought about that.
Both their preferred stocks, investment grade rated preferred stocks, at yields approaching 7%, and then
29 cents.
They're fixed to float.
Yeah, I mean, if you want to hedge them, I suppose that's a
bonds. I just bought
fine way to do it.
Yesterday that will yield over.
I don't usually hedge shares with long puts, but that is a very normal thing to do.
Soon. So
that's kind of the main purpose, I think, on puts.
A tough
more than speculating of a downside and trying to enter a short position.
I think these are normally great opportunities.
Good. I mean, the IV is still crazy, isn't it?
I want to get to your 5-star Morningstar fund, but
it's kind of the thing with
some
hedging when the IV is so high, kind of sucks.
Shares, are we thinking like Bank America,
196?
Goldman,
yeah.
Is that what you're thinking?
Could always do covered calls too.
Spot on. Again, the two big.
There you go, Jack
guys,
Wolf. Well done.
You've been reading about getting the deposit inflows that everyone's been worried about.
Payment coming over, etc. Sure.
Are going to be survivors. Again, I can't tell you when we're going to get through this.
You don't know how many gallons. So yeah, we just have to do the math. How many gallons per hour your pump does, and then
Treasury,
figure out the hours. But yeah, by the looks of it,
has vested interests are working hard to.
That thing might be like 75,000 gallons.
This.
Okay, tell us all about the Icon
Maybe
Flexible
more.
Fund, a 5-star rated over at Morningstar. Tell us a little bit about it.
I bet around there though.
This is the way to go.
Well, it's a little bit.
We'll check. Yeah, how did you do it?
We try to do what I call value investing.
So do you just do
that can be
what you were talking about was the like the UV light? That's all you do for the water when it comes in?
It's trying to do things that
or how do you do it? Do you pump it, or once you pump it in, you run a pool pump and like circulate it, or you just leave it and dump it?
We're all really smart out here. You know, there's 200,000 CFAs now. My charter is 6,000 something. So the world's changed a lot. So I need to do the way I think I beat them is by doing the things that they can't do.
GME is holding up really, really good, guys.
I focus a lot of time and energy.
Maybe a fixed GME is better.
Bond offerings. I just bought something this morning that's a $300 million deal.
You can also figure it out just by the size. I mean,
big guys
measure length and width and then the depth.
A secondary offering of 1 or 2 million.
But for you, it's probably easier just to look at the gallons per hour on your pump and then multiply by how many hours it takes to fill it.
Versus a
Yep, GME holding up nice, beautiful consolidation.
The kind of liquidity that the huge guys all need. I spend a lot of time arbitraging closed-end bond funds. Once again, those are way too small for any of the large competitors to spend their time in. And most of my small competitors don't understand that market. I've been involved with that since the late 80s. So we try to capitalize on my extensive experience with this. Years ago, Morningstar named me Fixed Income Manager of the Year, and I think that we're able to find a lot of interesting things. Yield over 6%, so it's attractive to people for that reason too.
Yeah, as you look at the historical performance and the situation that we are in now today, and the Fed has to make a decision today, what are your takeaways from what the Fed may do today and where rates go, either near term or long term? I know you're talking about long term duration and what you expect.
Yeah, no surprise. That's all changed a lot with the last 2 weeks. I had been in the camp that thought they might get more aggressive with a 50 basis point increase. I'm now in what I would call kind of the conventional norm. Everybody seems to think, or most people seem to think, 25 basis points is coming at us. I think they'll do that. I think they'll also make it clear there are many tools outside of interest rates to address the banking situation, and that they're cognizant of that. They're going to tell us that they're going to watch the economy closely. What's going on in banking is undoubtedly going to lead to some slowdown. There will be much more caution in the lending. We were already starting to see that, but I think we're headed for a recession, even more so than I believed previously. I'm not sure on the timing. I used to think it was going to be in the fourth quarter. It may wind up slipping into early 24, but I think a recession's inevitable. Makes me cautious on high yield bonds. I think the spreads could widen there, probably at least 100 and maybe more. But that's what I think is probably ahead of us.
I hear you. I understand. Jerry Paul, wonderful to see you. We'll prepare mentally for a recession either late 2023 or into 2024. I think a lot of people want that answered. Jerry Paul, Senior Vice President, Fixed Income and Portfolio Manager at Icon Advisors. Thank you. Coming up next, it's time for the disruptors, Arista Network. Well, we're looking at these shares, which are up nearly 40% this year. And George Sillis has all the details. Coming up next here on Trading 360.
Let's walk through how to analyze a company's financials on thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download. By the Numbers provides balance sheet information and other fundamental data. Company Details provides summary.
All right, GME's coming down a little bit.
And what drives the stock.
Still just consolidating this range. Good to see. Volume's crazy high. Oh no, not your ads. Yeah, I'll play the Fed meeting at, well, 2 o'clock's when the report comes out, and then 2:30 is Powell, but yeah, we'll I don't really need to look at the report, just see what the market does. We'll catch the headlines. And then we'll listen to Powell at 2:30. Sorry guys, eating a little bit of life. Literally and figuratively. I fill it leave for 2 weeks with ionizers and chlorine floaters. Solar filter? Never even heard of a solar filter. Ionizers, those just float around too? You're not ever circulating your water basically, right? You just leave it in there. Yeah, I saw some screenshots from GME Meltdown. I didn't seem like it was even real. And yes, SHF, the delay on the 10Q or 10K is very interesting on GME. I can't help but be excited for it. Even though I'm not necessarily thinking it's gonna have anything to do with BBY, I'm just excited for it on GME and excited for it if it is, of course, something that caused BBY to rip. GME Meltdown is just like an anti-GME subreddit. 40 million volume. Yeah, 45 million today. That is a lot. There you go, Tommy M has become a member. Thanks, Papa Ace. We haven't had that. Let's see, 57 million was the last. That was in May. So I think we'll probably beat that today, as it is only 11:45.
And with the shares up nearly 40%, this call from the analyst of 200 at Wells Fargo and overweight. What do you think? How would you go about trading this?
Yeah, so the thing about trends, Nicole, I mean, stocks are either in a trading range or a trend, and this strong trend that Arista Net is demonstrating could continue to the upside, but there's also the ability or potential for some short-term softness. So what we could actually do is play a trend continuation trade. So in this case, instead of buying long calls, we're going to use a diagonal spread. So we're going to use short-term calls to finance long-term calls. So in essence, it's a two-legged trade. We're going to be selling an out-of-the-money $180 call. This is now in April. And then we're going to use the proceeds from that to buy an in-the-money
so just a
contract, which is further
a pool
out
pump that
in
runs
time
on
with
solar.
53 days. I'm sorry, 58 days expiration.
I'm assuming it already has a
And
pump.
It's more
You just need
expensive
solar panels, right?
155 call. So again, selling the
Ionizers float.
180, buying
Ionizers
the
are
May
solar?
155, and altogether,
Like little floating
this
solar panels, or
structure would cost
I
a
don't
trade
know
around
what those are.
$17 a
I've never
share
heard
or
of that.
$1,700 a contract. So just
It
considering
was you that was telling me I
the
should get
155 call compared to the stock price,
ionizers.
we're spending $17,
I
but
think, or
$13
the
of that is already
UV filter
value. So
that
the
you hook
sweet
up
spot is
by your
between
pump.
now and 30 days for the stock to actually continue to inch higher but stay below 180, at which time the 155 May call is unencumbered with potentially unlimited profitability.
Hey, great swimming pool is drinking water.
For all that, a good look there at Arista Networks and a great trade. Thank you, George Sillis. Every day with our disruptor.
Pool pumps, yeah.
Our panel takes a look at those.
They do. I mean, they don't use much. It's just because you have to run them so much. It's like your fridge.
You'll want to know which names are actually.
Was that Hyundai? Oh, Tesla. Your fridge doesn't use much, but it's just always running, so it ends up right. So it's not that bad. Especially the variable speed, you can just run it on low all the time. Use less power. Drinkable if you want to get a bunch of rocks and minerals in your gullet. Banks back to falling? Not quite. FRC is just kind of consolidating. But I do have buying power now. I thought I did. Yeah, I could do some put debit spreads on FRC. I might. It's not really like bounced yet, but let's use our little screener option thing. What's that called? Oh, option trade. This is a fun one to use to get spread ideas and stuff. So FRC, bearish. Then you put in max return, max chance, a date. You do April monthlies. I don't know if that's enough time. Wow, it's still saying short call, just naked short call. Electricity down there is more expensive? Huh. Surprised it's not doing put debit spreads. Just a long put with the IV being that high is kind of strange. Yeah, I'm not going to do any of those. I would do a spread. We had to go till May. Do the long leg of it in the money and the short leg a few strikes out of the money. Just keep it safe. Or go down a few strikes. Let's see. Widen it out. So 100% return, max profit on a 12.5, 11 put debit spread for May. Basically, it costs 75. Max profit would be 75, and that's if it's below $11 by May. That's crazy. That's just like intraday moves on it. It's at 11.50 just 2 days ago. Wow. Yeah, GME's holding up very strong. Strong consolidation. Nothing to complain about there. I'm anxious to see what it does if it gets over 30. If it does revert back to its old childish adolescent days, or if it's now a former meme stock.
Phenomenally well, and they do have not only maybe
Old
a cost of
and
capital
wise.
advantage, they have a cost advantage. Their battery
this
technology,
posh,
their
positive
battery
EPS,
production,
and
the car
fancy
design and
free cash
production,
flow.
the build out of the factories. They do have an incredible advantage, and they've had it for some time. And it's almost shocking that the global auto industry has given Tesla an entire market to themselves for 10 years. But
GME coming down a little bit to
GM is
VWAP
going to
there.
be an incredible
I haven't seen any
competitor and
rug
also
pulls
has
or
a
any
lot
like
of
shorting, I would
advantages.
say, on GME
They have
today.
invested tremendously in building out their battery and the power supply chain, and they have a infrastructure of 3,000 dealers, which are going to be very important to the future of this ongoing electrification, as far as charging, as far as service, as far as software upgrades, as far as customer education and customer interaction. I mean, the dealer network is a valuable component of General Motors.
Phase up 8.6.
That I don't think should be
Laser,
discounted.
taser,
What do
phaser.
you think, Garrett? Because I know you have a sell on General Motors.
Yeah, I mean, we're skeptical.
Proterra
They'll finally
still
be
on a
bringing
bounce.
some of these
It's not bad.
long-awaited Ultium EV models to market.
Zim.
The problem is really the timing. We think they're
Look at that cup
you know,
and
too
handle.
late to the
Didn't really
market.
play out, actually. I remember us
You know, if
looking
you
at it
look,
back here.
EVs accounted for 6%
Really just had a little move from
of
that
new
handle.
vehicle sales last year in the U.S.
Huh.
You know, 2/3 were Teslas. So you look at the non-Tesla EV market, it's 2% of all new vehicle sales in the U.S. And
So they pull crazy
you know, a
head
lot
and
of
shoulders
new
out.
market, new models are
Like, I don't
coming
even
to
know
market,
how they could.
and we see a situation where
I never look for
it's
one.
really the market's
the
very oversaturated in the near future, in the next 1 to 2 years. And I think, you know, with consumers having so many different options, it's going to be overwhelming. And while we think the EV transition is real, it is going to take time. And our base case is that in the year 2030, 30% of all new vehicle sales will
Jerome's
be
not going to
EVs.
confirm
So
Powell. He's going to do 25 basis
time.
points. Market will have some volatility and it'll probably keep rallying after that.
It's interesting because while Tesla seems to be on a great growth path,
Yeah, market is waiting for FOMC.
Could take over as a leader in all vehicles. What about Rivian? And I know you have a sell, Garrett. Ivan, this is one that you have a buy. And so there have been a lot of people who've been really excited about the new pickup truck, for example. Tell me a little bit about this one.
Why are they so quiet
Can
right
they
now?
make it?
Sure. Is that for me or Ivan?
That was for Ivan.
Oh,
yes, I think that they look, the sweet spot of the auto
come
market
on.
are SUVs and
What's her name?
pickups, and Rivian has already a leadership position.
Give me a little red candle through
Ford
the
has
WAP.
Lightning available now.
Believe it or not,
GM
SPY all-time
has
high.
several pickups that are coming out at the end of this year. But
$47 million out of
Rivian has
nowhere.
plenty of cash. In fact, their cash right now
I
exceeds
mean,
the share price.
after good earnings, you can kind of expect a elevated
they're
volume
well-funded.
or even
They're
bad
ramping
earnings.
up production.
But
They had some starts and stops the
yeah,
way
it's not.
Tesla
I mean,
did early on as well. And I think maybe the market's just less forgiving now than they were.
I don't feel like that's
for
very
Tesla
abnormal,
in its
honestly,
start,
for what
but
we saw.
I do think Rivian is going to create a very powerful niche.
We just
for
haven't
themselves.
seen an earnings move on
And
GME
It still is
like
also
ever.
about trucks and SUVs, and you're going to see
Like
GM
a move
and Ford
from
are going to
earnings.
have a significant presence there as well.
It's
And,
never beat.
They have a
Let's
large
look at it. I'll
customer
show you.
base. And I
Analysts
also
have
don't
always had
discount
lofty
the
expectations
dealer
for
base,
us
which is
as
going
long
to
as I've
help
been in
sell
it.
cars and help
And
educate the public on this
so
transition.
it's never been anything like that.
There was an article about
And it just so
Rivian
happened to do
having
that
flush
on
with cash. They had $12 billion.
this
They burned
earnings
through
where the
$6
market
billion,
maker
and
was
that,
pricing in
analysts are predicting that they're going to burn
a very
through
small
another
move.
$6 billion. So it's a tough business. There's a lot of competitors. Final thought on some of the other names
And see what
here.
happens? That then it whipsaws. That screws everything
you
up.
had Lucid that you once
So this is the
liked,
earnings. They
more
haven't shown it
believe
yet, but
now.
the
Other
implied
names
move was
like
11%.
Polestar and Neo
The
and
actual
XPeng
move
and
was
anything else,
50%.
Garrett, that you can
So
add.
totally beat the market makers on that one.
Yeah, I mean,
When this
the
bar
top
populates, it's
name
going to be
on
a
our
big green
short
candle up to
list
here.
is Fisker.
But all these other times it did
We have
not
a sell and a $4
beat.
price target.
Never beat
At these
expectations.
levels. And
One time it
the stock's
did
trading just below
beat
6
expectations
or
just to the
right around
downside.
$6 here. So, we see that stock in right
Yes,
around
I mean,
$4 12 months from
with
now.
that big of a beat,
This
you're
is
going
a
to see
company
huge
that,
volume.
we don't see any
So, but look what it's
scenario
already
in which they're
doing for
not
the
gonna
next
have to
earnings.
cut their production guidance for the full year.
IV's pumped so much.
They just started
And now market
producing,
makers are pricing at
their
22%
first
for next
model,
earnings.
The Ocean, which is a SUV.
Because all the IV that got pumped in from this
November
earnings.
of last
They
year.
put that in before they even put
still
the,
haven't
the
started
realized
first
move from
shipments,
this.
and they put out production guidance, over 40,000 units for this year.
So
we just don't see
yeah.
a scenario in which they actually can hit
The
that
Theta
guidance.
Farm
And as we saw
might
with
welcome
Rivian
GME back into
and
its
with
arms.
Lucid last year, as the year went along, the investors learned that they just could not hit these
Cash
lofty
good
production
puts
targets that they
on
put out,
GME
and so we see another
could be a
similar
good play again.
situation with Fisker. So.
All right, I have to leave it there, gentlemen. Garrett and Ivan.
Actually not
Wonderful to see
crazy,
both. Thank you very much.
108%
Love
on the
talking
put
about
side.
autos. Garrett Nelson of CFRA and Ivan
What in the
Feinstein,
world?
Tigris Financial. Thank you. That's going to do it for Trading
Yeah, the
Live
IV is
60.
not
I'm
crazy.
Nicole Petalides. I will see you 2 p.m. Eastern Time for Fed
Oh
Day.
my goodness, the
Fed
IV
announcement,
crush
the
is
watch
real.
list. Fast Market is next.
Dude, what are these contracts? Yeah, weeklies are under 200% now. Yeah, the IV is still quite low. Kind of need a sustained move to continue to keep the IV high and even pump it more. Next week's at the money are 140%. You go out to April monthlies, it's 115%. Not crazy at all. You only have to go out to May to get IV in the double digits back to 99, 98%. Wow. Yeah, I need kind of a sustained move to pump the IV. Keep going. People with calls. I mean, yeah, like I showed you, the biggest call I saw was 1,500%. So I can show you what it was, but this should not motivate you to buy calls. You start with options, start with selling stuff, is what I do, and I still do that. That's the only time I hardly make money on calls or puts is selling them. Where was it? I think it was the 22s, maybe. Well, so here's the 22 strike on the weeklies. Basically, every $22 turned into $320. So, say you want to put $1,000 in, that'd give you 45 contracts. And that's just what the price is right now. This morning it was $375 or $500. We'll say $400 to be safe. 45 contracts times 400 would give you 18 grand. So you'd have turned $1,000 into 18,000 from yesterday close to this morning at open. That's why people lose all their money with options. Oh, how do I think GameStop will go? Depends on your time frame. Yeah, just oppose. He's definitely swinging some large amounts. Yeah, no, he is. He does safe options though. He said he lost like 174K on weeklies or half of it. But yeah, now I mean, with the larger amount, it's just good risk management to you're gonna trade with that large amount. Just increase your probability of success. Get options that are at the money, in the money, and get tons of time. And it's not going to move 15,000%, 10,000%, even 1,000% most likely. But it'll move 40% or 50% or maybe even 100% and take your profits. Yeah, well, if it breaks 30, we'll see if it wakes back up again. There are some memberships left, guys. Ace Ventura gifted memberships to all. If your name is Gray, you can get a free membership. Just scroll up and click on the green box.
Expectation 25 basis point hike here. Basically locked in at this point. It's all going to be about the commentary after it from Fed Chair Powell, but
it's a good idea to restart, reset.
After a two-day rally,
you can even use a new brokerage.
Well,
can I interest you in a Webull link?
Today is just pure dry powder. I think there's big 1-minute candles on our horizon as they'll basically dissect everything Jerome Powell says. Remember, he's been quiet through an entire banking crisis, so
yeah, that's right.
Your brother going to have a lot to say today. Question and answer is probably going to be quite extensive. Everything that you see in this market today, with the exception of maybe a little bit of news in Boeing, a little bit of news that we're going to talk about in Nike, everything else is drifting. You know, we got some high-profile names: Microsoft, Apple,
10K
NVIDIA,
on 25 weeklies with this,
all drifting to the upside, but that could change in a second, Tom, as you know. Yeah. So I think there'll be some volatility at 2:30 Eastern.
I want to see some screenshots.
Eastern, but
I gotta see it.
Who knows where it'll all be? How Jerome Powell
that was a
sets the tone
stupid play.
For the rest
I gotta
of the
see.
week,
I gotta see it.
And until the next meeting.
And we'll have a bunch of questions afterwards. Also.
Okay.
This is Webull. Yeah, that's what I use. I mean,
I think will be.
You know, I use E-Trading, Webull, Fidelity, TD. But yeah, Webull's pretty nice.
I have a curiosity on how they'll address the banking problem. Will it be, well, there was a problem and now it's dissipating, or will they be all over it? That'll be kind of an interesting thing.
UI making a move.
Right. And you mentioned, tech leading this week.
Good one, Emmanuel.
So far
Good
this
one.
year now. So it's severely outperforming.
Real freaking funny, man.
From Meta Platforms, NVIDIA got some price.
I don't post it. Well, don't post it then. Just DM me. I don't need to share it. I just want to see it.
One of the stocks you mentioned, Kevin, Nike, down a little bit after their earnings. It's bringing Caroline Wood, senior markets correspondent here on the network,
to help us break this.
It's not on the
down.
browser.
Seemed like it was a pretty
Maybe
good
their desktop
report
version
on the
is
top and bottom lines, Caroline, but
they're
margins
so
still struggling
complex,
at
like
this point.
so hard to look at. I don't know.
Hi, Tom. Yes, this is a margins and an inventory issue, I think, that's really dragging on shares. Nike shares off about 1.5% today, really dragging on the Dow despite the earnings beat. As
I gotta see your list. You gotta DM me, man.
Those numbers, EPS of 79 cents, easily
I'll
beat
keep it private.
expectations of 52 cents per share. Revenue rose 14% to $12.4 billion. Another beat there as well. They saw double-digit
Yeah, you
gains
freaking
across
did,
a few
jerk.
segments. North America sales were up 27%. Europe, Middle East, Africa up 17%. But China still seeing weakness. Sales declined
That gas is moving
8%
up a
year
little
over year
bit.
there. Management noted that continued promotional activity to really clear out excess inventory weighed on margins. As such, gross margins came in at 43.3%. That was lower than the year-ago period, also below what analysts were expecting. Inventories, meanwhile, were up 16% to $8.9 billion. In terms of outlook, Nike said it will provide full and complete guidance next quarter, but they're continuing to see uniquely strong consumer demand, but also said that they'll continue to take a cautious approach to business planning given all of the macro headwinds. They now expect fiscal 2023 reported revenue to grow high single digits, an improvement from mid-single digit guidance in the prior quarter, and for the fourth quarter that translates into flat to low single digit revenue growth. Not enough, though, to boost shares. They're down about 1.4%. But keep in mind, the stock had been rallying this week heading into that report. It was up about 4%, so now it's only up about less than 3% so far this week.
Caroline, you're exactly right. In a discretionary name like Nike, this is a margin and inventory story. But the good news is 16% up in inventories. The last quarter, it was in the 40s. So they are making headway. There's actually probably positive news on the horizon, but they got to get through this inventory. Just like a lot of discretionary companies and a lot of discretionary inventory, they've got to get through this as fast as possible to get those margins back up, correct?
And I think that their weak spots there, the markdowns pressuring the margins, China, there was some positive commentary about all of those things. They said markdowns are transitory costs. They should begin to see the recovery of those beginning in fiscal 2024, specifically saying with strong
everyone's trying to
traffic
dump
and retail
inventory.
sales growth and reduced inventory buys for the spring
All
and
those
summer
bad
seasons,
earnings we had,
are increasingly
supply
confident
chains
that we
and
will exit the year with healthy inventories.
I'm trying to
across the
stack up on
marketplace.
inventory.
That, of course, should put less
They
pressure on
missed
margins.
expectations.
In
Now we're
terms
gonna
of
get.
China,
We
they
might
said
see
the momentum
a
there
lot
is
beating because they're
growing.
just.
They said they're confident the fundamentals
Have all this
for
excess
growth there
inventory that they're
remain
able to
strong.
sell.
So not enough to turn the
But I
stock
feel like
higher
GME went
today.
further with their
That being
inventory than
said,
most.
analysts have become more bullish. We saw Barclays upgrade Nike to overweight from equal weight.
Cost is
boosted its
holding up
price
well,
target to
7%.
$154, saying Nike significant
EasyGo's
beat
been
is
rallying.
evidence of a broad-based brand
23%
strength
on
in
here.
spite of a weakening macro backdrop, of course. Says Nike
Look at
has
that
now
volume
posted
yesterday,
2
wow.
consecutive quarters of constant currency growth in China
GNS
with
is down
accelerating
6.
trends exiting February.
Had such a nice bounce
Barclays
yesterday
inventory
on that
model
level.
predicts a positive sales to inventory inflection actually in
It'll
fiscal
bounce again.
Q4. Also got a ton of price target hikes, including
With
UBS now
XXII,
at 155,
down
Goldman
5.
Sachs is at 148, TD Cowen at 142, among
Huh.
others. They're all in the buy camp. On the other hand, we did see a few price target cuts, but still bullish calls. JP Morgan lowered to 152, Wedbush lowered to 139, so both higher than where it's currently trading. Just scaling back expectations, but still looking at this as an outperformed stock. And really, when you take a look, almost 70% of analysts are bullish on Nike right now with a buy rating or equivalent.
Yeah, not surprising on that. It has rebounded pretty significantly from those lows that we saw a few months ago.
In the low 80s.
But continuing that work through on inventory levels. All right, thanks to Caroline Woods, Senior Markets Correspondent, here breaking down the news post-earnings on Nike. Now let's bring in Alex Coffey, Senior Equities Contributor here on the network. Alex, I wanted to get your take. We got the Fed coming up. They're walking
Just thinking
that
about it,
tightrope, right? And it seems
my
like to
roll,
me that the
I didn't
rhetoric
roll
on
very
both sides
high.
of this, do they not hike? Do they hike?
I rolled as a
The,
21.5, so I'm
CME
stuck.
Watch
Dang
tools
it.
predicting over an 85% chance
Totally
that they're going
stuck
to hike
there.
quarter of a basis point. Do they go 50? I just think that at some point, it's been pretty unanimous on the votes for interest rate hikes so far over the last year. I think this might be one of those meetings where there's going to be some dissent, and there's going to be some members that won't want to hike at all.
Yeah, that's certainly possible, and that's one of the lines where you could see a little bit of market reaction before we actually hear from the Fed chairman himself. Another piece where there could be a little bit of volatility inducement could be in these subtle adjustments to the statement itself. There's been language like ongoing increases will be appropriate. JP Morgan, for one, thinks that part of the statement will be adjusted to not include that kind of forward-looking sentiment. And so when I look at this, I think that the focus on, is it 25, is it nothing, is it 50, is it a cut, all of that is sort of not the real takeaway.
Looks like consolidating.
We have a market that is now pricing in cuts for the second half of the year.
But this is just going to eat away at
essentially to be the end of the Fed
theta.
tightening.
SPY's coming down here.
Federal Reserve that has said nothing along those lines. Granted, we haven't heard from them in the
Yeah,
last couple weeks since some of this banking turmoil has
he ran
up.
for like California governor.
Two kind of really big factors really far apart. There's either going to be a movement towards the market.
Depends on how much time you have on it, what the strike is, your financial situation, what your plan was when you opened it, Gene.
What the Fed says. Or the Fed's going to
potentially the best time to sell it today was right at open or near open. You could still get a rally before end of day.
All of those things can be where the market actually has volatility in its response. So I start looking at, what is the expectation? What is the market pricing right now? Well, we're probably going to get 25 basis points. 1 in 10 happens, but
that's when you would drop a video about an earnings is right after earnings.
And then it's going to be, how does the Fed navigate its messaging to sort of
4,
work its
14,
way
13
towards the
and
market?
a half.
Because the market's pricing that this
You're
is
way
the end.
deep in the money.
We see that in gold. We see that
That's
in Bitcoin.
good. Yeah,
we see
you're
that
safe.
in yields. We see that in stocks. We see that in the NASDAQ in particular. So if you don't get a message like that, that's where the volatility
you've got time.
Yeah,
I mean,
you can get dissenters in
are you
both
wanting to get back
today.
into a play, or you just want to just take profits? Or you want to like sell it and buy another one?
Right. Because
imagine that. Dissenters on both.
Think about this. The Fed is
relocate
right?
definitely needs to be in the money crew.
Sitting
3.6.
Yeah, 3.6%, and then you've got what the other side of it. Inflation's running hot, right? So if you just look at that aspect,
there's not going to be much. I mean, IB's going to maybe come down if it keeps consolidating, but
at what point does the Fed have to look at situational?
If it drops, you're going to get some
out there, and the banking crisis being at the
forefront
IB's
going to come out.
Is that is that something that the Fed should
the IB's
address
still
a little
pretty
bit more?
low, actually.
There's certain situations where, hey, the dual mandate is what.
If you have a dollar in mind, just put an order to make $1,000 and
situational issues
set it for good till canceled, and then just leave it.
I think the people looking at this market right now, Tom, should be looking
at if you had a dollar amount in mind you want to make, then
reignited on the upside again
just
this
set it
morning.
And forget about it.
You're looking at Jerome Powell, who's got 2 mandates.
Maybe it'll fill today, maybe tomorrow.
5 or 6.
You've got enough time.
And he can come out and say and be honest that the Fed raising interest rates did not cause a bank failure. The bank not hedging their risk caused a bank failure. It's not the Fed's fault that they over invested. 57% of their assets were invested at SVB and not hedged. That's not the Fed's fault, that's their fault.
You're right with this, Kev, but what I would say is it's the knock-on effects. So yeah, we know the psychological effects it can have on bank depositors, but credit is tightening as a result of this. Right. That is inherently deflationary. So you have this tightening effect taking place. That's sort of doing the Fed's job to fight inflation. The market has been saying that deflationary money was coming in for quite some time.
Moving down here a bit.
We see that in the yield curve inversion.
Were you part of the money crew? I don't remember.
Doesn't necessarily just preempt recession. It says there's this anticipation for a lower need of interest rates in the long term than where they are right now. But I think the big thing is going to be, we actually don't see any dissenters because the Fed's going to want to also look like they're on top of this and they got things under control, not to scare the children, if you will. And if you got dissenters on both sides, it's going to look like they got no idea what they're doing. The biggest takeaway is going to be how many times does Jerome Powell say that they got everything under control and their new tools are working perfectly. Whether they are or they aren't, that's going to be the message. The message is going to be is fine,
no price improvement.
Not inflation's running.
You have the price improvements up 36%.
And ring
now
all
it's
the alarms
buyers and
and
sellers
wave all the flags.
their
They're
positions.
Trying to downplay the situation, not upplay
the fact that it's holding, consolidating is really good.
The rhetoric
SPY's
from
moving
Fed
down
Chair
here.
Powell, he's usually pretty good about his.
It's winding
theme.
tighter and tighter.
Does he turn a
Very
little bit
possible
more
we get a
dovish?
move before end of day to
Does
the
he
upside.
bring into play
At
more
least up to
of
the
bank
pre-market
turmoil,
highs and
banking turmoil that
maybe
we
past
have,
it, the
which
30.
should appease maybe some of the
I mean,
market.
this thing could still go nuts
if you
today.
look at segments of this market, you mentioned at the beginning, tech this month, Amazon up 6%, Apple up.
Being that it looks like a fixed stock now, they're not
Meta
crazy
Platforms up
short attacking it and
17%
rug
so far
pulling.
this month. That's kind of pushing against everything that's that we're
Yes.
worried about in the market as
Market's been
tech
over for like 3
continues to
hours.
chug along.
SPY's coming down here.
Is a bet on the future and an improving economy, that we're late in the game in terms of slowing down the economy and higher interest rates. I think that's what large cap tech is telling you. That doesn't mean we're over, but we're late in the game. So I think that's why people and Meta, frankly, you know, they keep laying off people. They've actually had good news and good upgrades. So I think there's people making long-term bets on some of these large cap tech.
Yeah, Meta up to 10-month highs, Apple up to about 6-month highs. Nvidia, I mean,
Yeah, I
you've
could
seen that
close the
stock
whole.
on a
That's stupid, but
year
I could close the whole
basis,
position and make like
it's
1,800
basically
bucks.
flat now, up 85% so far this year. Alex, when you look at that, S&P 500, the Apple and Microsoft make up over 13% now
right,
of the
actually?
S&P 500.
It's
So
confusing
where
'cause
those
TD
two
doesn't group
stocks
these
go and
together.
Some of these other mega cap names,
They
you
might,
have
but
to
I
keep
don't
an
have it
eye
set
on
up for
those
that. Let's
because
see.
they're such drivers on the overall market.
Well, and they're closer to, if not greater than, 50% of the NASDAQ 100 if you start looking at the mega caps as a group, you know, your kind of top 5, 6 names. And it makes sense. Not only are these potentially companies that will benefit from lower rates or an easier monetary policy cycle, credit conditions, financial conditions, however you want to describe it, but they're also generally companies that have very, very strong market positions in their said markets, and many of these companies.
Yeah,
operate in many
848. I could
markets.
just get out of the trade altogether.
Alphabet, pretty strong in search and in content through YouTube and advertising. I mean, Apple dominates smartphones and things in that nature. Amazon, pretty big cloud player, pretty big e-commerce player. I think we both or all three agree on that. But what do they also have? Tons and tons of cash.
Yeah.
All of these companies are flush with cash. So if the biggest concern right now is that money's not out there, well, why don't you flock to companies that are sitting on, you know, giant treasure piles and have just been waiting for opportunity?
Right. You make a great point there, where you go where the cash is during times of stress here, Kev.
There might be something substantial, yeah.
You know,
For them to delay dropping the 10K because it's annually.
Discretionary items
Not
anymore.
anymore.
After hours
Almost
yesterday, yep.
staples for a lot of consumers. Then search. Are you going to stop searching if you don't have cash? No.
You want to see stress?
No,
on a
so the
person's
10K hasn't
face?
dropped
Take
yet.
their iPhone away from them.
I think they have.
You'll
I don't know.
see
I think
their
they have a
stress
couple
levels go
weeks
up.
before they
That is
have to
no
drop it.
longer discretionary.
Release it.
That is a staple.
I don't know.
and
They're
I
not
think,
dropping
those
anything.
are, you know, we're getting a lot of headlines from the banking sector and some of these other sectors
But
that are
yeah,
that have caused.
It'd
the
be a little
turmoil.
cruel if
But at
they
the same
were
time,
late
if you
and
look at,
there wasn't anything
you know,
on there
these
that
mega
was
cap
substantial
techs
or
that are
new.
leading to the upside and the overall
6 days from end of
market,
fiscal
and
year.
they're still,
That puts
they're
it like
still
2 weeks from
relatively
now, though,
healthy
doesn't
at this
it?
point. There's the Apple chart up there, back up to 6-7 month highs there as people are plunging money, because I think investors are looking for places to put cash
29th?
right now, and I think the big tech is taking advantage of
Are you
that.
sure
right
about
now.
that?
Healthier balance sheets, perhaps a healthier outlook.
SPY's
for
moving
a lot of these
down.
companies.
GME is
But
moving
we're
down a
gonna
little
turn to
bit.
the housing market after this break, guys. We're going to take a look at KB Home, which is up around 16% so far this year. We've seen some good housing data recently. We'll take a look at that when we come back. Fast Market.
Post it in media. Okay. They have until the 29th. Yeah, I mean, you don't have to. It's exciting to think that there's something special in there. I'd like to think it's not because they're just lazy or slow or negligent, and that there's something that they're going to announce in it, because they've, in the 2 years, 3 years I've been watching their earnings, I've not seen them release the 10Qs more than 5 minutes apart from everything else. So I'm not actually stuck on this spread, because if I could roll it down, I could roll it down if GME does just come back down. It's just a weird play now. Overlap GME and 10K is interesting though. Overlap as far as their earnings? What do you mean the overlap? They're buying Microsoft. Oh, the overlap with the reverse split. March 29th, is that when the vote is? Or it's 27th, I think, right? Or no, you have to have the shares by the 27th on BBBY. So potentially the vote will be... Potentially the vote could be before that 10K, that's true. I don't know how much time's gonna go by from when you have to have the shares to when they actually have the vote. I wasn't assuming it'd be the same day or necessarily even that close in time. Do you think the vote will also be on Monday?
Mortgage applications.
Mortgage apps, 3 weeks in a row, strong. And that shows, Tom, what happens.
I kind of bounced on the support here, 398,
when rates get
22.
Q forms, right? And
no, the vote is not on Monday. That's the thing. They haven't given a date for anything. The whole reverse split thing, it could be them just preparing and having the option, or it could be that as well as them. There could be some sort of posturing going on here, and not a bluff, but yeah, it could be that. Because they didn't give any date for anything. They didn't give a date for a reverse split, they didn't give a date for vote. The only date they gave was you have to have shares by this point. So
when interest rates move,
if you have shares on margin, if you're short shares, whatever, you have to recall those shares to be able to vote.
All different ways.
So
housing is affected quickly.
Yeah, that's where
the
you could have some price action even before
a year ago
Monday.
Was under 4%.
This week
potentially.
Came down from 6.7
Not sure how much that would cause, but
Yep.
once there's a vote and if it's positive, then I think we maybe could see some movement like we've seen on other reverse splits lately.
Pent-up demand in this space, and KB Home's one of those names that they're trying to do the real time.
So the vote will be at the shareholder meeting. It'll be a shareholder meeting to vote, but they haven't announced a date for that. The only date they gave was when you have to have shares by.
You know, there's affordability.
So basically, if you buy shares after next Monday on BBBY, you will not be voting on the reverse split.
500,000. That's just above first-time buyers or re-uppers to the next level. So
it was like a month before.
KB Home.
Well, just the home segment and a real estate investment in general, particularly if you're a first-time home buyer.
They might not do it, and they clearly said that in that whatever that statement they released too, is that they have the right to not do it if they don't want to. They don't even need to say that. I don't feel like, but they did.
That is for the better part of several years, and so while
we're
sensitive to interest rates, we're probably going to go ahead and buy that home if we finally get to that, kind of bench or that checkpoint where we're able to do so.
They've already hit the likes. They can't hit the like anymore.
This is not just where the rate actually is versus where it was, but what the prevailing sentiment about where they're going is. If rates were at 3%, they're now 6.5%, and the feeling is that they could go to 10. That 6.5% starts to look a little bit more attractive than if you anticipate rates are going to suddenly go back to 3%. Again, I'm not providing any context on where I think mortgage rates will or won't go, but if you feel in the near term rates are going to come down lower, you're probably going to wait. But if you feel like they could be higher any moment, you're probably going to be jumping on whatever the rate is, even if it's not as favorable as it would be a little bit long ago. So they are sensitive, especially the home builders, especially the ones that are
hour and a half until
as needed,
we
like
know
KB Homes is. They're not just building these houses so they have the inventory, so when the demand comes, they're building them as the demand comes in. They're going to fluctuate with things like rates a lot more. But when you look at this, I still think for the most part, especially the ones that are more in the entry level side, this is a process.
50
and it's a process
million
that
volume.
goes on for the better parts of years, not days. And so, at least for now, I think that there's still a ton of home buyers, and they're probably still going to do what they
50
can
million.
to be moving into those
Rehypothecate them
homes they're
likes.
built.
Yeah.
You got some rehypothecated likes for 63. Well done.
$9 a share
Like
in
the split.
earnings. Stock trades $36.
I mean, it did.
Do the
It
math.
worked. I don't know how, but
4 PE
2 more likes.
of
Thanks, guys.
4
Yep.
PE on this stock.
Yeah, margins were hurt by input costs, employee costs, and stuff like that.
A funny way to put it,
there are some
relocate, but you're
headwinds
right.
here.
Sure.
And then also you have to start looking at some other things that tightening credit cycle here that we're probably going to go into. That might be some headwinds, but demand is still there. I think that's the key. Demand drives everything. Alex, you got an example trade for us here to look at in KB Homes. Option market's pricing in about a 4.5 to 5% move in the shares, according to the option pricing.
Yeah, so when it comes to options trading in this particular name, the first couple things that stick out to me, there's not weekly options, so you can't get that true earnings exposure of a short-term option cycle. The nearest term option cycle goes out to April, which is 30 calendar days from today. So I looked at something that's a little bit, I would say, more unorthodox, or something we don't talk about a ton. And
What was the volume where you thought your share might be from?
The trader or investor
I'm just assuming it's like internalized volume, dark pool volume that made its way into the data that brokerages receive. I don't know. Because you look on all the other time frames, it doesn't show anywhere close to that volume. It shows like 5.5 million. But if you look at the daily,
in a name
shows
like KB Homes,
15.8 million yesterday.
dividend, of which this stock
End of day, we were at like
on a quarterly
5.5,
basis, all things
and then
considered,
Webull, for whatever reason,
you're not
showed
gonna have rights to that
8.9,
as an options holder. So
and now
those are
today
some
it's
things
showing
to consider. You're not gonna have to be a
15.8.
voting, you're
So,
not gonna have voting rights, things like that.
It's just, I guess,
But if you wanted to get
speculation that we
just sort of
don't know.
Dollars and cents exposure theoretically. I thought this was a fun conversation. It's got a fun name too.
When
and I think we
GME has
always
had
like the
crazy
fun names,
benches,
when it comes to the
there's
strategy,
sometimes
like
have been
iron condors
cracks
and
in the
things like that.
seams
But this
and
one's called a zebra. It's really an acronym.
weird stuff has
Zero
been
extrinsic back ratios, what it
displayed or
stands
we've
for.
caught
Really
that
a
maybe we
2 by
shouldn't
1
have or
call
weren't supposed to.
ratio
Like,
would be another way to think
we were able
about
to
it,
peer behind the
for
curtain
this. But
and we saw
the idea in terms of the
we
construction
saw the wizard man
is to look
controlling
to
all the
buy
puppets, the puppet master.
two of
It's just the only way I can
essentially
imagine
75
it.
delta or near 75 delta call. That's going to be likely
FR
in the
sellers
money.
forward.
And then looking to sell the at the money or near at the
Down
money.
4%.
50
I didn't
delta
open up a
call
position on
to
this.
kind of get down to
Yeah,
a theoretical
very minimal buying
near
power, so
100 deltas. That's going to be
I'm not going to throw it on here
to
at this
essentially
point.
100
Not with
deltas
GME
or
doing
100
this
shares
and
of stock
BBY at the
from
price it's at.
price performance standpoint. Couple things that make this interesting or why this could be appealing to someone. One, if you look at this risk profile, it goes
Getty's
off
up 7.5%.
infinity like being a shareholder does. It does not have capped upside. So that, I think, is
Got the visual. Yeah, I've used that one for years.
here, but if
Anytime
you look
Jimmy
at
does
the
something
price
weird and we
index,
see
we
it through the
looked at it when
cracks,
it was,
it does it. That's all I can think of.
That would correspond
He hasn't had a very
essentially
nice
a
track record.
36.90 break even. Because this stock has sold off a little bit here to the downside.
Trade spotting now
it's
saying
probably a
Jimmy's
different
fixed
price.
too.
Essentially, you want the break-even point to be near where
Trade
the
spotting.
stock is trading. That's the
Oh, yeah,
idea
trade spotting.
in this type of a trade. So that you don't have that
It's like
extrinsic
fixed for
value of
almost
just
a year,
simply buying
guys.
a
Like, it's
call working against you. If you just went and
even
bought it
coming
in the
into the
money call,
split,
there's
like it
always
had a
little bit of
pre-split
time
move,
value
but
that is
even the
working
move
against
into
you.
it
It's gonna
looked
raise your break-even, lower
normal.
your
Looked more like a
probability of
Tesla
success.
move.
So there's always a trade-off. This sounds too good to be true, right? All these benefits of being a shareholder to the
This
outside,
earnings, this might have
similar
been the last time
break-even, but we don't have unlimited
like
risk
broken.
to zero or that risk down to zero. Because it's an option
Which
strategy.
was,
Obviously,
yeah,
it's
almost a
defined
year
risk. Well,
ago.
the catch is you actually take twice as much risk down to
So-
that short strike, or to the long strike rather. So because we're buying two
however,
of those calls,
we
and
did
those
see
are
it look
34
broken when it
here,
got over
and in
30
the
here.
case of our analysis
And
here,
actually up here it did too, because they halted it.
$580 in risk down to 34, but then it's capped. There's no
Yeah.
more after that. Where of course, if you were just a shareholder,
It
here,
might
it's
just be
$3,700
price
bucks.
still.
So
Has to
really
get above
a
30.
conversation about leverage, defined risk,
Really odd.
and structuring options trades to get a risk profile that you want. And so not everybody wants 100 deltas of exposure.
I guess that's kind of the case how it was back here, because these days were big, but if you remember,
Yeah, let's break this
you can
trade
look at
down,
it. That was
in the April monthly cycle,
yeah, that's 30.
days
So
to
that was
expiration,
322. Let's look
buying
down the
two
hourly.
34-strike calls
I remember
in
that
April.
rally out of earnings when
71
Ryan Cohen was
of
buying.
the 37
It was
strike
such
calls. You're
mellow
paying
price
roughly-
action.
You've got up there about a
Where
580
is that?
debit. It's closer to 560 now, but 580
Not
debit,
mellow,
if you
but it
pay
just
that,
looks
there's
so
your risk,
natural.
$580 per spread. That break even Alex mentioned around
Oh, dude, this is gonna
36.80,
be hard to find. Oh, I got
36.90 on
extended.
that. Upside's unlimited, Kevin.
There we go.
Because it reacts more like
There's
stock.
that one here.
But your risk to find on this one going into
Yes,
earnings.
if you
but this is
look-
definitely a directional play.
Yeah, this is a
Even these days,
the
like,
number one thing that sticks
very,
out on this trade to me is
very
the
normal
delta,
price
right?
action.
The 90, almost 96 delta
Like,
here.
rally, consolidate, rally,
Unlimited
consolidate.
upside, but you need that.
And then here's
move for
30,
it to
kind of
really
consolidate at 30.
outperform,
And then it
but
gapped.
limited risk on the downside.
But then
And
even
this
here,
is
up,
just
up
a way-
above 30, I don't
It's
know.
really got
This
some
looks
of the similarities
pretty
of just
normal
calls,
also.
right? Just long calls in general. But he did.
And then
turn
once it
one
gets to a
of those
certain
calls
price, it doesn't look
into
normal.
a-
They start
a
halting in, it
vertical
starts,
call spread.
you know,
34, 37,
being
with
weird.
an extra unit. So you still want an upside, you still want a big move, limited downside
That
risk.
was a crazy
similar
move.
to just a plain call, but a fascinating
hourly
look
went up
at,
$10.
At another animal enters the fray. Alex Coffey has brought yet another animal in, the zebra.
The zebra
I've never
example
heard of
here,
this.
yeah, definitely. If you're doing a strategy like this, is definitely has
Yeah,
that
S3
upward
Partners says
bias,
that's the
but as Alex
where it goes
mentioned,
parabolic,
a weekly
and
option. So
the
this
day
is
after he said that, it went over
ahead of
30, and it
earnings.
started to
Maybe
look
not
squeezy
considered
again, and then
earnings play
that's when they
because you
halted at
still have
35.
A month in duration on this one. All right.
Oh,
good
I
look
think
at
we'll
that
find out.
example Trade. That's going to do it
That
for
was
this
what, this
segment.
day?
Thanks to Alex Coffey.
He said it
the
here, and literally
co-host
this
of
day it
Next
went
Gen Investing,
30
which
and
is
then
up after the
35
show.
and halt.
But coming up after the break, Kevin and I are going to be joined by Landon Swan from
Credit
Mike Folio
Suisse
for a
cover.
discussion on Chewy.
I don't know, Credit
which
Suisse,
reports
sus.
earnings after the
Look at that
close.
consolidation
Stick around.
without the extended hours. It's just perfect. Trading a range. Give me time to go back to reasonable land. GME maybe. Doesn't need to be over 30, but that's maybe where margins get upset and it starts to get parabolic. A bank crisis, yes. Markets crashing, collaterals being squashed, margin being called. Certainly could get out of control. It doesn't need to get out of control, just yeah. I suppose if it stays fixed looking, the big thing is the cycles. Are they still repeating? And is it still a predictable pattern? Even if it's fixed, if it's still repeating this cycle, then it doesn't really matter. This huge gap up. It does kind of throw a wrench, but we're expecting a rally after this double bottom, so. But it literally, it opened up at one of the resistances. Close to it. Gas with a little move down here. Yesterday did end up engulfing on that gas though, so that's nice on UNG at the support. I'd like more, but I don't want more. Yeah, move back up here would be nice for me. Yeah, it's not happening yet. We'll maybe let some fall. We'll see though. It's true. The market has been used to easy money. Or at least since 2008, since we started printing money and quantitative easing. But really, I think since we left the gold standard and money then lost its value. Once they realized we're not tied to gold, we can just have more of it. Buys moving down a little bit here. Still holding up with the support from today. BBY's barcoding here down 1.25, but bounced off of yesterday's lows. Hold would be nice. Look at that barcode. Two weird wicked candles in pre-market for GME and SPY. Right here? I don't know. That happens often though. At 8:05. Market makers settling something. Dark pulls going onto the lit. I'm not sure. Those are computer share buys. At the same time, yeah, you can probably see it on other stuff too. On AMC. That is interesting, actually. Yeah, you have it on Tesla there. On Microsoft also. A lot of volume there. Maybe it was actually something with Microsoft. See all that volume? Buys at the low here. Since GME isn't as part of SPY or anything. That's what they tell us. Giant ball of debt.
I think short term is where we're a little bit iffy. So
Chewy.
You've got, this is purchase intent. You see less people are signing up. They're sticking around and they're very happy, but less people are signing up. And if you're an investor, yes, you want that cash cow company that just never loses a customer, but you really want growth. You need more customers coming in, to your point. So I think that's really key. So they've got some things kind of going against them with the new customer front. You know, a lot of people bought pets 2 or 3 years ago when everyone was locked inside. And if you got a 2 or 3 year old pet, or you just got one, you know, 2 or 3 years ago, you're probably not picking up another one. So growth is going to come in the form of new customers and acquisitions. With pet food and pet supplies increasing in price about 15% according to the Wall Street Journal, much higher than human cost, human food, human prescription, things like that. I think people are maybe shying away from it. So I think that is the caveat here for this company, is where's the growth, just to go back to your question. So we are a little bit concerned.
Landon, global pet
might have earnings coming up, Chewy.
Expected to be $236 billion by 2030. This company, you know, they only had 2.6 billion in sales in 2022. This is a company that's getting into health insurance, telehealth services, pet pharmacies. They're doing a lot of things, but you're right. It's this auto ship program. You mentioned 73%. This is a company that's still growing. Some of it is slowed, but this market isn't going anywhere, Landon. The fact that everyone is judging these small growth companies on coming out of the pandemic and how popular they were during the pandemic, when this company is actually making nice progress in their growth, and this business, this industry isn't going away, and they're adding 2 more fulfillment stores. That lowers costs, that lowers wait times, so they're going to get more efficient. But Landon, it's still about subscriptions. It's still about that auto ship program. They're going into a growing industry, Landon.
Yeah, I agree 100%. And I think that
eyes moving down here a little bit. Broke the low on the day.
Kevin, I mentioned that their food and health supplies were 83%. That's 5 out of 6. So every $6
You have
that
that RSI
they
divergence
make,
here on the 5
they
minute.
bring in 5 of that is from food and health, non-discretionary, right? So I think that as they expand with these very, very
textbook
happy customers,
consolidation.
very loyal, happy customers, they can introduce new products, new services, and my guess is they're going to have a very receptive audience. So I think that investors really need to temper their expectations. They're not going to have 2020 rocket growth as everybody's going out and buying new pets. That's not the case. I think that what they're doing, though, is they're building a long-term business with extremely loyal, extremely happy customers. And if you've got that base, then you can start to sell lots of things to them. So right now, it's pretty much all food and health supplies. But as they expand into insurance or more discretionary items like you're talking about, then I think you could have some upside there as well. So they can get more per customer, more dollars per customer. I think the more customers is the hardest part, but they're executing extremely well on the happiness side. So they're going to be able to get more dollars per customer.
Yeah, and you mentioned the page views are down on your 30-day moving average chart, and that just goes into your theme here that it might be sketchy here for a while until they do more of that cross-selling with some of their other businesses, whether it's insurance or the pet pharmacy thing at this point. But Landon, when you look at this going into earnings, are you guys positive or negative as far as your score goes?
Sure. So long-term, very positive on this company. I'm buying dips, and I don't think there's going to be a huge sell-off. When we look at the earnings score, it's -9, which is basically neutral, leaning slightly bearish, but not really much to it. So, I might be in a position where I wait for a dip and pick some shares up because I love this company long-term. It's got everything going right.
Great consolidation.
I don't think they're going to blow it out. I don't think they're going to disappoint huge.
Very normal
I think it's going to
looking.
be more probably of a sideways move, which is wild because that's what the stock has done for the last month. I mean, it's pretty much just been
This
sideways
is what
for the last
this is
month.
what GameStop
A
wants.
lot of anticipation, I think, for this earnings report, but I
For
don't
long
think
term.
it's going to move the needle in a
What
huge
institutions
way.
want is what
but
is
again,
what's attractive.
long-term love it, short-term might be a small pullback.
Gotcha. Yeah, and consolidation over the last 6 to 7 months here.
Even yesterday was already
in the
starting to call it
shares,
a
going into this report.
post-meme
All right,
stock.
Great stuff, great data as always, Landon.
That's just from the
Appreciate it.
EPS, but still.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of Likefolio, breaking
Stop
down
looking
the
at me,
data for
Schwan.
Chewy. Yeah, Kev, Petco came out with their earnings. That stock was down a
I
little bit.
flushing
but
down here
this one's
some.
been in a pretty
Getting
tight
a little
range.
anxious for Powell.
One last thing about what we were talking about, Landon.
So we've got
Demographic,
390.
as younger kids
Seven.
that are now getting pets, and I have 2 children that have just gotten pets.
397, 50 half of the level, and
they're
then
much more
390
in
something.
tune with this online ordering and auto
98.
shipping of things.
Yeah, we're
It'll
about
get
at that
more
first
and more
level.
popular. Older people like us, we
Oh, hi
go to the
from a
grocery
couple days
store
ago.
and buy pet food.
Or I guess
Younger
yesterday,
kids
yeah.
don't. They do the auto ship. So when I look at something like this, you're right. They could struggle right now, but this company has a great future.
I'm not going to be put into your old man basket because I use auto ship for all.
And so if that demographic starts creeping lower, that's really good for them because, like I said, this industry isn't going anywhere. Pets are more popular now than they've ever been. My daughter flew to Pennsylvania and got a dog.
Yeah,
just to get one.
We flew our cat in from Utah, rescued the
good
cat
Lord.
from Utah. But the dog stuff is, I think that's the hook, Kevin, and the happiness that they mentioned. But you got an example, trade force going.
You flew a rescue kit? Why would you go out of state to get a rescue animal?
We don't know what direction this is going to. They could come out and warn. They could miss. I don't know. You got to be ready for either direction here, Tom. And you're right. It's been in a range lately. But,
Lord.
So what I did here gave you an opportunity to be successful in either direction, Tom. The double calendar. It's got about a $4
Look
move.
at that. Look at
If you
that price
look at
action
my
on BBY.
strikes,
That's
they're
crazy.
about $9 apart, about 4.5 on the upside.
Wait, that's
4.5 on the downside. I went 2 weeks.
Oh, that's
out,
all
Tom,
today.
to give me a
That's
little more
extended
time.
hours.
It's spent right around $1. Right, it looks like it's trading. The 43 call calendar, 2
We'll do a
weeks
dot,
now.
not shop.
April 6th, March 24th.
I
And
kind
then
of
the
bouncing on that
put
level,
calendar
maybe.
is the 34 strike, so $9
Trevor from
when
Washington,
it
Texas.
looks like it's
Jeez.
$4 in either direction. Give you a little room in
Well, like
either side. Tom.
cat piss at the end of that trip.
This is one collecting theta. You're long about
You
7
adopted your
deltas,
pet, but did
and
you
this
fly it
is
in
one
from out of
You're
state?
looking for a move, either $4, 4.5 on the upside.
Did you remotely
or
adopt
$4
it?
on the downside.
Or did
Yeah,
you
let's
find
break
one that's
this,
local?
Example trade here, double calendar or double diagonal is sometimes referred to. Buying the April 6th weekly option series, buying the 43 call, 34 put, and then selling the near term March 24th weekly 43 call, 34 put. So you got a calendar on the out of the money on the put side, out of the money on the call side. Spending roughly, we've got 97-cent debit on that. It's closer to $1
There you
now,
go,
but
awesome.
that's going to be your risk. What
When you guys say
pay.
adopt,
It's a 2-weeker too now,
Yeah,
so
you're
you
not
can
saying-
extend duration on this one.
Right.
Buying.
Now,
You're
because
saying
you're
a
paying
rescue
that,
animal,
that's
right?
your risk.
Right.
But your break-evens are pretty wide, around 31 bucks on the downside, maybe 48, just above 48 on the upside. Maybe that tightens up a little bit after the
Portable litter
earnings
box,
report. But this
cardboard
takes
box.
advantage of a move, and you mentioned it's about a 10% move, plus or minus that the option
Nice.
market's pricing in. At this point, Kevin, but you're buying in the April 6 weekly series a 92% implied volatility, selling in the near term about 182% implied
Right, that's what
volatility.
I liked. It was a double, and if you went one
Perfect
week out,
consolidation,
the 1
right
week
around
was,
VWAP.
was over 100. It was 108.
Up, down, up,
so
down,
I liked
up.
the fact that it had gone right to half the value there over 2 weeks. Remember, if you do a 1 weeker, that
That makes me want to
net
get some
debit will
more
come way down.
calls.
Right, and as you mentioned, you've got a couple weeks in this trade until expiration. So while it might be an earnings play, you do have that ability to adjust or roll if the market's open, liquidity is provided going into earnings this Friday. You have some assignment.
That's what I was
risk
wondering. Yeah,
on
adopt
those short
is what
options.
you get
Also,
from
if we get maybe a big or 2 or 3 standard
a
deviation
rescue animal.
in the shares, so be aware of that. But a good look at not having to pick a direction, but you want it to go towards either strike over the next couple weeks.
Big
All
pipe
right,
bets from people.
Kev, that's going to do it for this
Careful.
segment. But when we come back, we're going to talk another stock that has earnings, and that's tomorrow morning. Darden.
Oh, I didn't see the new graphics on Olive Garden.
They've got a wide array. of
Olive Gardens
different
owns
offerings,
Eddie V's and
in their
Longhorn.
portfolio. That's
These are
coming up
all
next
what,
here on
DRI,
Fast Market.
Capital Grill. Those are all the same. Olive Garden's stepping it up with that logo. Yeah, you have to like qualify, right? It's like adopting a human. Emerging make calls? Maybe. I mean, the prices are super inflated. I'm looking at January, so tons of time and at the money. But yeah, I mean, there's a big move like this, not just completely sell it off and consolidate, would lend one to think that it's going to keep going. 30 call yellow? Yeah. 4-6. That's a. You mean 4-7? That's a good amount of time. Or no, it is 4-6, huh? Is Friday closed? Yeah, 'cause I have April 6th also. Friday's closed. On record, and have history bias towards animals. I didn't even realize that April 6th, the April week is a short week. Go another owner. Interesting. What holiday is April 7th? World Health Day? I'm not seeing any holiday on April 7th. Is it Easter? Market closed? Let's see. Maybe like bond markets will close early on Thursday, April 6th to commemorate Maundy Thursday. I don't know what Maundy Thursday is. The stock and bond markets will both close for Good Friday on April 7th. So Good Friday, April 7th. Yeah, so we're having a short week that week. I wonder if that's going to mess with stuff. It's coming down here a little bit. Yeah, Good Friday on April 7th. So I didn't even realize those options have one less day for the 6th. Or 14 then. Yeah, sorry. Yeah, get whatever you want. I mean, 4-6 is fine. I got confused. Bond markets have a half day on the 6th. As of Monday, Thursday.
Where all four of the major indices are relative to their 200-day and their 50-day moving average. You got
Quad witching
the
short week
S&Ps
planning
and
a
the
bull
Dow in
run.
a similar situation. Both are above the 200, but below
It's
the
not a
50-day
quad
moving
witching.
average. In the Nasdaq,
We
you're
just had a
above
quad
the
witching
200
last
and
Friday.
the 50-day moving average. But
Or
in the
are you talking
Russell,
about this
you're
quad
below
witching
both
in
of
this
those. So,
holiday?
again, as I said before, Tom, this is a market that's waiting for more information.
Yeah.
Today we'll get that from the Fed this afternoon. Be curious to see what type of response we get, and hold on to your hats. It could be a volatile intraday session from 1 o'clock into the close.
We still haven't seen a run on GME yet. This, you know what I mean?
Leading
But
this week, though,
maybe it's
on
starting.
that
Maybe the
rebound, but has
earnings was the
definitely
kickoff.
underperformed so far this year. All right, thanks to Ben Lichtenstein, host of the Future Show here
Lichtenstein.
on the network, bringing us the market update. But now let's bring in George Tillis, senior markets correspondent on the network here to talk some
Carvana
restaurants.
taking a dump
It's
there.
almost lunchtime here, George. Getting it fired up here. They've
Some
got
volume.
earnings tomorrow morning. The stock's up about 11% so
Buy
far
low of
this
the day.
year.
It hit
What are you
there.
seeing here in Darden
Got an hour and
restaurants?
10
Because
minutes till
they've had some pretty good sales numbers
rate
in across
decision.
all their plethora of
Fed.
different restaurants.
I mean, I see a company that, like as you mentioned, has pretty good sales numbers. They're in the double-digit range, but they're really optimizing on these sales. Their profitability margins have actually been exceptionally robust, especially in the last year, considering higher costs of goods sold and labor costs. The profitability profile, as I mentioned, is actually quite exceptional. Now, one of the things about Darden is we know it's one of the largest full-service restaurant franchises. They provide value in their major franchise like Olive Garden, but they also have the higher-end dining like Capital Grill, but also concepts like Cheddar Burgers and such. But at the same time, the
I'm doing a
execution
poll
for
for you
the
guys.
business has been really to increase their off-premise sales, and that includes
I
digital sales,
don't want
payment
to
processing,
influence your decision, so I
and
won't tell you.
pickup. And
but
effectively what that does is it increases the company's operating leverage. In other words, it increases their same-store sales, and that's essentially what Wall Street and analysts and investors like to see in the stock. With the stock really trading near 52-week highs, it's pretty remarkable to see that happening, considering people have been cutting back on full-service dining. It doesn't seem to be the case here for Darden Restaurants, but they are expected to report earnings tomorrow. And
when I say
the
news, I
earnings per
mean
share
this
are expected to be in the
news
mid-teens,
window
around
right here is Trader
16%
TV.
at a $2.24 per share clip. Compare that to $1.93 last year. Now sales are
I
expected to be
have
up
closed captioning on down
11%
here.
at $2.73 billion. Relative to 2.5
Going in, let's write it down. Grab some puts to hedge a little.
last year. So
Everyone calls it inputs.
if you look at the
right.
profitability for the business, first off, the expectations show 16% earnings growth.
Yeah, I mean, IV is not crazy,
sales
honestly.
growth. That gives you an idea that the trend may
If we have a
continue to the upside.
2-3 day
if they do
rally,
these
the IV
numbers.
will get
But at the same
crazy and
time,
it'll get baked
the
in
last
pretty
year
heavy.
with
But
higher
right now
cost
it's
of
just
goods sold, their gross margins fell by
not
about
crazy.
1%, but their net income margin
down.
actually is still about 3% higher than their 5-year average. Their net income margin the last year was 9% in total.
So I turned closed
where
captions
5-year
on for
average
here,
is about 6%. So it gives you an
thinking
idea
for the
the
few
company
people
is
that
really
maybe just
managing
watch and
expenses
can't
very
listen.
well. They have scalability. In other words,
They could
buying
read it, but I
power
don't even think you
in
can
both,
read it. Like that'd have to
increasing
be.
prices, but at the
I guess
same
if you're
time,
watching
they
like
get
a
purchasing
TV.
power from their major wholesale providers, which helps them keep control of costs. And they've performed exceptionally well price-wise, but also financially.
Yeah, some of those import costs going down, but employee costs rising.
Yeah, you guys
and
say
after
on. I'm
last
surprised.
quarter, George,
All right.
they raised their guidance for fiscal year 23, not only in percent sales gains, but also in EPS and revenue. All right, great rundown here of Darden Restaurants ahead of earnings. Thanks to George Tillis, senior markets correspondent here on the network, breaking that down for us. Kev, this is all about food. This is Olive Garden. That's the big one that sticks out, but they've got a wide range.
The only
of
reason to
different
turn it off
offerings
is so you
here.
can see the
Olive
bottom
Garden
of the screen
seems to be
easier. But
their highest traffic, but
Otherwise,
Capital Grill Seasons
matter.
52 is extremely popular. Yard House is extremely popular. Longhorn Steakhouse is their lower price steak choice. It's very popular. I mean, you know, if you're in the suburb of any big city, they're everywhere. How about this? 1,850
Yeah, those are popular
restaurants
for sure.
180,000 employees. George mentioned the largest full-service restaurant in the United States, and they've got benefits from their ability to scale and their strong brands, but also some attrition, Tom. A lot of smaller restaurants were lost during the pandemic, and they were able to stay in business and manage their costs.
GME coming up through VWAP right now.
If there's macro
I also get a little
headwinds
green
that are
candle.
potential right now, you don't see it in the price of their stock. It keeps going to new highs.
Yeah, the demand for people to get back out coming out of
Darden
the,
restaurants.
the pandemic, that's still holding firm. Services.
Thanks, Ace, for your
continue
gifted
to grow.
membership.
We've seen it in airlines.
That's
travel
probably for you, Jay
experiences.
Scott.
Going out to eat.
Click
is
on the
an
green box to
experience,
become a
right?
member.
They
It's
continue to open
free.
stores and continue to ramp up their
Ace
expectations.
leaves no man behind. Oh, look at that.
Yep, right here.
Clean price action.
So I looked at a strategy here, Kev. They don't have weekly options either, but if their dividend gets paid, over 3% dividend yield on this one. Same store sales up last quarter, 7.3% on a blended scale. And they expect that to come in just a little bit lower, but if that beats again,
Jay Scott, that's for you, or anybody lurking that's not a member. Ace Church gifted a free one.
Darden restaurants, how do you own it?
Come in, click on the box, hit receive, gift, accept, membership, whatever.
Get in at a lower price point.
No
So
strings
look at a cover call
attached.
strategy, Kev. This is one of those introductory type of strategies. If you want to get into a stock, but then offset some of that, maybe potentially collect that dividend if it gets paid out.
YouTube,
for every 100
Chop,
shares of stock you
Kahab.
buy, sell one of the April 155.
Swap for BBBY
strike
options?
calls.
You'd have to
It's
talk
30
to the
days
market
till
maker about that.
expiration. It's only a
No
buck
gray
and a
left
quarter
behind.
out of the money to the upside, but you're basically paying
I'll turn
a
gray.
debit, Kevin.
Yeah, we might not see you around for a bit after that happens.
50 cents. So there's your break even.
Might have to take a break, go
So
swim
you're
your
buying the
pool.
shares at a discount here. Capture upside a little bit, but at the same time, you're giving yourself that cushion to the downside. It's a high price stock, but it allows you to collect that dividend if it gets paid. Your thoughts here? It's an aggressive out of the money call sale, but that's maybe because I looked at it like it's already run up to 52-week highs, right?
And how do you know it's an aggressive sale? Because the delta's 52.
Right.
So you know that means you sold almost a 50 delta option against your long stock. So you've got about $8 in theta. You know, this is something that you take advantage of.
Grinding up here.
If you look at Darden restaurants, you still got
Climbing
a
its
couple
way above
dollars on the
VWAP.
upside. But you're right, Tom. This is an at-the-money call that
Spy
you
still
sold.
hanging out at the
But
low.
if you look at the price of the 155 call,
We've got Powell in 1 hour.
10 cents. You've got big numbers here.
We're not
you do
Powell. We
have
have to
30 full days though.
statement.
They only have monthly expirations, and we're just through March.
That's your
So
name and history.
You've got a full month, but yeah, $4 on an at-the-money call.
Yeah, your risk on this is nearly $15,000. What you pay because of the stock is involved there if it were to go down to zero. But Kevin, you bring up a good point that you're collecting quite a bit of option premium because you got 30 days till expiration on that call. You do have the ability to roll or adjust that short call as you get closer to expiration over the next 30 days. The market's open, liquidity is provided. But this is more aggressive covered call position with that break even at the point where you buy it. So Kevin mentioned the $4 that you're collecting on that call that you sell against your long stock takes that break even down below 150. So it gives you that nice cushion to the downside there before you start getting hurt on that one. All right, Kev, good look at that cover call strategy there in Darden Restaurants into earnings. But that's going to do it for you and I today here on Fast Market. Stick around, though. Next Gen Investing is coming up next here on the TD Ameritrade Network.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate
SPY edging down. Slowly slipping. I don't know what RC has to say. Is he not handling the share dividend properly? Yeah, that'd be a good question. I mean, yeah, I don't know. Yeah. I wonder if we'll ever hear answers like that from RC. We're at 50-50 on closed captions now. When last week 17 hertz, but going down a bit. Well, AC John, at least you're honest about it. So that's awesome. I sold. Yeah. I sold mine at like 19 something after he broke that 1940 support. I think that's when I sold my last bit. Basically, when the options got so cheap, I'm like, I don't want to hold shares. I want to just get options. They're so cheap. So I did, and then I got covered calls on them, and now I basically have no exposure. No. But now the options are a little more expensive, so could go back to theta farming it. Cash secured puts. Doing the wheel. SPY slipping through there. Broke through that support. 39,750 I'd have as the next kind of spot for support. I think the upside potential, honestly, is much greater on BBBY still. I think it's a riskier play, and long term, it's maybe not as good of a play or as solid. Definitely not as solid as GME at this point, but yeah, for a shorter term trade, I think the upside is greater potential still on BBBY, just because it's tremendously undervalued for a company that's not going bankrupt. They be selling BBY to its supposed. I don't think there's much selling of BBY going on.
Expect with George later on.
Yeah, a lot to get through.
Oh, that's the brain.
NVIDIA, looking at GameStop,
yeah.
Of course, jumping.
Oh, look at that GameStop. They're gonna talk about it.
Response to its earnings beat, so that'll be a fun one too. But let's start with Upbo, Downbo. Not endorsements, not recommendations. Good group of names here. One of them, the first one here in Carvana. Maybe getting a little bit of
Carvana. SPY's flushing here.
I have to think that that is aiding its rally because they did disclose that they will be forecasting a smaller loss than expected now for their upcoming quarter. But all things considered, I mean, it saw shares surge as much as 16% earlier in today's session. Now we've since given back about half of those gains, actually. But they do expect an adjusted loss between 50 and 100 million. Compare that to the adjusted losses they saw of about 348 million a year ago. They said this change was primarily driven driven by reduced selling, general and administrative expenses, as well as higher total gross profit per unit, which was partially then offset by some of their reduced selling. They did say they expect
GME is holding strong, great volume, absolutely.
76 and 79,000 vehicles for the
long as
first
we're shorting
quarter.
BBY.
This is a sharp decline, though, from the 105,000 vehicles they sold a year ago, also below consensus, which had called for about 83,000 vehicles. They said they will be also offering note holders the option to exchange unsecured notes at a premium to current trading prices for these new secured notes. They said this move would provide note holders with collateral while reducing their cash interest expense and maintaining overall flexibility.
Pretty big move there on SPY.
Chart, Alex, is absolutely ridiculous to me because shares are up something like 90% year to date, but still down over 90% over the last 12 months, which I think is perhaps the more important aspect to look at. I guess this name has been completely reevaluated, but a name that we've discussed so many times. It does seem like the going concern is their ability to continue with the cash they're raising being one headwind that analysts often discuss.
So while the more recent news may be the more pertinent to now and whether or not you're an investor, if you've been a long-term investor in this one, I think the first move is a little bit more important given the fact that the stock was over $375 a share and is now below $10. So just for illustration, start at 100, you go down 99%, you get to $1, right?
SPY flushing.
100%, you're just at $2. You're still down 98%. So it's got a long,
or 400.
way to go, if it's ever going to sniff some of those prices
Oh,
of
392.
the yesteryear or the last couple of years. But I do think it's obviously a
Powell comes
positive
out?
step in the right direction. I want to make sure it's clear too. Did you see the amount of units sold?
Yeah, we'll see next level down here.
76 to 79,000 range, not to fall by.
But also rip up to 400 too.
79,000. So still down like 25%. It's a lot, but not
The
down
trend
like
is up. We'll see if
or
Powell just
100% like the stock nearly
complements the trend.
Yeah, and I think that was illustrated really well on that longer term chart because even in spite of the nice move higher today or this year, you don't see that at all reflected on their 3-year chart. So that does put in perspective that price that you were laying out. But our next name today now is Enphase Energy.
GME did not get any pull down from that flush on SPY.
With a $275
Held strong right above
price
VWAP.
target, noting the setup for Enphase has become much more attractive since they first downgraded the stock to neutral in mid-December.
Broke down out of that barcode.
40% decline we have seen in share prices since December. Their valuation has now become more rational, especially when considering their longer-term growth potential. Susquehanna also thinks the impact of U.S. installation mix shifting from a long-tail Tier 1 to Enphase is likely to be muted near term and expects continued strong growth in Europe, which they said could offset some of the near-term weakness we are seeing in the United States. Now, Enphase is lower today, just over 1% on the day, down about 22% this year. Another one, Alex, it still actually remains up about 9% over the last 12 months, down almost 40% from their high, up 60% from their low.
Yeah, and this is a fun one, especially for those who maybe aren't super familiar with it, but know that it's doing something in the alternative energy space. You can kind of see that from the company's name, but I almost think of this as a semiconductor name that provides those kind of component parts for the solar industry.
I guess you're
as opposed
saying on what he's going to say.
Making solar panels like so many of these other names
think he's
that are
doing
within
50
this
basis
space.
points.
So it's kind of like we think of NVIDIA being a big player in AI.
Not going to be much room to pull. SPY keeps going down.
Providing that semiconductor kind of component part that is necessary for that space. It's the same for Enphase. They're really focused
just
more on
flushed
the
through
component
that
parts,
level a bit.
less so on the end product. And
Down
as a result, they're just
down
one of those names
0.38%.
that as long as they're still garnering interest
397 and a quarter is next.
and in alternative energy, it could be one that stands to benefit. So I think it's a fascinating story. I think it's a fun one. And a name that is actually going in the opposite direction
50 points.
of the other name.
Yeah, that
on
could
this
definitely
list.
cause some
the same direction as the market
downside.
now, it's turned red. Going to say upvote for Enphase.
So our next name is Ollie's Bargain Outlet. I always think of Oliver Rennick when we talk about this name, even though they're completely different, obviously. But seeing a nice lift today, shares are up over 8.5%. Now, since we have given up some of the earlier gains, we're off the session highs by about $6 as it stands. This follows their fourth quarter earnings, which they did report report an uptick in both sales and net income that also beat analyst expectations. Their total sales came in around $550 million, which marked a near 10%
That gas came back down to the
year-over-year
low.
increase. And they said during the fourth quarter, they opened 5 new stores and saw comparable store sales increase about 3% after a 10.5% decline a year ago. Now, for fiscal 2022, they did open a total of 40 stores and closed 3. They are now projecting for the new fiscal year to open 45 stores with only 1 closure. So they are continuing to expand, not as aggressively as some of their retail peers, but still the street liked these expansion plans clearly. They see sales coming in around roughly $2 billion. This is also now ahead
look at that.
of what
GME
we
does have more
expected
volume than the
previously,
SPY.
also ahead of the $1.8 billion they generated in 2022. But
Got
like I
twice
mentioned,
the
this name's
volume.
seeing
What
some
is that?
strength today, coming off
Yeah, it's
those
got
highs
twice
a
the
little
volume
bit,
of
but all
SPY
in all,
today.
a nice 8% move in Ollie's Bargain Outlet.
Yeah, huge move, impressive move nonetheless. I will say, from a personal standpoint, I'm not super familiar with this one. They don't operate in the market that I grew up in. I grew up in the Omaha area in Nebraska. They don't serve that area, so I do see there's some stores, in Kansas and Kansas City, Missouri, that area, which is not far from where I grew up. They do serve the Chicagoland area a little bit in the suburbs. Is this one that you've ever encountered? Have you been in an Ollie's store?
No, I have not. I've never even seen one. And I have
Yeah, me either, Jen A.
I grew up in like the suburban mecca for retail, so that's interesting. But I'd like to go in one because I always
Sound like such you had more volume than SPY.
especially the discount retailers, they always have their own individual personalities, which makes them very
It
interesting.
did sound like that,
now,
didn't
our
it?
next name and our last name today is a retailer I frequent
Nat
far too
Gas,
often, and that is
Flushing, what the
Lululemon.
heck?
And we did get reports, or the report from Nike.
What
We
is
saw Some
this?
disappointment, but no disappointment echoed today in Lululemon shares. They're up 3.5% and hanging on to their nice rally they've seen now throughout.
I guess it's setting up a little
session.
inverted head and shoulders here on the
This
hourly.
JP Morgan actually lowering their price
That's
for
what I'll
Lululemon
say it
to
is.
$430 a share from $440 with an overweight rating, saying the supported continued sales momentum in their first quarter
Ollie's
and
there?
beyond really shows
Texas?
that Lululemon has launched a variety of new products over the last 4 weeks alone. The analyst said its recent fieldwork points to product pipeline and inventory progress overall for the company, although still trimming that price target. But all in all, I mean, $430 a share, well above, about $120 above where we're currently trading, Alex.
Yeah, a good 30% rally would be necessary to hit that. So you can see why it's an overweight price rating on this one. I would say that although this is a price target cut, that's what you're going to read in the headlines. I mean, is anybody confusing this note as a bearish one? This is a bullish note. This is a bullish stance on the stock. Maybe it's marginally less bullish than it was before the update, but still a lot of positive to be said. They talk about the continued sales momentum in the first quarter and beyond.
SPY down
Lulu's just
0.35%,
been a
50
game-changer
minutes
in this
till
space. They've remained relevant for the better part of the last half
Fed,
decade.
and then
Nike,
Powell
of
be at
course, has
2:30.
in many ways taken aim at this company, given some of their product mixes and the shifts that they've
BBBY
seen. But
hanging out at yesterday's
they've become a
support.
formidable, I would say, a foe within this
80.64.
space. You go into one, like I say every time, Jenny. If you find one that isn't just wall-to-wall busy, let me know, because I've yet to see one.
I know, it's ridiculous, and everything in there is expensive. So when people are buying bags and bags, I'm like, goodness, I guess, the consumer isn't as stretched as perhaps we might think. But we'll be moving forward today with our 2 Upvotes being Enphase as well as Lululemon. We'll be diving into the charts as well as looking at some technicals and example trades coming up next.
What is that? Oh, Enphase? Oh, green candle here on SPY might be bouncing. At a double doji on the 5-minute last candle. Might be setting up a little engulfing to the upside. Very clean price action on GME. Yeah, engulfing candle there on SPY. Got 2.5 minutes till that closes. GME with a little green above VWAP. GME's at 24.89, up 40.9%. GME, yeah, little green candle over VWAP, kind of bounced up with the SPY there, but basically not getting the downside moves with the SPY. Doing its own thing. It has enough volume. I think it's just on its own today. Maybe with a little bit of push from the SPY on the ups. Up already. Oh yeah, SPY engulfing candle at a support that we had drawn 39.750. Like that might be holding.
This is a name that had some impressive price movement upward, but it's really kind of petered out here. We're only up about 8% on the year now. Things really started to take a turn after we hit these yearly highs near about 340 there. We trended downward pretty dramatically from that point, giving up all three of our moving averages, closing below them to the downside and forming this downward sloping channel here. So now today we're in an interesting point. Right here, we're at the confluence of the yellow 21-day exponential moving average and our volume profile point of control right near the 208 level. Now, we've fallen off a little bit since then. We were above that level for a little bit today, but it's looking like things are starting to weaken a little here.
I sold my
So
bird
this will be
shares.
a key area to watch
I
for the
have some
close.
options on
If
it
we can fight our
that
way
I've been
back
kind of
above that point, it'd be
trading.
a good sign for the bulls here.
But
In terms of momentum,
I'm getting
it's
kind of stuck
favoring
in them
the
now.
Bears. We recovered significantly from hitting those oversold levels a few days ago, but we're
I mean, I like it as a company as far as the curse of the SPAC. I don't know if they'll, when they'll shake that, or if, their financials will
going above that
improve.
Resistance area that I mentioned near 208. That's kind
Not
of
bad, I mean,
evaporated here. Good example
I don't
of
know.
why
I
it's
think they'll
always
stick
important
around.
to wait for the close on your technical indicators. Don't jump the gun and assume it's going to last when the day ends and everything is shaken out here, because you can see it reverses frequently. Looking to some support and resistance areas, probably, as I said, the 208 area will depend on kind of our trajectory going forward here. If we keep going
But
to
you
the
do see
downside,
people using them.
We've got an area right here near about 171, 175 between.
Yeah,
between
I
that
mean, I
area.
think-
We've got our value area. We've got our trend line from the lower part
it's
of our
really
channel,
practical.
and our old lows
Cheap
from
transportation.
all the way back, in last May or so. So that's an area where we could see a buy zone, some traders willing
It's
to
even
step
fun
in
for some people,
and,
yeah.
do some buying in that area. If we break to the upside, we've got the upper
With
level
battery
of
technology
our
where it's at,
channel
I
to
think it's-
contend with. If we can push
it's
through there, 227
viable enough to be able to
would be our 63-day exponential
You have,
moving
yeah,
average in
e-scooters.
orange there. That would be the next
Yeah, big
logical
form of
place to probably
transportation,
look for some
especially in
resistance.
cities.
And it also lines
Even just
up
e-bikes, not just
roughly
necessarily
with our
scooters.
previous high close as well.
Yeah, and Rick, this name, the price target we got
think
today from
e-bikes
this
are,
analyst was $275. That's Susquehanna. I mean,
just getting started.
above, like $70 above where we're currently trading. So you highlighted some more reasonable price targets in the near term. And now, Alex, with that momentum in mind,
what company is going to be the best at it? I'm not sure. I think Birds has the highest market share
that it really had in last year, over the last several years, actually. And there's been this slight pullback in some of these alternative energy stocks. Walk us through a more bullish leaning example trade, perhaps looking to get
I at least like writing it better than like a bus or public transit in a city.
I think it's important to note, of course, those price targets are oftentimes like 12-month benchmarks, and so we're looking for just a couple months out in this example. So I started at that 275 mark. Just I don't have the full 12 months, but say you're a subscriber of the logic that Susquehanna lays out.
That's really future thinking of you, Ace.
This company, you note the recent underperformance, even for its space, down quite substantially, where the over kind of greater eco index only down like 5% on the whole. So this stock really underperforming its peers. Looking for a bounce back, I looked at buying a call calendar above the market, April, May expirations, given a little bit of time to get its legs under it and actually make this rally if it's going to. Looking at the 250 strike, so sort of a round number, but still a pretty substantial rally would be required to get to this level. If the stock's just over 200 as it is, closer to 205 at this point, that's still almost a 25% rally to get to 250. So it's going to need a pretty big move. Certainly this stock is not one that is short of volatility, so it's certainly within the realms of possibility. I think the price reflects that. A 550 debit is pretty hefty, especially for something that's this far out of the money, but just the nature of how volatility works. There's this anticipation that this stock can really move, and so you have to pay
Will my parents buy me the Bloomberg terminal?
When looking at
that would be quite the gift.
Stocks like this, $550 in total risk on this one. The risk profile would reflect kind of what we want to happen.
That pairs to your iPhone. This will be huge.
The apex of the profitability is going to be at the strike selected. So for this particular example, we use 250. If someone wanted to use 275, they wanted to be bearish, they wanted to be more neutral.
I guess I see the e-scooter and e-bike as
of that risk profile.
It's the most, to me, most logical transition to electric mobility. Cars, like, still not quite, doesn't quite make sense. It does for some people, has some use cases, but with where the battery tech is and the weight of cars,
and this name, amazingly enough, is still hanging on to its near
your range and the cost of that range, and then your power density of what you get in a lithium-ion battery compared to a tank of fuel is just not as practical. But when you put it on a much lighter vehicle like a bicycle or a scooter, you do have enough power density to move those for enough range and enough speed of what you would want.
And Lululemon was at one point our
see it as kind of part of the transition to
that doesn't seem like the case anymore.
Electrifying powertrain.
That 430 price target, that would be a
38% transition is
to the
bad.
upside. So pretty lofty
Yeah,
there.
and if you want to be real green, don't go anywhere.
The
The greenest
like
journey is none taken at
We
all.
have a very similar situation shaping up today. We've got a big kind of surge upward that's halting near the confluence of one of our moving averages and our volume profile point of control. So that's happening right around the 312 level. You can see this thick red line. That's our point of control, connotating the area of heaviest
Very
trading.
practical, a lot of
Right in line
fun.
with our 63-day
Don't have to mess with
exponential
traffic,
moving
don't have
average.
to mess
So
with
we're
parking.
backing off a bit from that point, but the big difference here in our two charts is that this one is occurring.
Like in Blade Runner, yeah, you
breaking
do.
out of
Especially
a
if you get one
trend
that
line
like
here
you can
that's
hear the
going to
motor.
downside. So we're breaking above
those
the trend
whining
line
noises.
as well as our yellow 21-day exponential moving
I've
average.
never
It's a
drained
little
the
hard to
aquifer.
see because they're right on top of each other, but we're moving
This is the
above
way.
both of them concurrently.
Yeah, Spy got a nice bounce on that. If I was trading it,
recovering back
it would have
above
taken that
this
long.
305
That engulfing
level
candle,
here.
that
You can see
support.
that was kind of the bottom
See if
of
it
the
makes
range
back
that
up
we
to
saw, this
BWAP
green
here.
dashed line.
Does
So
have
that's
some
another
momentum.
area
GME's kind of getting to the hive, the little range here it's been trading in.
Into the close. RSI also moving to the upside, breaking above that 50 midline. That's a good sign for the bulls.
Yeah,
that
Surons are pretty
we're
cool.
Breaking out
Reasonably priced
in
too,
terms of
really.
price and in tandem with the RSI, showing that momentum is
That's
crossing
about right,
above
Suron.
that 50 threshold that shifts from bearish momentum to bullish momentum here. So
All
in
that
terms
being
of
said,
support
that's
and
why I am
resistance, it would
bullish
not be
on
surprising
Aptera.
if we were to retreat a little bit and maybe touch that
And,
back on the
shareholder in this
confluence
company,
of our trend line and
because
our moving average
it's
here.
another kind of bridge.
That's not a guarantee that's going to happen. That's just
Being that it's
something to
extremely
look out for
efficient
here. So watch
and
around 305. 303.
Yeah, it'll carry
between those areas for
2 people, and it's not a
support.
motorcycle.
In terms of
Much safer, you know, it's a car.
kind of fight our way through
And
this
it's totally
level
gridless, where you
between
can just
312,
fully use it just
confluence
on
of
the
the
solar
63
panels.
day EMA and the
So
volume
you could do that with
point of
bikes
control.
too.
The next area of
And
interest is right about here.
I've wanted to do that to get like some fold-out solar panels that I could like mount on my bikes.
And we've also got
Given it would take, you know, all day to basically get a full charge, but it would just be cool to be powered by the sun completely on a vehicle that could take you
Yeah, and Rick, I like that you highlighted these more
probably like
reasonable
100 miles a
price
day.
ranges, like Alex said, 430, 12 months out. I mean, that's even outlandish.
But then
to be
that
12 months
Aptera,
out. But of course, there is that degree of optimism for a name that has seen
yeah, you can
some
go like
weakness,
40 miles a
especially
day.
The fact that we are getting a nice
built-in
lift
solar
today on
panels.
the back of Nike actually lower is interesting
pretty
to me,
dope.
'cause I would have thought those results signaled some weakness, but I guess not. But we will
Any
leave
hope?
it there.
Yeah, I've got
Appreciate
hope.
all
I'm still in it.
technicals, As always, Rick
I'm
DePaul,
ready.
our chart master. And Alex, when looking at
I'm slightly
Lululemon,
more
the one
hopeful
thing that is,
because
I'd say, a pretty
GME hasn't released their
big
10K
consideration is
yet.
the fact that they still have their earnings this
There
quarter. Their next
could maybe be
Tuesday
something on
after
there
the closing bell, so there is still
relating
that
to
near-term
BBBY.
catalyst to look forward to in Lulu shares.
Yeah, we might have to adjust that kind of
Oh,
loose
yeah.
guideline that we have.
And if
that
GME
Nike
gets
marks
above-
the end of earnings, maybe Lulu now marks the end of earnings.
It's not worst case, but
looking forward to that. That'll be
at the very least, if GME starts getting crazy above 30, it will probably pull BBY up.
Stock's obviously making a nice move
I'm
here
hoping
today.
BBY is going to make a move on its own
To the
from
overall
news,
market.
but
It's obviously contra to Nike, which
could
is
just
now
make a move
sold
from that.
off in response to its own earnings. And Rick
Hey,
talked about
Emmanuel.
kind of this
Doing
big,
good, man.
you know, kind of all this stuff converging basically
Yeah,
right at
yeah,
the
just
exact
bicycles
price
for
that
sure
we're
is
at.
cool.
So there's a lot of sort of resistance, support all going on at once, and maybe this move is going to just need a little bit of time to, you know, kind of work its way out, and you know, we could see this one sort of trendless for a little bit. So if that's the case,
100%.
you can be bullish,
Yeah,
like the analyst said.
the e-bike thing is just more practical, so you can travel further
Therefore, you don't actually need
and faster. So that's the main limitation right with bicycles is
the beauty of this type
you're
of
limited to your
trade. So
energy,
the most recent lows in
and
these
you can
two
only go
recent
so
bouts of
fast.
volatility over the last year have been around 290, and so I centered around that level for this particular example trade. Went out to
Hold your
April,
spy puts.
looking at selling a put.
And we did have a pretty good drop there. You're probably up on them.
Anchor short strike
But
here.
when Powell comes out in 30 minutes, or when that statement comes out, you're going to see a huge move, probably both directions. So you could close it here, wait till 2, and then get into them again.
Max profit would be the
And
credit
it very well could go up to 400,
$150
or past could go down to
and Jenny, I
395.
think this is the key piece to me on
So
this type of a trade.
it depends on if
Why
you're
someone
planning on
might
holding
like
it
this.
through that statement coming out in
One,
30
you have
minutes.
Elevated implied volatility right now because you have that earnings event on the horizon, but also with the stock making a massive move, it's just that pile-on effect. Do you
But if
want to
kids raising on
be
e-bikes,
that-
all the
the follower
parents are
of
hitting the
that
motor to
trend,
the coolant
or
spread
do
to
you
keep the
want
heat
to
down?
Give
What are you
yourself
talking
some
about?
room in the event that this stock needs to give back some of those gains before going higher. And so it just comes down to kind of how you envision the price performance.
Well,
going to be.
personal price
Obviously,
target on
this one
BBY?
is
I
defined
don't have
by
one.
profitability
The
as
next
well. So
couple
if
days,
this stock were to roar to
I don't have
430,
any expectations. I
like
think it can
the-
move up
the
at any
price
moment.
target suggests, only make 150
Based on
points,
news
so
coming out
probably not
from
the strategy
GME or
to select.
BBY itself.
You know, and Lululemon to
You're looking
me
at like
always marks the
cycles and
beginning of
stuff.
The next earnings season. I know
We've
it's
probably
this
got
earnings season, but it's that in between
couple more
game
months
where that
if
almost
it's
signals
just
the fact that we'll get
going to be
banks
repeating a
soon.
pattern
So
here.
lots to look forward to at least over
But
the
with
next
the
several
news,
weeks.
that
They do
seems like
report
it's
next Tuesday after the closing bell. Also important to keep in
going
mind
to be
for both
coming
of
out.
those example
Seems
trades
like it'll
today,
be
they do
sooner
contain
than that.
multiple legs that can lead to higher transaction fees. Short options can be assigned
So-
at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next,
Night Cash
it's
is
time for FOMO.
flushed.
We are looking at GameStop. Shares are still up over 40% on the back of their quarterly results. We'll dive more into those numbers coming up next.
Yeah, you will. Hear what you guys have to say. Party owls. Party people in the place to be. Motors do heat up once you start overpowering them. I mean, that's what blew your motor ace, was probably just heat. The batteries heat up. There's cooling that needs to be done on motors, batteries. The, what's it called? The speed controller? Is that what it's called? I don't remember. Yeah, the controller. All that stuff heats up. But most e-bikes, they're just air cooled. They don't need to water cool them. It's SPY moving up more. See if we can grind VWAP before the statement. A reverse split might be the best thing that happens to it, honestly, Julian. I might, we'll probably get a new QSIP with that. That could cause some force or voluntary closing of shorts, naked shorts, normal shorts. You can look at other stock examples in recent history that have reverse split and had squeezes before the reverse split, during, after. So very well could be a case like that. I know what you mean. Typically reverse split seems like a fake way to prop up a price. But I'm not, it's not necessarily the case, I guess. Yeah, it's not technically bullish or bearish. It's not changing anything fundamental. Having a higher stock price makes it more attractive for investors, gives them the ability to have a carve out. I don't think they can have a carve out without having a higher than, I think, $4 share price. So lots of reasons why they need a higher share price. Least of which it might just be a forced of closing of shorts, but they might not even do it. They just said, so far we've only heard that they might do it and that they're going to have a vote on it. We don't know when there's going to be a vote, but there might not even be a vote. They might have a vote. They might have a vote of a reverse split. The only thing they gave us was a date for when you have to have your shares recalled if you want to vote. That is next Monday. So they might have a vote to reverse split. No, please hit the like. I don't care. Thank you for your likes, guys. Experienced bag holder, there's probably a free membership if you scroll up. Ace Ventura makes sure no one in the chat is gray, so don't insult him. Go up and find that free membership. The controller heats up, yeah. Yeah, it depends on how much load you're putting on the motor, and your controller's not demanding so much from your motor that it will heat it up, which is fine. If you start modifying stuff, you can definitely push your motor to a point where it heats up and then fries connections and stuff. Burns up the Hall sensors, like, well, in there, you don't even have to scroll up, you just gifted your membership. Thank you, Ace. That's for you experienced bag holder or Julian, whoever gets it first. Yonalo Papao. There's, yeah, a couple people have puts in here. I don't have any margin for futures, so I'm just watching. Pretty good trade going on here, though. This bottom we kind of called. I traded it in my mind. Yeah, I should get some volatility, though. Pretty big move back up on SPY. There you go, Julian. Well done. Julian's been here a while, so that's a good fit. Thanks again, Ace. 53 million volume. Still more volume than SPY. Way more. SPY's volume is very low. SPY's volume is 29 million. GME's at 53. GME moving up a little bit. SPY has been grinding up the last 25 minutes. GME's getting back to its high of the range. It's at 25.11, up 42%, or $7.50 roughly.
The ego on you.
That means some Bank of America calls. I think the banks that don't go bankrupt are going to be a great place to the upside. However, I think that they will probably get pulled down still with more news and more catalysts of, you know, if FRC or Credit Suisse go under. So that is, I guess, the risk. But depends on your time frame. I think you usually like to go pretty long time frame, Al. So yeah, maybe I could see a short-term bounce still on all of these. It's still not at crazy levels, honestly. Bank of America hasn't even sold off that much. It's at what, 2021 levels? Can't even see COVID on here. Oh, is this COVID? Yeah. Can I buy the Fed? I'm someone important now. Yes, you are.
Time for FOMO. I think these two go hand in hand because that's really what GameStop is. It's like fuel for that fear of missing out. Like this stock starts running, like everyone's got that feeling like, oh, again, how high is it going to go? Like, should I be in this?
It does definitely evoke that feeling, especially when I saw shares were up yesterday, actually, when they were first reported, up as much as 55% in reaction to their quarterly update, which then even gets me excited after hours. I mean, that's a crazy move despite how low shares had gotten. But now today's move actually lifting it higher on the year, now higher for the month, obviously higher for this week, still up about 42%. And I keep waiting for things to fade here, but they haven't really faded that substantially. And I think a lot of this obviously was focused on the fact they did report that quarterly profit that beat street expectations, their first profit in 2 years. Now, sales did drop slightly to $2.2 billion, but did beat street estimates ever so slightly. They also said they're trimming their inventory to about $683 million at the close of the quarter. Compare that to $915 million last year. Now, on this call with analysts, the CEO said the company is taking steps this fiscal year to improve their efficiency and reach their profitability goals. And I keep saying this, Alex, but efficiency seems to be the word the street really likes. They said that these steps do include cutting costs, especially in Europe, leveraging GameStop's strengthened financial position to continue to improve its terms from suppliers, as well as getting a full allocation of consoles to meet demand. They are building, they said, this stronger presence in some of the high margin categories like collectibles and toys, where the company is also seeing pockets of growth still on the table. And the CEO did highlight the fact that they are now a much healthier business than they were to start 2021, which is honestly something we can't say for every company, especially those that are exposed to the consumer's spending. We did see a lot of analysts then update their coverage. I can't say it was necessarily all to the upside. It was a pretty mixed picture, but one analyst I liked, that was Wedbush, raising their price target to $6.50 a share from $5.30, noting that GameStop did deliver this profitable holiday period, and they liked that, but price still implying a good deal of downside even with today's, or especially I guess with today's move. Now, I did see also something, Alex, that said that they could have benefited from the release of the PS5, the PlayStation 5, which I have been very into. I just got a PS4, so I'm now very into gaming in GameStop. But all in all, this name moves with volatility. Actually, we saw meme stocks collectively rally. Bed Bath & Beyond now lower. I mean, these names have been everywhere today.
Yeah, and I think that the big question mark is this a one-off, or is this something that's going to be sustainable? Obviously, clearly, revenue didn't beat by that much. So this is a story of efficiency, or basically how they were able to show profit. So can you do this again? If you can, we're talking about a company now that maybe has viability, and some of those question marks, and the reason this is such a shortage stock and there's so much bets against it, we'll have to reconsider those positions as well. But I think today is much more a matter of the stock in question. You know, if another name that isn't as active and have that meme element provides the same type of report, do you get this type of reaction? Maybe, but so much of GameStop is the fact that it is GameStop, and there is this polarity in how this stock trades and intense volatility. And then you got some good news. It's going to really make things quite interesting. I think you're seeing that today. The stock really, really soaring. up over 40% right now. It was up over 50% at one point. These are big numbers even for GameStop.
They are, and I will say, not to discount the fact that profitability is important, but we also have to keep in mind this is just on the fact this company made money. I mean, I think that's perspective to, you know, to really look at the fact that this name had lost money so consistently that we're rallying on the fact that for once they didn't lose money. I will say, though, the short interest in this name over the last several months has gone down slightly. I follow the names that are heavily shorted. Their short interest is about 19%. It used to be well over 25, so it's still high, but it is falling. But yeah, this name, I mean, it's sort of like the AMC story, although I will say I do think it's very important to differentiate the two, because this name was able to prove that it has its own balance sheet, its own fundamentals, its own earnings picture, completely apart from the meme stock trade. So when trading this name, Alex, I do advise being risk defined, because with a move up, we could see volatility and we could see some of this momentum obviously fade. We could see it continue, obviously, but there's always that risk with names that can climb as much as 50% in an earnings catalyst.
Yeah, and I think that when you're looking at the fear of missing out, I think it's clear that that's probably to the upside, at least on a day like today. And, you know, obviously being a shareholder, you're going to have that unlimited exposure. Buying a call, you're going to have that unlimited exposure, but you're really paying a lot in implied volatility and the time decay and something like that. And those are strategies that I think those who are already involved or watch these names are already quite familiar with. So I want to go and look at something a little bit more on the strategic side, risk defined, as you said, and also something that doesn't need a tremendous continuation of this move, but rather just a holding on to some of these gains, or even a giving back of some of them where you can still reach max profitability. So I looked at selling a put vertical, same type of trade that we looked at in Lulu, going to April the 16.5 put vertical here. Break even, if it's done for 50 cents, will be 18.5 on $200 in risk. So 4-to-1 risk reward ratio. It's only 30 calendar days away. Break even at 18.50 is a good, almost, you know, it's a good amount below. Let's call it 550 below where we're currently trading. So pretty impressive. 650 actually. So when you start looking at this, Jenny, the one key aspect when you're talking about GameStop, this stock is up 730 today. Could easily be in the money tomorrow. That's an important caveat. So while that is a big percentage cushion, you're talking about a name that swings around tremendously. That's why we're able to do this. That's why it's able to be so far the money, because it is realistic that GameStop could literally be there tomorrow or even further down tomorrow, the same way that it could easily be tremendously higher. So bear that in mind. Volatility options are all priced based off the underlying that they're derivatives of, and in this case, we're looking at GameStop, so there's tons of volatility.
Yeah, I mean, another name where we've fallen about 50% from the high, now we're up almost 60% from the low, but it's all perspective, like you were pointing out earlier with those percentage moves. Right now, we are still well below where we currently traded in GameStop, although a nice welcome 40% move higher on the back of their fourth quarter results. Now, that does it for our FOMO segment. Coming up next, we will talk all things NVIDIA. Analyst notes following their GTC event yesterday. We'll discuss that more with Caroline Woods coming up next.
Well, there you have it. I mean, the short interest they get it's the same data that we have. They look up short interest GameStop, it's going to say 10%, 15%, whatever. So, yeah. The back end, if there's suppression of the price with swaps and this and that, that's not going to come up on a self-reported short interest report. So anyways, buy's kind of hanging out here. We've got 20 minutes till Powell. Jenny likes GameStop. You hear Jenny? She got a PS4 and ready to get a PS5. She's a gamer. Imagine being a new gamer in 2023. And blown. Be somebody. Take what's yours. I like this play though. Oh yeah, you're right. Little pop on BBBY. Put credit spread. Looks like what his play was. It's a good trade. I'm not playing it. I'm in the gulag. I'm stuck with nat gas until it rallies. My margin's tied up with that. We suck again. Basically, that's how I feel. Thank you, Ace. Another gifted membership. That can be for you, experienced bag holder. I think you were the one complaining about not having one so selfishly. Little peepee. That got me on L Street. Jeez. I Troy boat, man. I didn't figure out what's going on with the volume. I mean, there's no way anybody can figure out what's going on with the corrupted, manipulated market. We can all just speculate. But remember that 8.9 million it was yesterday on GME, which really was like around 5 million, but end of day it showed 8.9. Today it's showing 15.8, so it doubled the volume on yesterday's candle just since yesterday. So I don't know, maybe internalized. Troyabo, you got a membership, man. Congratulations. I don't know if it's showing internalized volume or what, but yeah, little cracks in the Foundation. Max Carter, well done. Thanks, Ace. How are you sniping these guys out? You're like just right on point with how many people that need a membership. Oh my gosh, good job. Yeah, there's probably more free memberships, you guys, if you haven't become a member. And then if you're on our Discord, hit me up. I'll give you the happy crew roll. Ace, you're sad about all these people being gray next month. I'm sad about all these people I'm gonna have to figure out to get off a happy crew.
The ego on you.
But I'm also happy, of course. The first person that asked for a membership from Ace. I thought you'd never ask.
The ego on you.
Thank you, Ace. I appreciate it, man. MVP for sure. You're a member. You're a member. We're all members. Bye, moving up some more. GME as well. GME's getting a little poppy here. Might break this resistance. Jeez, Ace, I think you... All right, that's for you, Emmanuel, and or experienced bag holder. Daddy Ace, Papa Ace. You guys got to click it and accept it. You might have to link your YouTube account with a Google account to be able to accept it. That's the word on the street.
Its latest slew of product and partner announcements at the conference reflect its unique AI pipeline
GME.
that also expands its
I should
total
have more
addressable
calls.
market. Oppenheimer, meanwhile, you can see is up to 300 now, also outperform Wells Fargo and
Click it.
Rosenblatt
Do it.
at
Experience.
320.
Do it.
Mizuho raised to $290 from $230, also kept a buy rating. Believes Nvidia is past the seasonal trough. The stock remains a 2023 Mizuho top pick, despite it being up so much year to date. I will say, though, the fact that it is up 85% now year to date has Deutsche Bank staying in the cautious camp. They boosted their price target to $220 a share from $200, but kept a hold rating. They continue to view Nvidia as the undisputed leader in AI, but believes much of the goodness has already been reflected in the share price. So when you take a look, $220 price target, that's about $50 lower than where it's currently trading. So a hold rating, but it sounds like a pretty bearish price target at this point. But overall, the stock continues to be on a tear, up more than 3% today and up about 5% this week.
There you go,
The
Emmanuel.
one thing that maybe can provide some solace
Figured it
to
out.
investors who are buying into
Flagos ready
this,
to
but
tank.
like everything,
Getting there,
it
getting
seems
close
like
to you out. 15 minutes.
Is this a little bit of just the fad, and it could fade, and you're going to see a
Might
little
listen
bit
to Stock Market
concerned that
Live
it
to
was
see if
overblown. The one thing that you can kind of use
see
as
his
a
take on
counterpoint to that is
what
these
it is,
big
what's in
mega
there.
cap companies that are plowing so much money into investment into this are almost being forced
We'll kind of see
to,
it from the
because
market,
if they let
but
one of their competitors get there first, it could be seriously detrimental in the long term. So it's truly an arms race amongst the biggest
yeah, Nvidia,
companies
the
in
tech
the
ones are
world.
really what's holding
Whoever
up
wants to make
SPY
a
like
major
crazy.
breakthrough and get there first, and this chat
Nvidia,
GPT kind of revolution has
even
just put more
Microsoft.
of a public
Look at these things.
spotlight on
Apple, I
it.
think,
This
too.
has been going on for years and years,
So
and now it's just
banks,
known,
financials, all that stuff.
where it's at and where it's potentially going.
Holding the SPY down.
And for Nvidia, they just get
So
to
if
sit back
big
and
tech
just start
starts to let go,
shipping, these chips
Yep.
to whoever wants them. And it sounds like the
My first
orders
name?
are piling
Happy.
in. Any final thoughts here before we let you go?
And that's the thing, NVIDIA can have a piece of all of
Is
those
that hard to
lines.
hard to
As I said,
understand?
it has partnerships with Microsoft, Oracle,
Happy.
Alphabet, so it's not
I've never
like
seen Happy
it's
Gilmore. It's a real
competing
name.
how the others are, and really it's seen as kind of the undisputed
So it's your
leader.
birthday.
I will say, despite the fact that it is so much up,
Jerome.
year to date,
Hey,
Alex, the analysts
Jerome.
that I talked about at Deutsche Bank that are more cautious, they're very much in the
Hi, Ryan.
minority. Only about 24% of analysts at this point are in the hold camp, despite these huge year-to-date gains.
Buy still moving up.
74% have a buy rating. However, something to keep in mind: the median
GME
price
not
target at this
breaking out of
point
that
is still $275.
Bed Bath
so
though
that's only about
did move up from yesterday's low.
$4.50 higher
Happy to see that.
than where it's currently
Still
trading,
has
so less than 2%.
quite a ways to go actually to
So
VWAP.
despite the fact that so many have a buy rating, it makes you wonder if we're going to continue to see additional price target hikes at some point. But no, you
Can't
made
hear
the
WeWo
comparison
password.
of this is the fake meat
This
of
account has like
2023.
$500 in
We
it,
can just
so
hope that it has a little bit more staying power
maybe would be
than
willing to give
some
it to
of
you.
those fake meat
The password, just to look
I
around.
completely agree, Caroline, and I'm part of the camp that eats the fake meat, and I'm even
I don't
more
even think
of a
that's
fan,
fine,
I think,
actually.
of NVIDIA.
I don't have really
and
any
some of
money
their
to do
updates
anymore.
from that GTC event yesterday, but appreciate all of
Not
your
'cause I don't like
insight
it, I
on
just
such an interesting name that's been
got enough
year to
other
date,
brokerages, and I
even
don't-
this week
ended up
alone.
not trading
But
this
we'll
one
leave
very
it
much.
there. Caroline Wood, senior markets correspondent for the network.
true.
Coming up next, it's time to preview that Fed decision, what we've all been waiting for. We're about 13 minutes away. We'll talk more
All
into
major short
expectations with
pulling
George Tillis coming up
down.
next.
Betting the farm on short positions. All right, let's see. We're gonna listen to Stock Market Live for a little bit, see what he's talking about.
So what I understand, correct me if I'm wrong, the two options are more inflation or recession. No.
So we'll cover
The broader theme of today
the filing
is what is more important to Powell, financial stability or price stability. And what Powell is going to try to communicate today is that they value price stability and that nothing will get in the way of that. That is what people kind of want to see. But that is where we're at. That's why it's like you could tie it in to more recession or more inflation or a recession. But realistically, people want to know, okay, is Powell at the first sign of financial instability, is he going to sacrifice price stability? Or is he going to say, I don't give a shit about financial
Yeah,
stability?
I've seen you on there, actually, Tasty.
And we are going to go and
I got
still
banned on this
focus
channel.
and place our emphasis
I called
on
him out
price
on something.
stability. And that would be, focusing on the rates and everything
I
else.
just called him out how he's
So
emotionally
that is
adverse
where
to
we were looking to see
trading GME or
where
AMC or
Powell
any of these.
in
Not
the
AMC,
Fed,
actually, just
it's
GME.
not even just Powell,
But we
it's
won't-
everybody
we
at the
won't do
Fed.
that.
Where are they focused right now? And then to
There's no
kind of
proxy for
understand
BY
the
vote.
weight of the
There's-
situation
they've not even
is what we're
they've
going
not even
through
declared that they're going to have a reverse
to
split
change
vote.
How Powell is pursuing
My
the
name
Fed
is
mandate.
Steve Birth, and I'm 500 pounds stripper from New
So
Orleans.
you could tie it into recession. You could tie it into inflation, but
That's-
you see
yeah,
where
Mr.
it's like,
Money.
that's
You
not
call me
what
Mr.
today
Money.
is about.
Especially since you're being so
Today is about
disrespectful.
how he's going to respond, and based on how he responds today, then you can make a better judgment on recession or inflation. You see what I'm saying?
Interest keep going up.
So
That
it's
costs
like
cost part.
recession or inflation.
Yeah,
is
I don't
like
think
two
it's as
steps
tightly
removed.
correlated as that, but
we
I
have
see
to
what you mean.
first see how does Powell view all of this, and what is he going to prioritize. Like, this is, in a weird way.
Yeah,
this
I don't
is
think
like
Powell's
going
going
up
to
to
deviate
Powell.
from what the Fed
This is like
Fed
Powell's
funds
two
futures
children
rate is
hanging
pricing
off of
in
a
at
cliff.
25. He
And
hasn't
now
yet,
Powell
so
has
that'd be
to
crazy.
do the Lion King scene where he tries to save his dad, and then Mufasa
This isn't a
come
mess.
up
This
out
is
of nowhere.
beautiful consolidation,
so Powell
Donald.
has
Get your,
to determine
get your
which one
bearish
he's gonna
Elliott
save.
waving $10
Do you
price
see what I'm saying?
crap out of here.
So imagine Powell is holding on to two people hanging off a cliff. And now he could only hold on
Yes,
to one of
Mr.
them.
Money.
Price stability.
You guys do.
Or financial stability.
You have more volume than the
And
SPY
people think
today.
he about
Whoever
to
pointed
trick
that out,
financial
shout out to you
stability
again.
like it's Mufasa and just
SPY's
let
got
go,
33
and then it's
million,
gonna fall
31
to the
million,
hyenas,
GME's
you know
at
what I'm saying?
55. This is the way.
Otherwise, they're going to be like,
GME is
okay,
the new SPY.
maybe
This is the
Powell's going
SPY
to find
now.
a way to hold on
All
to
the
both.
memes, insert them here.
But that's what today is about. And depending on which child he selects, right, or whoever he picks to save, that could tell you a lot about what's happening and what is going to happen. Final countdown, 10 minutes, 9 minutes.
Yeah, BY did bounce off that
so
nice
there it
bottom
is.
there. It's just noise. BA beautiful.
So are the bank runs like the stampeding wildebeest? Yes. 100%.
10 or 100. All right.
100%. Because whatever he does, whatever falls, you have to
Mando
deal
out
with
today?
what's on the ground right now, and that is the banks.
Wait, is there
why
another
whether
season
he
of that?
hikes or whether he pauses, people are still worried about what it will do to the banks.
I am the spy now. Yeah, you
because
got
those
it. You got it.
wildebeests are still there. Yes.
Wait, what's the name? Is it Mando? Is that the name of the show? No. Mandalorian.
Use my Prime
Is there a new
sub
season of
in order to
Mandalorian?
chat and inform you.
Oh,
It
what?
was a stampede of
All right, I gotta check
gazelles,
that
not
out.
hyenas, and Mufasa fell into
I
it.
started watching
Spoilers.
Andor or whatever. That one's all right.
You are such a good
We
person.
didn't finish it. We just watched a few.
You know that? You're a homie. This guy, we're talking about Lion King, and he gave us the spoilers, parentheses.
Closed caption on us
Bless you,
influx
bro.
cleavage.
God bless. We need more
I
people
should have
like
changed
you.
it.
You know that? Because I'm not like you. I'm
Andor, yeah.
But you are very considerate. Yeah, he just gave
Bad
me a
Batch
spoiler
season?
warning
I
on
don't know what that
Lion
is.
King.
Well, what's
That's
Powell's
crazy.
mandates? It's not to save the banks.
There's an important
It's
catalyst that is probably
financial. What does he always
one of
say?
the
It's financial
reasons why we're
stability
seeing, Bitcoin move
and
higher, technology
I
names,
don't know,
especially
what is
the
it?
mega cap
It's
names,
inflation
which perform exceptionally
and
well
labor,
in the last
jobs.
couple of weeks or so, and that has to do with the balance sheet. The Fed's balance sheet has actually
Not what it
increased by
always
about
is.
$300 billion.
The labor market and
in the past
inflation.
couple of
Strong labor
weeks, and
force
that's proposed,
and
that's due to
good
the
inflation.
proposed discount window lending that's now available to all these
So
banks.
he could say to the banks,
the
not
market
my
likes
job.
The balance sheet expansion. I don't necessarily think the
I'm
market is going to
I'm just
like
the Fed, the
a
rates man.
hawkish tone from the Fed. They have to maintain their mandate on
This is
dealing
all in
with
the playbook.
inflation.
To kill the economy,
because
got to
that's
kill
their
some banks.
congressional mandate. But at the same time, they're probably going to address financial instability.
Backwards
as
TV
one
enjoyers.
of the concerns that they have going
Andor
forward
season, but
to
Mando's good.
perhaps, cause them
Yeah,
to
I liked
potentially pause on
Mandalorian
rates,
better than Andor.
versus pivot on rates. But if you look at the bond
guess I
market,
just like
there's a
that
lot
actor
going
better.
on. The bond market suggests there's actually a cut by the end of the year, looking at 2-year Treasury rates by close to 70 basis points. So
Casino's
a lot
opening
of
soon,
mixed
and this
signals
time we
going
thought
on.
it was
The
open
economy's still robust.
this whole
You can't
time.
discount that, but this will be an interesting
made
one. I can't say which way
Nice
the market will
little
go.
range-bound trade today.
Maybe the
Honestly, you could have
S&P,
been
which
just
is really
flipping
encroaching
shares
on its
here if you
50
wanted
period moving average,
6%
potentially some
top to
room
bottom,
the
back and forth.
40-50 area. But again,
Helmet on, ready for
it's
the
about
whipsaw.
volatility. I think that's really what you have to
Save the
consider
banks,
if
but
you're
not to let you
placing
know.
trades right
Yep.
now or putting on
Keeping the market
additional
economy
investments.
propped up and accelerate trickle.
I'd like to call out to the 2-year. Every
This
time
is
we've seen the
something
2-year
different than I've heard from
collapse
him, Don
below
Rowe.
the Fed
I don't
funds
think
rate,
I've heard
with
those
the
words from
exception
him.
of one time in 1978 that has signaled the end
Screenwriting
of a
snob.
Fed tightening cycle. So while there's going to be a lot of focus on the 25 basis points that
What do
we're
you guys? You guys
likely
have
to get,
puts
like
on SPY?
85%
I know some of you do.
favor that's going to be the
No
policy
calls.
action.
You guys, come on.
To me, it's more the fact that we
This
haven't heard from the
rally
Fed
is going to
throughout
continue
this. We've seen
with
some of
Powell.
the changes
He's going to say
they've made on
25
the
basis
back
points. He's
end,
going to be somewhat
opening up some
dovish,
of those
and we're going to
swap
probably
lines
keep
more
ripping and fill this
frequently,
gap.
those new lending facilities that were set up, but we haven't heard them steer towards the market expectations or hold
invested
their
70
line.
hopes to make
You mentioned gold,
$1.11.
you mentioned Bitcoin, you mentioned rates.
Hope you have a high
also
probability of that,
euro-dollar
because that's not a very
spreads,
good
and
risk
there were
reward.
historic collapses in some of this stuff, all indicating the same thing, which is even if you get to 25 basis points, the market sees lower rates by the end of the year.
I think FRC is probably going to go
The
bankrupt.
Fed's got a long way to go if it's going to
Yeah.
steer towards that narrative. And where the volatility is going to come is how close do they get? What is that message? So when you start piecing things together, it seems like the base
Guessing about American
case that the
economy?
market's seeing, hike to 25, dovish pivot
it's in
in the
trouble, like
commentary
the rest of the world?
and sort of the guidance going forward. So you kind of, if you use that, you can kind of see
Something
what
during the meeting? Oh my
reactions
gosh.
one way or another could be. If they come out with this hawkish line, I think we can expect some volatility.
Some interesting analysis
I
showing
think
that the
so.
financial
Look,
market volatility is notably higher during Powell's press conference than those of his predecessors, and that
Okay, we've
volatility
got
is higher right
4.5
after the statement.
minutes.
Most intriguingly, since COVID,
Here we
the
go.
market
I need to probably
reaction
zoom
to
this
the
thing out. Did we
briefing
get the whole
goes
move?
in the opposite direction to the reaction to the statement. So financial stability worries
It's
are putting
much
more
less stress
focus
when I'm not playing
on
it.
the Fed and what it does to bond holdings, which has been shrinking since June. Most Fed watchers expect the Fed to continue shrinking balance sheets to 95, but that could change if financial condition worsens. The key questions for the outlook right now are going to be, will the banking turmoil constrict the provision of credit? And will that in turn mean for growth and inflation? A few
Did
days
grind its
back,
way all the way
Goldman
back to
Sachs
the
suggested
WAP.
maybe half a basis point hit to growth rate. JP Morgan saw 0.5 to 1 over a year
Yeah,
ago.
yeah, this nat
Still
gas
the early
program.
days of the Silicon Valley Bank collapse, but let's see if Powell Powell gives us any insight into
Should
how
have
the Fed
listened
is
to
thinking
Biden
about
when
this,
he told me.
The
Coming out
extent to
with
which
Fusion.
officials will raise their
Don't
outlook
need
of how
that
high
gas
rates need
anymore.
to go will depend on how much they think financial conditions have tightened because of the banking crisis. As banks pull back on lending and credit because of
There's a pop
uncertainty,
through.
demand for slow
VWAP on
for goods and
SPY.
services are making it more
Starting to get
difficult for
excited
business
for
to
J.
expand.
Powell.
Estimates vary, but economists say that tighter lending standards caused by uncertainty are equivalent to raising the Fed's benchmark anywhere from 25 to 150 basis points
Sell.
if these financial conditions
Call
persist.
before leaps.
So some economic analysts are wondering whether the Fed will scrap
How
economic
much
projections at this
notational
meeting
value
because
for-
of certainty of how
yeah,
deep this
capital
banking
invested.
crisis would be. That would be similar to
Buying
what happened
pumped?
in March 2020
Yes.
when Powell said writing down a forecast didn't seem
It's
useful.
pre-volatility
However,
volatility.
some analysts say withholding projections may send a worrying signal about the strength of the economy. In December, policymakers saw interest rates rising to a median
It's
of
over,
5.1 by
boys.
the end of the year. Powell signaled that this month those expectations could
50
go up
basis points,
given
dude.
strong inflation.
He's surprised
stock
with
trading.
50.
Let's
That
go,
would be
baby.
gnarly.
God bless you. Happy vacation. So here, let me get you a couple
Full
more.
sending, 0 DT.
Chad, the event is about to
yes.
happen. So Goldman Sachs looked at how the Fed has set policy in
minutes
the
or so.
past when the stress of financial
See if
conditions
it gets front
have
run.
threatened to disrupt
Get leaked.
economic activity.
Got leaked.
Excluding severe recessions, they looked at 1966,
that one time
1988,
where it had a
1994,
huge move,
95,
like,
and
5 minutes
1998.
prior.
Central bank eased monetary policy in 2 of the 4 cases and paused tightening in a third they found. Overall, historical records suggest FOMC tends to avoid tightening in times of financial stress and prefers to wait until the
No, I
extent
think we'll
of the
get
problems
25, yeah.
becomes clear, unless it is confident that other policy tools will successfully contain financial stability risks.
Imagine if he pauses.
2 minutes, Chad.
A pause, I think we'll probably break that 416. I think with 25, we'll probably come back up and retest. Maybe at least these levels fill that gap. Maybe even today,
All right,
honestly.
good luck, Chatadonia. We're at VWAP. You're right where we opened up today. The jitters are
2 million
real.
notational.
A lot of things are
Not
working
bad.
into this. And get ready. Again,
Not
a summary of
bad.
economic projections. That's where
I'm
you
saying
should be going
75.
to
Someone's
right
wrong.
away.
Pivot
That's what
causing
I'm
a
going to be
crash.
on right here.
It could. That's a good point too.
Again,
Could go either
right
way
when
with
the
that.
statement comes
I
out, it'll
suppose.
say projection materials.
If he doesn't-
I would go straight to there.
doesn't raise enough.
If any of you want to
All right,
go
1
straight to
minute.
the statement and just look for the
Or straight
first
about to
paragraph,
start.
second paragraph,
Basically.
look for ongoing. That'll be the next segment of all of this. But here it is,
Should we
Chad.
have a little poll?
1 minute remaining.
Real quick.
Woo! And like they're saying, usually the Fed,
It's too late,
the
but-
statement is opposite of what the press conference is going to be. So get ready for it. Get ready. Wow, what
There
if
you
they
go.
pause, dude? I can't believe
Point
Fed
25 or
futures
point
are still
50, that's all
pricing
you
in a
get.
Pause 1 minute ahead.
I'm ending it in 30 seconds. You know, you're getting 75.
Man. Make sure your stream is caught up in real
Pivot signal, a
time.
huge jump. Yeah, that after he pivots, then what? The market historically comes down like another
Alrighty.
30%. So we're still due for that once he pivots.
15 seconds. Good luck, Chad. Stay in the game.
There's
Remember,
more of
this
you
is
than I
part
thought that
1.
did 50.
So part 2 is 30 minutes later, and a lot of things can happen
Oh, I'm
afterwards.
sweaty.
But just get ready for
Here
the
we go.
SEP.
Let's see. Rally.
And 3, 2, 1.
Interesting.
Boop. And what do we got? What do we got? Oh, whoa, 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 whoa. Fed Bank says, oh, whoa, whoa, whoa. U.S. banks sound resilient, but events weigh on growth. They raise by a quarter basis point.
Quarter.
Fed will continue same pace of reducing Treasury and MBS. They said some additional policy firming may be appropriate. They forecast rates at 5.1 by the end of 2023 and then 4.3 by the end
it
of
break a 400?
2024. So that's it. No, it looks like nothing shocking.
Yeah.
Nothing shocking
25,
again.
5.1
Let's
and
go to the
2023.
SEP right now. 5.1 seems to be it.
And then 4 point something in 2024.
So that's it. No real big shocks. Let me check the dot plot again. 5.3.
This line's
And then
pockets
I
of
think they
three.
lowered 2024. That would be it. You're running for now. That's a big, big pop.
See if,
Holy dollar. It's good for now. Let's
see
see
if
though.
GME gets some of it.
It seems like Powell's playing the nothing happened, slightly addressing it. So again, the median year-end forecast is
pop
the
on oil
same
from
as
that, too.
December, and they're saying they're still going to do quantitative tightening.
Quantitative
watch some
tightening
of the
after they
regionals.
just
That's your first pop towards the
quantitative
high.
ease their way out of 7 months of quantitative tightening with just two, 3 banks failing. Yeah, let's get back to that long, slow pace of tightening the balance sheet. Run, Jimmy, run. Nope.
No. No.
Not a huge move. Not a huge
Yeah,
move.
bro, they're pausing. No. I think we could buy the bonds.
Pausing.
Hold on, they're pausing. Look at ongoing is no longer in the statement. Nobody said this yet. The committee will closely monitor incoming information and assess the implications of monetary a pause for next meeting is on the table. So
Pause for
I'm
next
thinking
meeting.
ahead for next meeting.
Huh.
But no, they took it out. They took out ongoing. Ongoing no longer exists. 12 months in a row. It is not in this statement right now. So that's going to be
If
the
you had
next
calls,
step.
yeah,
Of
you
this.
could
They're
sell
pretty
some
much
now.
saying
It'll probably chill out
we're
until
raising
Powell, and
rates,
then you're going to
we're
get
still committed.
probably similar volatility
But
around
now
then.
the pause is on the table for next meeting. Not a cut, just a pause. But that's a big shift.
Pause for next meeting.
So that
yeah.
is, I think, how they're responding to all this. So let me
Let's
see
see.
the strike through comparison. Yeah, ongoing is not in there. They say they changed it to some
SPY's volume's still
additional
lower.
policy firming may be appropriate. Do you see that? That's a huge difference. The committee anticipates some additional policy firming may be appropriate in order to attain a stance of monetary policy. So now they've said some additional firming, but no more ongoing rate hikes. That's it. So that is a big
You're listening to
shift
Stock
in
Market
Fed
Live. You guys
policy
can show
for
them some love
now,
if you
but
want.
they did go ahead with a
You go
quarter point.
rate him from Happy
But
Money.
the bonds may end up
Say we're
loving
coming from the
that.
channel that you banned. Or not, I'm just kidding. But
So in a
I'll
weird
show
way,
respect.
data-dependent pause for next meeting. But let's see what
He's
Powell
very,
says.
very well educated
Yeah, this conference will be
in
nuts.
this field. Been playing the stock market since he was like a teenager. So yeah, I guess maybe that's what the pump's from. I think even just 25 basis points we would have seen a rally. And probably continuing. We'll have to see how he talks. He's a little dovish. Or not. Green gang, rise up. Alright. Probably. See if he has anything else to say.
Market doesn't trust it.
Well, you got your break of 400 there. So next level up, it's kind of just vacuum up to 402. So what was I saying? We could hit that today? Oh, I was saying we could maybe gap fill today. Maybe. Maybe. Holding up well, that move on SPY. Or see spike, maybe. Yeah, it's spiked a little bit. Buying TRD. Oh, he's buying bond futures. Meeting's at 2:30. That's when we'll hear from Powell. But yeah, look at this rally. This is crazy. Yeah, it's still going. 401.11 on SPY. Okay.
Did they know something that we don't know, and therefore they may change their actions? They also put in there
Big
that
stocks.
they're monitoring it really carefully and stand ready to take appropriate action. So I think that's partly why
Yeah,
the market is taking this on positively. And lastly, they do say that they
Jeez, look
still
at SPY
see
go.
some additional
Microsoft, Apple,
firming needed in
yeah,
terms of
mega caps are
policy rate,
ripping.
but that's what some
Even the
is
financials are
somewhat
moving
of a
up some.
downgrade of what you would otherwise
Got
agree.
FRC
So I
up a
think
bit
that's why
there.
yields go down as a result.
So they said they're closely
GME
monitoring
small
some of the
caps,
information, you know, and really assessing
they
what's
run
going
when
on with
risk on.
monetary policy, looking at the implications. I think one of the things is that You know, you
going.
had a very aggressive
So they
bet,
could get
They did
some love from
25,
it too.
And then 75, 75, 75, 75, right? They were so
402.71 area.
And Jay Powell
See if it
himself
hits it.
acknowledged that there is a lag time to how these rate
Alta.
hikes work. So while housing came off more quickly, you still
2:30 Eastern time, so 25 minutes will get Powell's speech.
An auto loan is still
Round
30%
two.
more. I
Yep.
mean, you can say rates, but really it's the price of autos is still 30% more than it was in 2019.
Yeah, so I guess 25 basis points, and then maybe pausing.
Inflationary pressure. Now we're getting Silicon Valley bank
Pausing
prices
next
on top.
meeting.
For sure,
But
inflation
terminal, I
will
think,
fall
still
really sharply,
5.1 end
but
of
that's
year.
not really showing that. So
And then
I think the Fed is continuing
next
to be
year
worried more
lower,
about
I think
inflation
4.8 or
than
something.
financial instability, even though they're
So
carefully monitoring it. So they put that
GME
in
doesn't always
signals
just
very
move with SPY
clearly
like this
upfront.
though.
We must
Especially on these
get
Fed days,
inflation
it's
back
kind
to
of
2%.
just the
We,
mega caps.
You know, get stable prices. If you get stable prices, you also get financial stability.
Yeah, you brought us a few charts today. You had Google Trends, overnight cash injection, Fed liquidity index.
So this long down here would have, if I wanted to hold it through
Yeah, the Google Trends is
the
about
interest
ahead of
rates
this meeting. Everybody
would have
very,
been
like,
nice.
focused on, okay, the Fed is here. You know,
That's the
attention
risk though. You
got
can
a
close
lot,
it just
get that
before,
out of the way.
close some
I
of
think
it
these
before, take
liquidity
some profits,
charts
and
are
then
interesting because
ride the
it's
rest.
actually not the Fed themselves that have sort of announced we're going to inject liquidity, other than a lending facility for regional banks and a discount facility. But there has been some
Any hope?
dynamic from
Yeah, I'm watching
deposits
GME more today
flowing
just
out
because their
in the
earnings
system to money markets, to maybe
and the move they've
other
had.
places.
But yeah,
And that
I'm
is
still in
causing
BY.
the change in the money markets. You're seeing reserves.
Yeah, BY's holding
that
up.
picked
BY's
up.
up
You
at
saw some
82
overnight
cents.
cash start to pick up. So that
I
gives
too
you
like
the
to live
optical
dangerously.
idea that the balance sheet was expanding. The markets took that positively, thinking like there is money in the system. It's
Yeah,
not
a
contracting,
flat day on
therefore
BY today would be
it's more of
terrific.
a sign of that
Holding yesterday's
there's a
lows.
backing here, and the Fed, by the way, could do more of this, obviously. So I think, given the statement that came out now, making
Yeah, on
an
these
emphasis
Fed
on that they're
pump days on
monitoring
SPY,
it,
it's
with
mostly
the
just like mega
liquidity
caps. It seems like
increasing, you could get some positive reaction from this. I think.
GME might catch up with it. You might see it move later. Like sometimes this has a big move and then like finally makes its way to small caps, but not always.
You have something like utilities, which would be a defensive play. That's lower.
That'd be a
at this
big gap
moment.
fill.
Treasury yields, you know, have shown a recent rise.
I
though
don't
they
think
sold
BY's
off
going bankrupt.
excessively over the last week or
At least
so,
not in the next
pulled back over the last week or so in a way that we
I don't know,
hadn't seen since the
few
1980s,
quarters
since
at least.
Black Monday, particularly for the 2-year. The 2-year's at 4.05
Like they will.
right now.
Yeah, it's sort of
Maybe.
reflecting that it
I cover
says,
calls with like that.
Okay, Fed, you will start easing in the future, in the next 2 years, right? It will be a lower rate than where we
The
ended
big red
today,
candle
right? We're
on
obviously higher.
Le SPY.
Yield curve will stay inverted
And
as a
20
result,
minutes till
but
Powell.
it does tell us that there is
We'll listen to
uncertainty
Powell
also
on here as
still
well.
very much in the market. People want to have safe assets. And it
See
does
it-
show
see
that
if he's,
there remains a confidence in it. I
Get a
think
lot
the
from
Fed,
Powell's
they have policy at the right
body
direction.
language and his the way he talks. He clears his throat a lot. He's got a lot of hard stuff to say.
This year and
Funny.
75 bips cut. There it is. That's what everybody's been waiting for, the cut. They expect 75 bips cut in 2024. I cannot believe, I know we talk about the dot plots, but I cannot believe that they're putting that out there in this way. Why would they put so much out there? Why are they showing us the 75 basis points cut in 2024?
I think I haven't looked at the top plot, but I think what I'm hearing from you is that for what is remaining for this year,
yeah,
that's not more than what people initially had priced before the Silicon Valley Bank crisis. And if that's true, that's another reason why yields are going down, because the Fed
Incredible
probably
sales,
does see
for
this as a
example.
reason to say we're getting inflation closer to our goal of the next 2 years. This banking crisis is kind of a lift in that back. We're monitoring
RC
it.
and Carl Icahn,
Therefore,
they don't
we
necessarily have
have
to come to
do
rescue it,
so much more
but
hiking. Why you see that
definitely
language
some
in the
hype for
statement,
that.
some firming of policy rate. So, yeah, this is
big
actually
wick
in a
on the
way
SPY.
the dot plot shows. Without looking at it, I think it's
BY
a
could be
dovish
much
outcome
more-
of this meeting.
I mean,
Yeah.
You know
In
what?
a lot of
I
different
think
people's
just
hands.
them putting out a cut, that is the dovish outcome
Yeah.
that people were waiting for.
That's the thing, I mean,
with that language now,
they saw
we are
the value
seeing the market
BBY,
take another leg higher,
3-4
folks.
billion.
But I will
Just
say
for that.
these moves
Given
are
Bed Bath & Beyond has a lot of
hardly
debt and stuff, but
monumental.
this thing's
39
market cap's
points
94
on the
million
Dow.
right
It's
now.
not 400 points, not 1,000 points.
So even if they just sold Bye Bye Baby,
the 10 years at 3.54.
made a couple billion.
It's pretty much not
they would be in
far
great
off where it
shape,
was.
and their market cap
It's
would be
amazing how little
worth much more
the
than
market
93
is
million.
reacting to this. I guess they got exactly what they expected.
At least,
Yeah,
I would say at
think
least
to that
10x
point,
that.
as I put in a note today, there's research
Yeah.
out on the Fed's press conference.
Mhm.
Under Powell, there's 3 times as much market volatility in his press conference than
Yeah.
Yellen and Bernanke. So, you know, people are looking at that obviously now, like, how is he going to address this banking crisis? What is exactly
Right.
going to say about it? And what reveals from that? Because people will take
Interview of
from
Fed
that
funds rate
saying,
end of
like,
2024 is,
if
yeah,
there is
4.3,
concern,
not 4.8,
you're willing to
4.3.
put more tools to work
Previous was
here
4.1, so it's
to
actually
contain
higher.
that. And that obviously is what people want to hear. If you believe in that, one, you're going to phase out rate hikes, and two, you're going to go back to increasing liquidity after
Careful
all
how the
into the system.
misfit memes
So
go by, so they
I think
can't hold
that's
down
one
BB.
major key discussion there.
Yeah, I mean, the credit crunch, you know, first you have the asset crunch, then you have the credit crunch. You certainly saw credit tightening now. You know, I guess they're really telling us that it will ease in the new year. They still noted about the job market, what a tight labor market we had. In fact, saying job gains have
Gas
picked up.
down 7%.
The Fed does plan to continue to reduce the
You're gonna come
balance
back
sheet.
down
You
here
and
and
I were
retest
talking
this,
about
aren't
that.
you?
They continue to reduce the balance sheet as planned, but saying some additional policy firming may be appropriate. I guess they're pretty much referring to the 25 basis points. What else could they be talking about?
Yeah, not the higher pace that he talked about at the testimony on March 6th that got people worked up.
Yeah.
Where he said, okay, if all the data's in totality stronger, then we could maybe change the pace again to, you know, a faster pace of rate hikes. So I think we're not going to go back to that just yet. We did have a change here, and I think the events from Silicon Valley probably is a credit event that they are thinking of. We have to address it at some point, but it's also, as I said, it's like a wind in the back for them. Like, in a way, that's what policy is supposed to be doing when you raise rates. You contract credit and get things slower down so that the service side of the economy starts to cool off more too and get that inflation rate more down, as we already seen on the good side of the economy. So, I mean, they're on track.
Whoa.
I think why the markets are sort of like in a sort of
Big
a
flush
modest positive reaction, and listening to what he has to say more
some
in the
additional
press
policy
conference, if he
firming
hints at
versus ongoing rate increases. And then Lael's no longer, and then no dissenters at all. Damn, so you're already going down even ahead of the press conference. Tesla, knife,
There
even
no,
Coin, a lot of things right there.
No news on that?
So again, bonds are holding up a little bit better. That's the only move we did here for now. But again, I'm waiting we're break even almost. Huge pop off of the open.
Wow, look at
but
that
the press
red
conference,
candle.
we still have a lot more, Chad. So it's not done yet. All you could get right here is that in May, we're coming close to a pause, but Powell wasn't ready to pause right now. So this is going to get very, very interesting right now. Data.
Circle USDC stablecoin redemptions rise to about 6 billion, with USDC redemptions outpacing the coin's issuance. The Trump grand jury has been reportedly called off for today. Russia surpassed Saudi Arabia as China's biggest oil supplier, with refiners taking advantage of cheap barrels. Elizabeth Warren has said she doesn't think multi-billion-dollar banks should get an increase in federal insurance without tighter regulation. Ken Griffin's Citadel Securities plans to bolster business in China, expanding hiring in Asia while most financial firms cut costs. FOMC, some additional rate increases may be appropriate. Fed highly attentive to inflation risks. Fed says some additional policy firming may be appropriate. 2-year U.S. Treasury yield down 17.5 basis points, last at 4%. Look at these candles on SPY. Euro rise against the dollar after Fed rate decision, last up 0.66% at 1.084. Fed swaps show peak rate of 4.96% for May, little changed. Fed will continue same price of reducing Treasury, mortgage-backed security holdings. Fed funds futures traders see 60% of chance of 25 base point hike in May. I'm assuming that's much lower now. This was at 210. Oh, I guess that... Didn't they just say they're going to maybe pause? Fed says U.S. banking system is sound and resilient. Watch out. FOMC will keep reducing the balance sheet as planned. Unless if we want to pump it for some banks, but otherwise, it's a trap.
So let's find out.
We'll pop again. Yeah, we'll see.
Implied March would be 25
Yeah,
to pause.
pop.
Yes and no. But the fact was, if it was going to be like that, he could have changed the statement. I'm telling you, the statement change is the biggest thing. However, like I'm telling you, how it's arised is very difficult because now, even though the statement is changing, it's on the backdrop that financial conditions will tighten naturally without the Fed raising rates. So let's see what happens here. We got 13 minutes. I'm going to go pee. Is it okay if I go pee?
At the New York Stock Exchange on the watch list for the TD Ameritrade Network.
Drop the crappy bank news. What crappy bank news? Oh, you mean in the last couple weeks? Too obvious. Too obvious. Yeah. GME still up 37%, 24.38. My long calls they're holding up well because they're in the money. Very well. But my short calls, now those have decayed, which is nice. They're 25 strike. They're weeklies. I guess I only have one of them. There's some AI calls? Really? Oh. I don't like that trade. Under Baba. Baba's kind of continuing, Nice. I'm so proud of Jimmy right now. Did you see the post of the guy crying on Reddit? And then I watched some of Morant's video, and I think he was crying too. Hey. Someone cried. Positive EPS makes some grown men cry. I get it. Oh, I get it. Been emotional. Couple years on the GME train. Was that you crying, Ace? Crying is free. Minimum volume, no price per bit. Guys, this is good. 57 million volume is good. It's holding up. Not sell volume. Not dumping. It's not shorting. Good. There you go. Should have tier in private. 5,400 contracts, 35 strike for next week. Yeah, 9,200 volume on that. Those cost 50 cents. Not a huge amount of money, but that is really far out of the money. Okay, we're gonna hear from Powell, what, 8 minutes?
So they're pretty much, the Fed is saying that the banks should do the heavy lifting in terms of tightening of financial conditions for them. So we are going to find out, Chattadonia. We are going to find out. Yeah, the banks, that's pretty much what it is. So let's find out here. We got 8 minutes
Got some
until
more
the
BBBY
press
shares?
conference.
Nice.
So get ready. Let's get it queued up here.
Yeah, if we start to get some bullish indicators before Friday, I'll probably leave my 1.5 cash secured puts, let them get assigned.
Damn, they already have the video?
Which would be another 4,000 shares.
He's ready.
So
that's actually crazy. So usually they don't even play the video.
If not, I'll probably
like
just keep
later,
rolling it.
But he's already, that's it. They already got the camera on.
So far,
all of the reporters are there
not
right
great
now.
Yet.
Oh, they're ready to go.
Bounce out of this area back to like just over $1, I think.
All right, Chad. Good luck. Watch your audio.
Pretty
the audio
likely.
will come on randomly whenever you see him arise.
Even without a big move up to
There you
2.5
go.
or
We'll have
5
in
or
the
whatever.
background. Get you guys primed up for it. Everyone's surprisingly you're not looking at the gain right now. This isn't that much. It was a little bit higher there, but everybody is going to have a lot of digestion. So this is what I was talking about being confusing, because now you have your idea that there could be a pause up soon, and that could seem good. But now the reason why it could be a pause, it just does not. It begs a lot of questions here. So this is going to be a very, very crazy press conference. So here's another one. Pete Bukvari said, I said this morning that this overhyped meeting was most likely going to be a non-event, and it certainly was. That said, Powell press conference will certainly be a forum for more notable market movers. We'll see how does financial stability versus price stability dance. Quincy Crosby, chief global strategist of LPL Financial. The statement acknowledged that the backdrop remains uncertain in times of economic activity and that may be constrained as financial conditions tighten. Certainly, the press conference will be more in-depth as reporters seek to ascertain the Fed's trajectory as the futures market sees another 25 basis points in May and at the beginning of rate cuts in summer. Eric Winograd, senior economist at Alliance Bernstein, he says, so far, my takeaway is that the committee has left all the hard work for Chair Powell in his press conference. If you look at the statement in the materials, there isn't a change to the outlook from a few months ago. So he will have to describe how they are thinking about the banking issues as they relate to the economy. So watch out if this sets a new low. But again, if we end up negative, there's a good chance we do the opposite during what we are at once he starts talking. Where else? Any more quotes? Again, you got 5 more minutes so far till he begins.
Is that a type of bug killer?
Expect hawkish. I don't know. I want to know what he's going to say about May.
Salt gun?
And then obviously we're going to see any questions toward the BTFP. I'm pretty sure Nick Timmerhouse is going to ask him about removing ongoing. You'll see it. Somebody's going to ask him what we're freaking out about. Someone is going to say, what should we interpret ongoing to mean now? Or what should we interpret some
too slow.
firming? And then watch out, too, any real estate questions or about housing and unemployment. Prior to all of this, that's usually a big event.
40 bucks.
Otherwise, we're going to see how he explains the terminal rate
do
and
be
everything else
balling.
for now.
You killing flies with a $40
and then just more
weapon.
idea on what we expect with policy firming for next month.
Got a laser pointer on it?
Listen to this.
Oh my gosh.
Listen.
You should not have shown me that. I guess
This is
I
how
showed
they're giving him
myself.
the rundown.
Never have I heard. I got the tennis racket thing one time. Like, this is such a joke. So ridiculous.
Check your phone.
You have a shotgun?
Laptops.
Get the revolver. Bug assault.
Okay, he'll be back with the 2-minute warning. Look, that's Timmerhouse. You see Timmy? Damn, Timmy's the kid who goes to the front. Timmy's the guy who sits at the
Smoking
front
a
of the
cig.
class.
Make him
You
wait.
should have known.
Yeah, we've got 3.5 minutes.
Exactly. Yeah. I'm just going to do the press conference.
Is it actually shooting salt? Red dot?
Well, based on the sound of the reporters, I don't think they sound too worried. They're just talking about the weather. They're giggling.
Some guys next vid.
So
It
they're
cuts,
not
go.
tripping too much.
Not 360,
Apple,
260.
Tesla.
I mean 360. Shoots
Coinman
table
came
salt.
back
That's
up.
crazy. Does it kill him? Just shooting salt at him? Must have some force. Yeah, new low on G. Yippee.
Okay, check on markets before the exciting part. S&P is up 0.2. NASDAQ 100 is up by
2009?
0.7.
You just get shot with those?
NASDAQ up 0.5 and Dow Jones almost break even.
I've never seen this.
So again, here's
bug
the rundown.
killing
The
shotgun.
Fed delivered the expected
I was
25
blown away
hike
the
at the
first time I
current
saw that
pace of
tennis racket.
QT. The statement
It
in dot
hurts, though.
plot
I've shocked
represented a
myself with it.
downshift from what was
Not good for
expected a few
kids.
weeks ago, reflecting the impact of the recent banking sector turmoil. Quells
Kills
surprise,
bombs.
equities think it's dovish, and rates are
Attracts
reacting
hands.
that way too. The real litmus test, though, will be what Powell says at the presser. The rate decision, 25 as expected, QT unchanged as expected. The statement, attention was paid to the talking strength of the banking system, though the statement acknowledged that recent
know if I want
tightening in
salt all
financial
over the place,
conditions
though.
will weigh on
It's, like,
activity.
very corrosive.
Uncertainty is elevated. There was a mention that additional tightening may be required. This was a
At or near
downshift
record
from the
levels.
tone of the
But I think
previous
overall,
statement.
the health of the
And then the dot
consumer
plot.
is very strong, and so I think that's keeping in tandem with the labor market that we were just discussing. So long as the labor market remains tight, remains healthy, the U.S. consumer will remain strong. And I think on a leverage basis and on a kind of debt to income basis, the consumer is looking to be in a very, very good position. And so again, I think that speaks very much to the
at this
fact that interest rates may be
consolidation, like, these
elevated,
huge
but
candles,
the
though.
consumer, at least for now, is still managing in this higher interest rate environment.
Yeah, without a doubt. Eric
Once-
Teore,
until they
thank you. Manulife Investment
Run out of
Management.
credit
Good
cards
see you.
to
Thanks,
balance
Eric.
transfer to, and friends to get money
Okay, the
from.
press conference is moments away. Jay Powell's press conference, and a lot of questions will be, for sure, on the banking, tightness, crisis, whatever you want to call it. George Sillis is with us. George, your thoughts on the Fed's statement? I know you'll have a lot to watch for and listen for when it comes to the press
Can't take
conference.
salt.
But first, what about what we've heard thus far?
Made in China.
Well, I think the overall approach to the statement, I think, is relatively balanced. I think if you consider what's
Maybe you
going
could put
on with their
sand in
statement,
it. Shoot
they're
'em
getting
with
closer
sand
to a neutral position.
and attract the ants.
They are expecting the federal funds rate by the end of the year to be between 5 and 5.25%. So it gives you an idea that they're still getting closer to that, perhaps in the next meeting with an additional 25
Hey,
basis
Pop
point
Powell's
hike. But
coming
what's
on.
interesting about the
I'm
statement
watching it
is
soon
they
it comes
are
on.
addressing the issues of the financial stability questions that are
And
going
he's late.
on with the banking system right now, because implicitly speaking, the banking issues are going to create
Yeah,
some
snack
tighter
gas maybe
credit
bottom.
conditions in terms of lending standards from the banks themselves. So they did talk about that as part of the statement. Well, at the same time, they actually increased their core PCE number from 3.5 to 3.6%.
Jerome,
But at the
Jerome's
same
on.
time,
He's just
they
late
are
right now.
expecting the terminal rate at the end of 2024 to be around 4.3%. So to me, it looks like
Jerome.
they still see the objective target of the federal
Check
funds
me
rate
out.
to
I'll
be
check it out.
above
He's not on
the
yet.
core
I'm watching.
PCE
He's
inflation rate
not at the
by the end of
podium.
2024. And that's essentially what they need to actually get inflation subdued closer and closer to their 2% mandate.
Right. So they stay with their mandate.
He's
They
here.
stay pretty much.
So first part will be written statement. Watch every
Good
15
afternoon.
minutes.
Written statements is what we've already seen.
Before discussing today's meeting,
But
let
it's
me
still moves the
briefly
market for
address
whatever
recent
reason.
developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors'
Market always
savings in
moves
the
even on
banking
the
system are
written
safe.
statement.
With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if
Chafing.
needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding
literally
needs
just like
that
to hear his
some banks
voice.
have faced, and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient, with strong capital and liquidity.
Oh, it's on here too.
We will continue to closely monitor conditions in the banking system and are prepared to use. In the past 2 weeks, serious difficulties at a small number of banks have emerged.
kind of behind. This
Committed
is
to
all
learning the lessons from this
pre-done or
episode,
whatever, so
and to work
nothing new.
to prevent events like this from happening again.
No TD's doing this stuff.
Turning to the broader economy and monetary policy, inflation remains too high, and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability,
So
the economy
emphasis
does
on
not
price
work for
stability.
anyone.
But remember, this is all pre-written
In
statements.
particular, without price stability, we will not achieve a sustained period of strong labor market conditions that
That is
benefit
hawkish
all.
because he's doubling down on it. If he
The U.S.
mentions
economy
price stability
slowed
more
significantly last year,
than
with real
financial, that's not
GDP
good.
rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see
swings
the
and verdict.
risks to
He says that
GDP growth as
part of it
weighted
every
to the
time.
downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025.
I think that's why we're getting
The
this
process of
reaction.
getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it
We're about to hit
erodes
a new
purchasing
low and
power,
bonds breaking out.
especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Damn, Meta, Tesla.
We are highly
regionals
attentive
are
to the
dumping.
risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4 3/4 to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation.
The bond's biggest candle on
We
the bonds
believe,
all day.
however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy affirming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public
10
mission.
minutes. Pretty short
We at the Fed
statement
will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
9 minutes, 22 seconds.
There's Mexico. That's Ace's house.
Thank you. Colby Smith with the
This New Year's
Financial
Eve
Times.
party.
How confident is the committee that the recent stress that we've seen and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit
Keep
flows in
saying
the
it,
banking
Powell.
system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
More.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty
We're
that
fine.
you also alluded to in your
Everything's fine.
statement,
Generic answer.
how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting. And
he
you see
said
the
they
decision that we
considered a
made,
pause.
which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SEP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions
That
for
I don't
households and
like.
businesses, and thereby weigh on demand, on the labor market,
He's being very
and on
generic.
inflation.
He sounds like Yellen today.
Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes maybe, some policy firming may be appropriate. So going forward,
you could break out
as
from
I
here.
mentioned,
All
on
right.
assessing the need for further hikes, we'll be focused as always on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
They're saying they want to actually see credit tighten before, but that's what
Mr.
they're
Chairman,
worried
can you
about.
explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
They can't.
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing.
That's Stock Market Live.
So we clearly were, what we were doing there was taking on board trying to reflect the
Yeah, bro,
uncertainty
they're pausing by
about
May, for
what will
sure.
happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case inflation will continue to be strong, in which case
meme stocks like
the
Spike.
path will look,
You can lose a lot of money
might look
fast.
different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know.
Everything is flipped
so-
green
Any
industry-wise.
concerns that the hike you did today could further exacerbate the problem in the banks?
Wow.
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about
Maybe he's
the
getting a little-
situation in the banks,
little
we're
move up here.
focused
It's still above VWAP.
on our financial stability tools, in particular, our lending facilities.
Apple's running through the high.
The debt, the discount
And
window, and
Microsoft,
also the
too.
new facility.
Mr. Timmerhouse.
Nick Timmerhouse of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector?
There's still a free
or
membership when you guys
are
aren't
you
members.
waiting to see it
Kitty
in
Daddy.
the data before you
Click the
incorporate
green box, top of chat.
that
Grab your free
potential
membership
tightening
from
into your
ACE.
forecasts?
Great question.
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people
BBY
did
getting a little
reflect
poppy.
that
Almost up to VWAP.
in their SEP forecasts. I think there may also just have been, remember, this is
if the
12
economy
days ago.
doesn't slow down, then they'll
we're
raise.
trying to assess something that just is so recent, and it's people,
Very interesting.
it's very
HSDT
difficult. There's so
getting
much
about
uncertainty.
15%.
So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first part, the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
About to break
Hi,
out
Victoria
here.
Guida
Nothing
with
shocking.
Politico. I wanted to ask,
You're high on the spider.
you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it
You mean
purely
kind
a
of
confidence issue, or
climb me up
was
here a
there a
little bit.
concern that there would
Wasn't
be
broken
some
up
sort of
high from the range
economic
today.
contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
moving.
Okay, and
Yeah,
then
a little
can you
bit.
also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation?
So Vice Chair Barr is of course leading that review.
Charts looking better and better.
He's responsible for it in his capacity as Vice Chair for Supervision. I realized right away that there was going to be a need for a review.
GME broke
The
out.
question we were all asking ourselves over that
Broke
first
out of the
weekend was, how did
resistance
this
from
happen?
earlier. 25.50.
So
It's up 44% now.
What we did was early Monday morning we sat down and said, let's do this, and he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get
Next
briefed
little
on it, but
resistance
I'm not
around GME is
involved in the work of it.
25.79. Then high of the day, 27. SPY's ripping up, breaking out as well.
Hi, Chair Powell.
Kinda
Howard
getting
Schneider
the
from Reuters.
push
So
from SPY,
I want
looks
to go back
like.
to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was
getting up
I
to
forget the word you used, but gratefully underway or something.
402.71 is where I have.
Is
kind of a
disinflation still
area,
occurring in the U.S. today?
or maybe resistance?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But absolutely, absolutely the same. The story is
Yeah, it's just
intact.
getting a
So
pump
it's really
from
three
SPY,
parts, right?
GME.
Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly
Nice,
proceeding.
yep. Yeah, I got a little breakout
Housing
there.
services is really a matter of time passing. We continue to see the new leases being
BBBY is even
signed
moving
at
up some.
much lower levels
green
of
now,
inflation.
it's
So
almost a
that's
VWAP.
44% of the
82.40.
core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector. And that is
Jimmy, 30s? You're getting 30s
that's just
calls?
something that will have to come through softening demand and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue, and we don't really see it yet. It's so people are making estimates. People are publishing estimates, and it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real,
So we
and
haven't
that
seen any
argues for
consequence from this
being
whole
alert
banking
as we
thing.
go forward, as we think
Yeah.
about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Interesting. Remind me about these questions.
Hi,
This
Chair
is the
Powell.
most
Gina
important
Smilik
part
from
of
the New
all
York
of it.
Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to
BBBY
the questions
broke
around
VWAP
supervision.
up to
So at a basic
1.9%.
level, Silicon Valley Bank management failed badly.
Could be a move with
They
GME
grew
a
the
bit,
bank
but
very
looks awful
quickly. They
strong
exposed the bank
on
to
its own,
significant liquidity risk and
which is
interest
nice,
rate risk.
1.9%,
Didn't hedge that
2%
risk.
there on BBBY,
We now know that
2.25.
supervisors saw these risks
GME's
and,
not really breaking
intervened.
out like that. That's
we
good.
know that the public
One
saw
GME to
all
go
this.
too, but if
we
BBBY
know
has
that
its own relative
SVB
strength.
experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, and a very, very fast
We're gonna
run,
quote on
faster
BBBY
than
with some
historical
increased
record
volume.
would suggest.
That's
So,
the bank run. That's very important.
as for us, so
information
for
is
our part,
concerned.
we're doing a review of supervision and regulation. My only interest is that we identify what went
3.5
wrong
on
here.
BBBY.
How did this happen is the question. What went wrong?
3%.
Try to find that. We will find that.
So
And then
like
make an
what it just
assessment of what are the right policies
snaps.
to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage
You may
to
stop
offer my
running.
views on what the answers might be. You know, I simply can't do that. Vice Chair
44%
Barr is
disagree.
leading this, and I think he's testifying next week. So, but that will be up to him.
SPY breakout
So
kinda just released.
that's really where it is. You know,
Looks like it released BBBY also.
the review is going to be thorough and transparent.
Negs
It
getting
is
moved.
clear to your last question. It's clear that we do need to
Hard to look at
strengthen
this chart
supervision
down.
and regulation. And I
Block
assume
C's up
that
50%.
there will be recommendations
In the
coming
pop
out of the
review
report,
up.
and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly
I
through
think
the
it's
banking
on even
system.
closer
This
to
was a bank
405.
that was an outlier in terms of both its
We've had a
percentage
clear
of,
trend that's repeated last March.
of uninsured deposits and in terms
think
of
it's
its
over.
holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened, and so that's really the nature of the of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's
404s.
decision, the markets have now priced in one more
downward trend
increase
line.
in May, and then every meeting the rest of this year, they're pricing
BBY
in
chilling out a
rate
bit.
cuts. Are they getting this totally wrong from the Fed, or is there
We're gonna
something
see gap
different about the
fill
way you're looking at it,
406.
given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that
Buy with a red
basically
candle.
participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation
Yeah, interesting
moving
when
down gradually.
BBBY looks like it's starting to move.
In that most likely
correlation
case,
with the
if
SPY
that
some.
happens, participants don't see rate cuts this
Pretty good
year.
volume
They just
increase
don't.
there on Bed Bath.
I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive,
with a red
or
candle.
is it leavened by the idea of you don't know what's
Nice
going
volume,
to happen?
yep.
In other words,
I think we're gonna
what
break
should
that
people
volume
think
too.
about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool,
Oh,
we're
this is the
looking
volume
at what's
growth.
happening
57
among the
million.
banks and
98
asking,
million
is there going to be
next.
some tightening of credit conditions? And then we're thinking about that
think we'll
as
break that.
effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So
This is
that we're
also
looking
saying
at,
no
and
rate cuts.
it's highly uncertain how long the situation will be sustained or how significant any of those
ING
effects would
coming
be.
down
So
here
we're
a
just going
little
to have
bit
to
now.
watch. In the meantime,
BBY hasn't come down yet.
You know,
Still up 2.10%.
obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
No one. That was a very big question there, but it's all part of this
Hi, Chair
same
Powell.
theme.
Rachel Siegel from the Washington Post. Thank you for
I'll
taking
go
our
over
questions.
once I get more, but
I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy. But there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
And one other question, would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that.
Candle, BBBY.
Nothing is going to change that. So we will get inflation down to 2% in time.
And if I can follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
If you have to look at
trying to ask me
the
political
impulse
questions.
from spending, because spending was, of
about the
course,
banks.
tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps, part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank 2 weekends ago. First, why is this new bank funding facility done under Emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheets last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was designed a certain way, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be
the lows
right
after
place.
the
So
presser pump.
with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you,
Shitty
Chris
answer.
Rugaber at Associated Press.
No info.
The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes.
This is all off
Do you
Michael
feel,
McKee's
though, that if
question.
inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end?
No,
Thank you.
absolutely not. No, if we need to raise rates higher, we will. I think for now, though,
Double whammy. Again, you've been dropping since
as
you
I've
responded
mentioned,
to Michael
we see
McKee
the likelihood
saying they will-
of credit
they're
tightening.
not
We
gonna
know
cut.
that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending
first
facility
balance sheet question.
might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system. and at what point you might be concerned about it being scarce for certain banks.
So, so people think of QE and QT in different ways. So let me be clear about how I'm thinking about these
Regional
recent
banks,
developments.
another new low.
So the recent
That's not
liquidity
good.
provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively
I
is
sold
working.
my Amazon shares. I took
And
$200
of course,
profit.
we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
But I'm keeping Meta. I think this is both ways. I have a lot to say about this. I'm waiting till
Hi,
it's
Chair.
over.
Katerina
But it's not
Saraiva
really
with
clear
Bloomberg
just yet.
News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as it is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the
low of the day if we break, but watch out if it bounces.
I will have to come back to you on that.
And again, I think you could get a little bit of bullishness, but everything
Simon
Powell is
Urbanovich
saying,
with The Economist. Thank you
I
very
don't like
much.
it for 3 months out.
Chair Powell,
It's
you've
gonna be
stated
weird.
twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Wow, that's a very strong statement by Powell.
Thank you, Chair Powell. Greg Robb from MarketWatch.
Very strong
I was wondering if you could give us a little bit more color. You gave just a little bit of color.
Off
You
the top of
said
GME.
during the first week of the
Please.
Silicon Valley
Nice.
weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well.
Again,
so far.
Little bounce. Watch if we bounce here because the flush here would be big. You're below the 39.80 now. Next level will be like 39.70.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to.
What? What are they doing?
Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
It depends on whether
is now down 0.6%.
So recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's what so we don't know whether that'll happen this time. We don't know. If so, we don't know what how significant it will be. And so we're very focused on getting inflation down.
This was my support level right here.
Because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have a long, we've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Jean.
Hi, Chair Powell. Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing?
I think this might not be a bear trap, though, honestly. I think
it's too early to say, really, whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. The question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and we're certainly trying to find it.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with
know about
these
4.
citations, take them seriously? How will you enforce
Yeah,
them?
that's true. What is he talking
That
about?
is a great question
Bro,
and is
find
right
those
in the
other banks
heart
who got
of
the
what
citations.
the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. You know, what can we do to make sure? But again, that's not for me to answer
So you
today.
don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, you know, this review's going on, and you know, I want nothing other than us to find out what happened and why.
Yeah, what are the banks?
Figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. You know,
Wall
it
is
just
on the
isn't
low
appropriate.
again. Banks are
There's a
slipping.
real
Regionals are
serious
at a new
review
low.
going on with people from all over the Federal Reserve System who are not connected to this, you know, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
All right, there it is. Last question.
Thank you, Chair Powell.
We
Jennifer
usually rally
Schonberger with
after the
Yahoo
last
Finance.
question.
Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So
Watch for
we haven't really
39.70.
talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a,
Curious how you view financial conditions now, and if
Yeah,
credit were
okay.
to tighten enough, if that would prompt a rate cut.
So, financial conditions seem to have tightened, and probably by more than the
FRC,
traditional
wall, regionals
indexes
are dying.
say, because the traditional indexes are focused a
Yeah,
lot
FRC's
on rates
dumping,
and equities.
down almost 10%.
And they don't necessarily capture
Broke the law on the day.
lending conditions. So we think that, though. So there are other measures which if they're focused on, you know, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, you know, what will be the extent of it, and what will be the duration of it? And then, you know, once you know that, there's a fair amount of research about
Sounds
how
like his
that
answers
how
to the
that
question
with
was
broad
he's
uncertainty
not gonna be
bands,
pausing next
how that works its
meeting.
way into the economy over what
Statement
period of
looked like
time.
maybe
So,
pausing next meeting,
you know,
but-
so we'll be looking to see the first part of
Q&A
that,
seemed like
how serious
that's
is
not
this, and how
probably gonna
quickly
happen.
it's going to be
Neutral in terms of
sustained.
what Powell
And if it
is
is,
talking.
you know, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and you know, so that's all I have to say. So, thank you very much.
There you go.
Thank you, pal. Wow.
Rate cuts aren't in the base
Chatadonia.
case.
We have a lot to talk about. I have my interpretation for you now. It's going to be a confusing one. It is going to be a very, very confusing one. So I don't know how you want me to give this to you. I mean, there's a lot going on right now, but it's very simple. The one way I would take this is ad? Damn, they hit you with it, bro? All right, do I hold? But even then, though, it seems,
Big
I'll give you
bounce
the
on
easy
SPY
one
there.
before I go into it, but it seems like Powell, they are trying to position themselves to pause they're trying to bat down rate cuts while at the same time supporting everything else. And see it. Conference is over. You're getting your rally. You're doing that at the level. That's what we were talking about prior here. So this is very big. That's already a 10, 20 point almost. 10 points off of the bottom. Oh, man. They're not screwed. All right, but here's how I feel towards today. It's very simple. I think this is bearish. But it doesn't mean we won't see any more upside. I mean, I'm telling you to the point I may not even want to trade for the next month or two just because the market is going to do wild shit. But everything Powell just said does not sound good at all. So I think what Powell, I think he's giving himself a middle ground to be able to pivot out of it. So that's why he was saying, guess what? If financial conditions don't tighten because of the banks, we will still raise rates. But he is expecting the banks to tighten up financial conditions, and then they're saying that we haven't seen it as of yet. So, like I'm saying, midterm to long term, this is very bearish. I don't like it at all. However, in the meantime, though, I think you're going to get, again, even the swings today, these are very tight and wild. If you'll, like a lot of other Fed meetings, these swings would be a little bit more spread out, but nah, this is wild. So I still think the people might want to buy it up, but Powell is pretty much betting that financial conditions will tighten because of the banks, and then if they don't, he's willing to raise rates still. And then even this statement, it gives him room enough to be able to hike or pause at the next meeting, but it seems like they're playing a little game of wait and see now with financial conditions with the banks, and I just don't like that. So I'm taking this as bearish, but not immediately bearish. And what I mean by that is that the market can go up off of it you see it. Everybody is now, you're going to have everybody fight over basis points, this, pause, this and that, and then now every set of data is going to be wild. But like I'm saying, I may not even want to trade this. I would just sit back and wait to a degree, because that's not
As he was saying,
I don't like that game. It's
sounds like they were hiking,
pretty much either
pausing
banks bring down the market
next meeting,
or
but
Powell
then the
is going to go
Q&A,
back
he's
to
like,
rate hiking, and then it seems like he
could
wants
keep
to
hiking.
make everybody clear that he's not going to cut rates
Yeah,
unless
he's always
they're
giving
forced
himself
to
an
do
out,
so.
one way or the other.
So, no, because I'm saying it's going to be hard to
I mean, he
play
did say
for
use
the
the tools
downside, and even
to
the upside will be very difficult.
basically take care of the banks if needed.
So it's this.
Basically
I don't
carte
know.
blanche
To
on
me, though, it sounds
deposits.
like the banking system is bad, and it seems like they got a little problems ahead, but it also seems like they have time. That's what it seems. That's what I'm getting at. I think the banking problem is bad. It's not bad right now, but the potential for banking to draw down the economy is very real. Otherwise, I don't think he would have reacted to it. So let me show you what I'm talking about. This is what Powell is saying. I got a cool little tool for you, but take a look. This is a model to forecast GDP. Again, the SEP is saying that the economy is even going to come down. And he's saying if the economy does come down, then we pause, we hold here. If it gets worse, then we'll need to do more. But then he's saying if it goes back up, then we're going to raise more. So very weird, but this is showing you
baseline
this is a way to model GDP. It's like a simulation, right? So like let's say the price of oil goes up $30, right? This tells you what will happen to GDP. So we're able to tweak a little bit of factors, but this is what I'm trying to show you here is that he's saying credit risk is going to bring down GDP, and that should be equivalent to a rate hike. Do you see what I'm saying? So Powell is saying that if credit risk increases,
banks, I'm not sure.
Let me see. Is there anything else
that is
related?
Kind of crazy. He did drop
Uncertainty,
that
would be the VIX. So even if the VIX, so you see, like this is normal GDP, but now if you have more economic uncertainty, if credit risk goes up by 350 basis points, then you start to watch the economy. You could forecast
SVB,
the lower GDP.
Silvergate, First Republic.
So that's pretty much what Powell was saying today. So Yellen is live now. Well, the regional banks have gotten destroyed during that speech there, but just dude, this is about to get really confusing. Again, I think it's very hard to even
Okay. Maybe Pac West. Yeah, it's a Bloomberg terminal.
It's like you read the headline on this, the first couple words, but then it's read through the lines a bit, and it means that they're under quite a bit of duress here. Pacific West, Los Angeles based, I guess maybe we can find some comfort that these banks do have regional commonality for sure, which likely, could argue at least it's contained possibly at this moment.
Well, that's exactly what Powell just said. I think there's just a lot of uncertainty out there right now in terms of how the banking system could change,
GME held up,
how
just
it could actually
there.
impact balance sheets for some of these regional banks. Will it just be a case of the bigger banks getting bigger, people moving away from the regional banks? Obviously, LA-based, had venture capital money in there as well. So, a lot of specific nuances for some of these banks. But I just think that the name of the game right now is uncertainty, despite the fact that they say that they're comfortable with their liquidity position, with their deposits. Market doesn't really seem to want to believe them at this point.
Indeed. Thanks for the
Fox D
rundown
up
here.
51% still.
Appreciate it, Caroline Woods. And when we come back, we'll keep an eye on the market. Right now, pretty much the same dynamic. NASDAQ higher, Russell down.
Ripping through blue
We'll be
wop.
joined by Barry Martin, who's going to walk us through the strategy
This level's
at
till 10K?
Shelton Capital Management on how to find a yield
I don't know if
in
10K is coming out.
equities.
Well, maybe. I don't think it's necessarily sitting at this level waiting for a 10K. Buy's ripping now. This looks like a good bullish move and now consolidating, so momentum's up. Gotta let the buyers build up their purses enough to push it through. What Ruthless was saying, they have until next Monday, 27th? Goodness. Catchy. 29th. Oh yeah, Wednesday, so next week. Treasury yields fall after Fed rate hike. 2-year yield falls to 4%, down 14 basis points. Yellen not considering broad increase in deposit insurance. Powell says rate cuts are not in our base case. And that's all I have to say. Powell says he has tools to protect depositors, prepared to use them. First Republic Bank CEO and executive officers are foregoing their 2023 bonuses. Moody's current inflation and labor market trends support baseline scenario of at least 2 additional 25 basis point rate increases. Here's the bug shotgun. Don't kill Jesus. Crazy. Garn whiskey time.
To get 4% on their bonds a couple weeks back. Does this change the game?
Well, not really.
Fortnite,
always live by the
GME.
additive of, you don't want to fight the Fed. And so if you're looking for an equity strategy, what we're doing is cover call writing, selling away the upside, and generating cash flows. Right now,
what am I looking at?
Even though Treasury yields are where they're at, volatility is still elevated. And so when you're selling covered calls, what you're doing is monetizing volatility. So we're generating additional cash returns by monetizing the volatility on these individual equities, and we do it by selling covered calls. So currently, right now, we're selling options that are 45 to 60 days out that have about 8 to 9% upside that are annualizing about 9% in option premium. And that does not include the dividend yield. So you also own the dividend yield as well. So we're seeing a lot of cash flow and income out there with.
Is that a Cyber Crew skin?
Is and where the VIX is.
Now, this is the strategy in the fund EQTIX, or is this something you overlay across different types of
non-playable
strategies?
character?
Correct. So this is the main strategy of our
Dancing in the street on Fortnite.
Fund. Once again, the symbol is EQTIX, and it's in a category on Morningstar called derivative income. And so what we're basically doing is selling individual calls on individual positions throughout the whole portfolio.
Yes, you still do substance.
So we have roughly about 100 holdings where we're selling away these options.
Uncertainty.
And selling away the upside, but putting generating those cash returns and putting it into the client's pocket and paying it out on a quarterly basis.
Got it. Is this something that you put in as part of the stock side, or can this replace bonds, especially if yields keep going back down?
Yeah, it's interesting. So
This
we're seeing
consolidation
two
is
ways.
so
So
crazy. GME's totally
if you're
fixed.
looking at a typical 60-40 portfolio, we're seeing it basically as a halfway house, for lack of a better term.
Yeah, I saw some tweets
where
about
people are taking about 10%
Cyber
of
Group.
their equity exposure and about
That
10%
video's
of
kinda
their
interesting,
fixed
though.
income exposure, and creating a new slice of the
That's just
pie.
an NPC in the game, I
Performs
guess. Looks
differently.
like.
Performs differently than
Is that
equities, and
someone's
it
actual
performs
character?
differently than fixed income. So you have similar market
Spy
returns
below
with
VWAP.
about 25 to 30% less
Pretty big
standard
range today.
deviation. But then also you don't have the interest rate risk over on the fixed income side. So it's a new return pattern adding to one's portfolio. So you're lowering the overall risk
BBBY.
of a client's portfolio. So we're seeing it
Not bad.
used in multiple
Flat
different
on the
ways.
day.
But still, people at the end of the day use it as an alternative income strategy
I don't
because of the
play
cash flow that
Fortnite.
we're generating from selling the
The last time I played it,
And you're not
Yeah, I guess it
necessarily
was on
doing it on
PC.
the broad market, right? You're picking specific companies here.
Yeah, exactly. So what we believe
means
we're
all
doing
better.
is picking the best stocks in the S&P 500 to sell covered calls on. We look at a couple things, mainly fundamental analysis, but also we look at expectations of yield, and that means the dividend that's being paid, and also what we can generate from selling the vol. In regards to fundamental analysis, I think it's important to focus when you're selling covered
Sports?
calls. It's important to focus on the quality of the company. You don't want to necessarily sell covered calls on a high flyer because you want that upside. When you're selling covered calls, you have
Rise of the
asymmetric
years about
returns.
short
You're
squeeze.
capped on the upside, you have
I'm
a
not
lot
sure
of
there's
downside risk.
a
So you
crazy
have to
short
pay
squeeze in the
attention
books
to
for
downside
GME.
risk. So you want to own quality names, names that generate free cash flow, names
think
that
we will
have
know, though,
lower
by the
debt
end of the
ratios.
month,
And those are the type of stocks
or
that we
as we
own,
break
and
30.
those are the stocks that we sell covered calls on. We've
It
had really
breaks
good
30.
performance. We've outperformed our benchmark, which is the buy right index, which is the S&P 500, with index calls written against it for 5 consecutive years. So again, what we're doing is buying the best stocks in the S&P 500 to sell covered calls on.
And Apple plays a role in that as a steady grinder, basically. That's kind of what you're looking for, the turtles that go in the right direction.
Yeah, exactly. Apple's, quality name. It's a name that mom and dad knows, and it has enough volatility on there where you can generate sizable premium. Right now, with a price at about 160, you can sell let's say the May 170s and get roughly about $2.73.
You're selling call,
So
you're not
on
buying
that,
it.
when you're looking at that, that's about 1.37% in yield. And this is over 60 days. So if you continually do this trade every 60 days, you can take that money, put it in your pocket. Obviously, if the stock appreciates, you want that too as well because you own the underlying equity.
Buy up through
So
VWAP now.
if you're buying it at 157, 160.
But I think fundamentally GME could rise over the years for sure. Whether it's as aggressive as Tesla.
170, you're adding that $2.73.
Probably not, unless there is a massive
cost
short
base
position that
over
needs unwinding.
Your cap is at 172.73, and that's 8% appreciation plus another 2% in the dividend and the option premium. So we'll take that trade every day. But if it never gets there and the Fed continues to raise rates, what we're doing is again selling away that upside, and we're taking that profit that we're generating income for generating those gains, and then you pay it out to the client.
Got it. All right. Thanks for the walkthrough, keeping us focused on some
Is this the cover
strategies
call
here on a
ETF?
day where it's easy to get distracted. Thanks a lot, Barry.
Thanks, Oliver. Take care.
All right, coming
Maybe
back,
that's
we'll
just
talk
what
some
their
more
fund
options.
does.
We'll take a look at volatility with Tom as we get 3 out of 4 the indexes.
That's what my fund would
still.
do. We would just
NASDAQ
data
trying to make
farm.
it work. Banks under some pressure, but Tom does have a buy the dipper in Bank of America. Keeping an eye on the broad.
Wednesdays always stink. Yeah, Anaconda squeeze like a Tesla. If there is a big short position like we've seen on Tesla that's held over the years, then yeah, it could be something like that. I'm not sure it's still there though. I'd like to see what happens over 30 still. There's definitely some people got that squeeze today. Doing well on the legs, yes sir. Yep. Exciting FOMC day. I rejecting that breakout of VWAP. People were still hungover from yesterday's earnings, so they're just hitting likes on everything. They don't know what they're doing. Want money back? This is the risk of holding through. I was saying, like, we got that pretty good drop before it. We got puts. If you're planning on holding through, then yeah, just hold it. But if you wanted to short it, you could have waited for big green, or if you want to go long, you could wait for a big drop. Like, this is pretty common, an up and a down at least. Where it ends up trending after, I don't know. I think it's probably going to keep going up. I think so.
Down, VIX getting hit. I got Tom here with me in the studio. We got some options trades we're going to look at, Mr. White. Let's talk VIX here for a sec, as we are almost at flat 20.
Yeah.
Wow.
Pretty surprising.
Big fade and vol.
It is a fade and vol because we got some of that event risk gone, right? You know, the Q&A is over, Powell's announcement's over, Fed Chair or Treasury Secretary Yellen's making some comments saying they're not going to raise the FDIC insurance above $250K. I think that also, kind of hurt equities there from the session highs, which were about 10, 12 minutes after, when he started talking as far as his press conference goes. But at the same time, I think, he's taken away basically what everybody was, betting on. The market was anyway, that we're going to see rate cuts by the end of the year. He basically said, we're not doing that. At this point, he's said that repeatedly, and the market has always been behind the curve on that. Now, economic conditions can change. That's going to be a concern moving forward. Tightening credit across the board, will that do a lot of heavy lifting for Fed Chair Powell?
He didn't seem to think it was. He said that, yeah, we're going to get a little credit tightening, but we got to get inflation below 2%.
Yeah, and he said, most of the banks were prepared for the rate hikes that we did, 9 straight, yes. They were able to handle that. SVB was
He's got to be like, I don't know what word to use that's family friendly, but, just so irritated and flummoxed. He's got to be flummoxed about the narrative that these banks were shocked, taken aback by how serious he was about hiking rates. I've talked with traders, investors too, have kind of said the same thing. It's hard for me not to be a little cynical about them. Like, did you not read through the lines?
Yep.
Did you not watch the TD Ameritrade network?
Right, exactly.
Okay, because literally, it was all there in front of them, but instead they chose to stay levered and they blew themselves up.
Yeah, but the market doesn't listen to a lot of what the Fed says. Remember, the terminal rate, just a few weeks ago was what, 5.75% at the end of this year. Yeah. Now it's down to 5.1%, and the market had it below 5% for so long, and the Fed said that they were going to continue to hike rates. So a lot of people don't listen to the markets. They want what they want.
Yeah, all these tech speculators, startups without profit, crypto folks, they all told themselves this narrative that Powell and the Fed don't let stocks go down. Yeah. And that they can't hike, and they invented the narrative. The narrative blew up, and then they go, Powell, why would you do this?
Yeah, but you remember, there's a few bad banks out there with bad regulation, bad leadership, taking these risks, right? Not listening to what the Fed and what the economy was basically stating to you. That doesn't mean that it's going to reverberate across the entire market. But what it does, it reverberates around that sector, and we've seen that in the financials. A lot of good companies getting hurt by a few bad players within this space. So, he has to take that into consideration. I think he's pushed a lot of that concern on the banking side of it and the tightening credit in that particular space over to Yellen, Treasury Secretary at this point. We'll have to wait and see. But I was pretty surprised to see VIX down here at the 20 level at this point. But, typically when we're still in this, this cycle now, NASDAQ was just up 20% from recent lows. We've seen that optimism come back into the market.
Pushes VIX down.
The VIX might be a place where people are going to start piling into for a little bit of a hedge at this point when it's down at 20.
All right. Well, only thing is, the big trade that you got today in Bank of America is buying the dip. So we're not hedging there.
Well, it's just off of 52-week lows. It's pretty surprising. They've got the 8% of uninsured deposits. That's number 2 out of the top 100 banks.
Okay.
So their balance sheet's pretty good at this point. One of Warren Buffett's biggest holdings because of that. But you see here, it still has a rebound.
Way different, though, than a Goldman or a JPM because it still is very loan heavy. And
it is.
It's kind of like a giant regional bank in some ways in terms of the operational activities without as much of a trading and capital markets presence as the others.
Correct. But you still do, they still have the Merrill Wealth Management within their umbrella. So they have some bright spots. It's cheaper probably on a valuation basis than JP Morgan and Goldman Sachs and some of the others due to that, those risks that they have on their balance sheet. But that being said, there's still somebody out there buying some calls in here out in the May cycle, trying to pick this, near 52-week bottom. They bought 22,000 May 32 strike calls for an average debit of 46 cents, so pretty inexpensive. So that break even of 32.46 over the next 58 days, about 16% higher. Now, they do report earnings on the 18th of April. So we'll get a little bit more clarity. But this trader's going out about medium term, thinking that we're going to see a rebound in Bank of America. And if we do see a rebound in most of the financials, and we have in some of the other big ones, Bank of America will probably be right there. And I think that's what this trader's betting on.
Okay. All right. So there you go. Someone, we're really diving in here because Bank of America looks remarkably similar to some of the sell-offs we're getting in the regionals as opposed to what's happening in the big money center banks.
Right.
So it's a little bit disconcerting to some degree.
Right.
The other trade you've got here is also bullish. Real quick, you got a trade in Intel.
Yeah, shares are up only 7% this year. I believe earlier today, NVIDIA, one of its big competitors, along with AMD, hit 2023 highs today. Earlier in the session, NVIDIA was up 85% so far this year before pulling back here a little bit as stocks are getting hit. And near-term bar for PC segment pretty low at this point. They expect a rebound in there. They did, their company's chief architect just announced his resignation in here, but they're fighting battles that they haven't been winning at all, Oliver, as far as innovation and expansion goes. And now that we've seen that downturn in a lot of hardware sales and the things that are doing well, they're not one of the prominent players in this space. But somebody taking a shot here with the shares down 41% from year-ago levels. They bought 8,000 of the April 30 strike calls for a debit of 65 cents. So that break even for this trader, just over $30.60 over the next 30 days. It's only about 7% above the current share price. They don't have earnings until the 27th, so maybe this trader's playing for maybe a ramp up into that earnings while avoiding the event at the end of April.
All right. Okay. 2 bullish trades for us that you saw in this market. What time did you see these?
These were earlier this morning. Yeah.
Okay.
Yeah.
All right.
We're starting to leak oil here.
Hey, look at Intel holding on strong today as the NASDAQ goes red. It does that sometimes, though. It's like when push comes to shove, we've seen Intel act quite firm on some of the rougher days over the past year. Thanks, Tom, for the chat. Appreciate it. Let's come back, check in with Dan Deming, see what he's trading today. And then we've got 20 minutes till the bell. We'll see who wins out.
Right.
So they acknowledge something's happened here, but they want to stand by the path. Not big hikes in the future laid out, but no cuts either. And the fact that we've got a little bit of a risk-off tone, is that maybe the market telling us that they don't care if they break something?
Well, it's possible, Oliver. I mean, I think the market was, heavily, obviously focused on this decision, and it got exactly what was basically expected. And it's still trying to decipher, is that a good thing moving forward, or do we still have some, issues with the banking sector that have to be sorted out, as well as economic data points that will be coming out here in the next couple of weeks? Will inflation show signs of continuing to roll off? And so after this big run up to the meeting, maybe I think we're just seeing a little bit of some of that froth coming out of the market short term. But overall, it seems like we're not really giving up much. I mean, the NASDAQ continues to show relative strength. It has all year, and to be expected, especially if rates do come off in the coming cycle, that you would expect the growth areas to benefit from that. And I think that's being priced in the NASDAQ. Also, just the dynamics within the activity here, Oliver. Yeah, I think that overall, the fact that we've held the gains from the previous two sessions, for the most part here, is a short-term positive as the market kind of digests the narrative today.
As we've got the dollar down pretty big.
Oh, yeah.
You think that's a real trend that could keep going, given Christine Lagarde and crew slammed it with 50 last week?
Yeah, I do, Oliver. And you and I have been discussing this for the last several months. We saw a little bit of a shift in the trend go up until the last week or two when some of the uncertainties came back into the marketplace. But typically, the dollar will benefit from some of those uncertainties. And we didn't necessarily see that this time around because of the dynamics within the Treasury markets and where we are, I think, in the rate hiking cycle relative to the rest of the globe. And now we're seeing the dollar trading back down to that 101 level and, threatening those lows that we did see, I think, in February, if I remember correctly. So I do think the dollar is going to continue to probably trend lower if we do see rates playing out here, and particularly if the market still keeps pricing in a couple of cuts by the end of the year.
Okay. The potential here for cuts, what gets us there? What did you learn in terms of what scares Powell, what keeps him up at night? Is it going to take something a lot worse than what we got?
I don't think a lot worse. I bet you there was a lot of discussion today. Do we do 25 or not? I mean, it was funny. I had a discussion in the office
with
an old trader friend of mine. And we said, he should do an 8, 12.5%, let's split the market. So I do think that they're very close to pausing. And then, if we see continued deterioration in certain areas, the focus right now, and as he reiterated, pricing pressure, price stability, and tight labor markets. But based on all the narratives and the different talking points over the last 2 months from the the labor side, you got to expect that at some point that's going to start rolling off. And when it does, it could be pretty quick. And if that happens, then the Fed will possibly be in a position or be forced to be in a position to think about cutting later this year.
All right. Thanks, Dan. Good lead in for our panel next. Dan Deming, Managing Director, KKM Financial. Kathy Jones and Randy Frederick are on deck. Don't miss the convo as we head into the bell. NASDAQ does slip now. We're near the lows of the day, so seems like it just gave up there. So expect some red here. Surprising here. I mean, just going through like my contact list, so many were arguing for even cuts today or a pause. It seemed like there was a real difference between sort of the consensus and maybe what technically Fed funds futures and other mechanisms were pricing in. Obviously, I know from the crypto camp and the high growth speculative camp, they all basically thought this would force Powell to pause. The fact that there was no decision, maybe, does that change our calculus for some of these high growth companies, Randy?
Well, I mean, you can look at the Fed funds futures. They've been right all along. There was a very brief period of time right when the first bank kind of got into trouble where we dropped to the point where there might not be a hike. There was never a consensus of there being a cut at all, at least not from the futures markets. And within less than a week, we were back up to that period where above 60%, less than 100 of getting a quarter point hike. So it's pretty much been right on for a long time. In fact, and then again, going back 8 years that these things have been around, anytime you've been above 60%, it has always happened. And that's true for either hikes or cuts. So that's not surprising. Again, today, right now, after this hike, we now have about a 65% probability based on that futures market of a one more quarter point hike on May 3rd. And then it goes to negative. So in other words, but it's not negative enough to say we're going to get a cut. That's why I say it's going to go sideways. So this is exactly what the markets have been expecting. I mean, certainly Crypto Crowd has a different opinion, and I know that there have been some people who have been speaking around the meeting of what they thought it should go, but essentially the market was telling us a quarter point all along, and that's exactly what we got.
Man, bonds really rallying here. Interesting the way bonds are responding to this, despite having kind of priced in and expected, arguably, the 25 bips. Anything stand out in terms of his language, Kathy, or Powell's demeanor? For example, I thought it was kind of interesting that he chose to describe the bank situation as fairly idiosyncratic at this point.
Yes and no. He did say that, but then he expressed a lot of concern about just the questions around what the impact would be and how little clarity the Fed has about that. So I thought he did a really good job, actually, of describing or emphasizing the uncertainty aspect. And when you're uncertain and you're a policymaker, you tend to want to stand back and look at more data, right? Because we know from previous problems in the banking sector, whether it's the S&L crisis in the 1980s or something more akin to what happened in the 90s, when banks start to curtail credit, which they've already done prior to this recent event, that slows the economy. And a lot of the lending these banks do is to small businesses, small and medium-sized businesses. A lot of the The problematic loans are related to commercial property, which we know has been struggling. So I think he did a pretty good job of actually describing the high level of uncertainty and how that informs how the Fed has approached this. You know, we've been in the camp that we're going to see, you know, the risk of a hard landing / recession has been rising for a long time. This is what you get when you get the most rapid rate hiking cycle in modern history. Eventually you get inflation to come down because you get the economy to slow down.
Yeah, it seems like that's one very good explanation for why bonds are doing what they're doing here. Even with maybe a 25 still, lingering in the distance, that uncertainty and Powell's willingness to, kind of step back and wait does kind of put risks and recession on our mind. VIX low 20s, Randy. Does that make sense to you?
Well, you know, the VIX for the last 15 months has been mostly in the 20s, in the low 20s. So I would say in a bear market that's now close to a year and a half old, that's actually pretty good. In fact, we saw it dip all the way down into 220 to 20. This morning, it's now around 22. So that's not at all unreasonable. Again, remember, the VIX doesn't really measure fear. The VIX measures how confident people are with what their forecasts about what they think is coming next. When people feel like they're confident that what's going to happen in the markets, the VIX will come down. It's an uncertainty gauge. And again, I would say at this level, the uncertainty has been coming down quite a bit. We saw it hit 30 when this banking crisis blew up just about a week ago. And it's not even, and within less than a week, it's fallen 10 full points to this morning. So this is kind of back to where we were before the whole banking thing showed up. So we're back to where we were, this modest sort of sideways, stuck in a bear market, not going to take out another low probably anytime soon, but also not able to crawl back into a new bull market. I think we're going to be here for a while.
Okay. Hey, Kathy, give you the last thought here. We got about a minute. What's next? Do we go back to watching data, or what did we learn here? What's the priority going forward as far as inputs into what the Fed's decision is going to be?
Huge buy sell-off.
Well, I don't
4
think
seconds, 3 seconds.
The data.
Sorry, guys, I've been on the phone.
Less about jobs now and wages, and more about what's happening with lending.
Yeah, I guess that's because he's basically talking about.
So we're going to focus on financial conditions.
How about not pausing?
What the market's telling you is the
I don't know. In his statement, it sounded like they might pause next meeting, but then.
Okay, great stuff.
The Q&A, it seemed like
Randy Frederick and Kathy Jones
said they wouldn't. So I don't know.
Cap to the trading session. Kathy, Chief Fixed Income Strategist at Charles Schwab. Randy's the Managing Director of Trading and Derivatives.
I guess they're going with more statement.
Stocks ending lower across the board. The Nasdaq held on for as long as it could, but in the final moments of the session here, ended up breaking.
GME just holding up beautifully all day.
Rallying. The 10-year yield.
I don't think I'm gonna have time to do a recap video.
At the lows, as bond futures soared more than 1%.
That's crazy. So 25 basis points and potentially no letting up. I think this probably sold out, but I can't tell. I know you thought I was in the recap. Sorry, no. No, I would just do a live recap. I've done that before. It's kind of weird. I could. BY, let's see. Did make a lower 7,999. That sucks. Made a new low from yesterday. Basically just wicked down there though. The daily looks like it's flattening, but man, there might be some more pain still. Crazy. Yeah. What do you got, Jimmy? I don't know. I think we could get a continuation on it to the upside. So maybe more consolidation, I guess, because it didn't move up today. But I think we could see it move up still more. GME up, yeah, 1.5 after hours. Not a big deal. I think the next catalyst actually for GME would be that 10K. So we'll see when that comes out, if that causes any price action on GME and any other stock that they maybe mentioned in there. BBBY is sad. Sad. But yeah, I guess that'll do it for me, guys. Sorry, I got kind of tied up in the end there. I'm not sure if the SPY's gonna keep rallying now. This looks pretty crazy. That hourly candle's gnarly.
There was 17% sell-off on that company by the time the bell rang, and bonds caught all the bids. The only competitor was gold. Gold was up almost 2%, while the 10-year yield dove back down below 3.5 to 3.4. Don't miss. Cut the cord this afternoon. You need to examine that risk radar. Right now, I've got Caroline Woods and Kevin Green, our senior markets correspondents. We've got some earnings this afternoon. We'll see how the convo goes and what the stocks do. Chewy and KB Homes.
Yeah, I'm not sure.
First,
it seems.
We got to keep discussing here
Look at the highlights here,
developments. I mean, that was a
maybe I
hard
interpreted
fade, Caroline.
a little more bullish than I should have.
Did people panic over there or what?
You know, I didn't see any panicking, but
Probability
I
of
did hear
May
a lot
Fed
of
rate hike fall below
beeping and
50%.
buzzing, and I try not to bother the
Wow.
traders when I hear those sounds because it means they're making
I mean,
money.
he even said he was going to prop up the banks if
think,
necessary.
You know, for me, I was trying to really figure out what it is that happened, and this is the line that stood out to me. I think for now, though, we see the likelihood of credit tightening. We know that can have an effect on the macro economy, so it could be exacerbating.
Anyways, thanks guys. Good day on GME.
Fears.
Nice
Obviously,
consolidation.
recession risk still at
Unfortunately,
play.
burned some premium on options, especially if you're out of the money. That's why in the money options are very nice, safer. I did short one call
that, you know, it just shows that
on
we're
it
not out of the woods yet. The market sort of got what it wanted,
today, and then I rolled those other
I was talking
ones.
with the traders earlier. They were fearing
Yeah, I rolled them up from 18 up to 21.25 for December and received a little credit. So kind of a crazy roll. If GME comes back down, I should be able to roll these back and down. But for now, this is a guaranteed profit play if GME is above this by December.
It's stable, it's resilient.
So I'm happy about that, I guess, at least.
Credit tightening, a creddet crunch.
Yeah.
Doesn't necessarily
and then
bode well
on here, I just opened up one little covered call
we saw bank stocks selling off
on
as well.
these 17 long calls. That one's up 50%. Might close it tomorrow. I don't know.
You know, when we
Might open more tomorrow.
Powell say yes.
But thanks so much, guys. Ace, thank you for, I don't know if you're still here. Thanks for the memberships. Thanks for the donos.
We use to track financial conditions. It's very
donating.
stock
I don't even
mention
see those.
that.
Thank you for your donations, guys. Thank you, Drew. Thank you, Daisy. Thank you, Christopher. Thanks, Dennis. Thanks, Kuro, Ryan, Gene, Jim,
It kind of seems like, Kevin, that was
Jonathan.
The ultimate
what a volatile day,
today,
man.
that he would do a hike.
Yeah, see what tomorrow brings. Sup up, like up, coming down. Happy Money sticks around. Follow us on Twitter at Happy Money YT. Follows our Discord server. Have that pinned in the comments. If you did get a membership today,
so
hit me up on Discord. I'll give you the
put
Happy
market
Money
in a
Crew
rock and a hard
roll.
place at this point in time here, Oliver. And here's the reason why. When he was talking
thanks, guys.
about the
Peace
rate projections or potentially even having rate cuts this year, he had a question about that. He basically said they would not even expect to cut rates at this point in time.